right, good morning. So today is the fifth day, yes, the fifth day of our 6-day marathon traders conference event. And you guys have been great. There's been a lot of changes, a lot of things going on in the background that we've had to sort of compensate for. And today is no different. So a little bit of change in today's schedule. Let me show that to you really quick. That's not today's schedule at all. Well, let me suffice this to say, this afternoon Tyler Wood cannot be here, but in his stead will be another CMT representative, Stanley Dash. And Stanley will be talking about the critical points of CMT. Our web dev team hasn't quite caught up with that yet, so you won't see that on schedule just yet, but it should be on the schedule very soon. Also this afternoon, Bobby Hiller will be talking about something that is not posted. We erroneously posted something that he's presenting, but instead he'll be presenting about our Zenith platform, which is real-time news and data. And other than that, things should be going just as we say on the schedule today, so and also tomorrow. Now, if you haven't gone to our website and registered yet for this event, I highly advise you do so, because then you can be eligible for the door prizes that Jeff will be giving out randomly throughout the event today and tomorrow. To do that, just go to our homepage, metastock.com, and click the banner on the top, and you'll see the schedule for all 6 days, insofar as it's correct, and also the ability to register for this event. Now, we are MetaStock. I don't think I actually have time to show you our video, so a couple things. Do go ahead and like and subscribe, and ring that bell. That way you'll be notified of all of our live events, and we usually have a couple a week. These marathon events like today we'll have about once a quarter, and then about once a month we have a all-day long event, and then just about every week we have 1 or 2 hour-long webinars. And of course, it's always people talking about things that they're interested in selling, but there's a lot of value add to every single webinar. Of course, they'd love it if you'd become a client, but if you didn't, just listening to what they have to say has always got some value, and we really encourage you to listen to all of the presentations. And if you want to become a client, that would be also awesome. Also, as we're going along, please do go ahead and like and go ahead and comment and say hello. If you have questions, ask questions. If you disagree, disagree. If you agree, agree. We just ask that you be, nice. No one likes a grumpy person at 8 in the morning. Okay, it's 9 in the morning. Anyway, you got about 2 minutes and 40 seconds before we get started. I'm going to go ahead and let you listen to some jazzy music here while I check to make sure that Serge Berger, who is our very first presenter, and Jeff Gibby are raring to go on the other end. So we'll be right back. Thank you so much. right, it looks like we're ready to go here in just a few seconds. Once again, go ahead, like and subscribe, and click that bell, and really converse with us today. Go ahead and ask questions and make comments. We really do encourage that sort of behavior among our attendees. Thank you so much, and successful trading.
All right, thank you, Greg. I appreciate that. Oh, my camera is live, and well, no, I usually keep the camera live on purpose. I didn't realize my microphone was live too. So, in any case, it's good to see you. Thanks for coming, everybody. Welcome to day 5 of the Traders Conference. It is good to see you. If you're joining us and I'm just getting my headphones on here. If you're joining us in YouTube, and say hi, hit like and subscribe. Hello, Paul. Hello, Neil. Hello, Eric. It's good to see you. I don't have the YouTube chats up yet, but I'll get those up in just a second here. It's great to see you. We've been having a great conference. I hope you've been enjoying it. I appreciate everybody for coming every day, seeing all that good stuff. I hope you're learning something. I hope it's been valuable for you. That's my first goal, always. Let's go ahead and kick it off with a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Eric, here you go. I'll just give me just a second and I'll put the schedule link in there. I think it is in the join webinar email, but it just links off to the site just because, well, this particular session, our schedule's been a little bit more slippery than usual. And so we've had to kind of update it quite a few times, but I will send you the link in just a second. You can go up to the site and see it, and just give me a second. Okay. But as we get started today, I want to say, do a quick thank you and a shout out to all of our sponsors. There's only 3 of them. Stocks and Commodities Magazine has been a great partner of the MetaStock Online Trader Summits and the Traders Conferences since we basically started it. They've produced 17,000 articles. They've had 1.3 million subscribers. They've been making magazines since 1982. They do an awesome job, and we certainly appreciate kind of all of the help they've done with us over the years. I also want to say thank you to the CMT Association, cmtassociation.org. You can find out more about CMT at cmtassociation.org, or you can go to you can call 646-652-3300. Later today, Stan Dash is going to come in, and he's going to talk a little bit about the CMT Association. If the bottom line, though, is if you have assets under management, if you manage money for a living, if you want to manage money for a living, stuff like that, I see it's actually quite surprising how much a CMT designation can help you with all that. And if you want to find out more, go to cmtassociation.org or stay till the very end today. Stan Dash is going to be talking about that. So the last organization, and it's a big one, is AAII, the American Association of Individual Investors, is a nonprofit. They've been helping millions of traders since 1978. And they do, I'm sure you've heard of the AAII investment survey that they do. They also do a lot of classes and research and analytics. Very, very cool organization. We're very, all of the people that we work with or all of our sponsors have such a great reputation, and they're great organizations. And I'm glad that they help sponsor the event. I actually think it lifts the profile of the whole event when we have people like AAII, CMT, and Task Advertising, so in helping us with it. Of course, we're MetaStock. MetaStock, we can help you scan the markets. We're going to talk a lot about MetaStock, but scanning, we'd always talk about how much we like to do scanning, test trading ideas, forecasting, get real-time alerts, commentary. Prices start at $69 a month for our software. It's been rated #1. You can see right here, 30 years in a row by the readers of Stocks and Commodities magazine. What we're doing today and all week long is if you do a month of MetaStock, we'll give you a second and third month for free. Pricing starts at $69. That brings your per month cost down to like $23. So you should try this out. There's a reason that so many traders have been using MetaStock. And thank you for that too, if you've been using MetaStock for a while. But give it a go. Metastock.com/conf promo, metastock.com/saleschat, 800-882-3040. So without further ado, that's, I think, all of the good mornings. Thanks for coming. Let's go ahead and start with Serge Berger today. I'm going to go ahead and kind of talk a little bit about him. We just got his methodologies put into MetaStock, the VertiClax Pro. He's talked about him, though, a number of times, and it's something that I've wanted to be having the MetaStock shopping cart for a number of years, just because they're so awesome, and I love the way he kind of looks for stuff. And to kind of talk a little bit about his approach without giving it all away, he looks for stocks that are extremely overbought or oversold. He does a really, really good job with it. And so let's go ahead. Serge, I can see you. I think I have to unmute you. Now I can hear you.
Jeff, can you hear me?
I can, yeah. Let me make you the presenter.
Alrighty. Perfect. Let's see here. Alrighty, it's this one here. Alrighty. Can you see the screen?
Yeah, I think so. I just clicked out of it real quick. Yeah, I can see it. Everything looks good. We can see you. I did say this earlier, but you have, out of all of our presenters, the best ceiling. I love your ceiling.
This is a very old building. I think it's like, it's got to be 150 years old.
Well, we can hear you. We can see you. I'll get out of your way. It's your turn.
Awesome. And I'm gonna turn the camera off, mostly just because it distracts me. But for those people that are here, happy Friday. And if you guys can let me know quickly also, just to double check, just put a quick yes in the chat box if you can hear me as well. I'm speaking to the GoToWebinar accreditor. I don't have the YouTube thing. So yeah, okay, perfect. Thank you, folks. I appreciate it. Yeah, like Jeff was saying, this actually is a beautiful. We're very blessed with this office. We've got a few rooms here, whole floor. This is a very old building. It's like I said, it's almost 150 years old. So it's very nice. But I'm going to turn the camera off because again, it just distracts me. So let me quickly do that. Where is the camera? Here we are. Okay, camera off. I'll put it back on later. So, I guess where I'd like to start is by just building a little bit of perspective. And, one way we can do that is by understanding kind of where we are in the cycle. And I'll quickly show you, just seasonally speaking, I drew this red line here around the summer period. Obviously, we're now here in November. But I wanted to show you that we tend to see the seasonal sort of demand in equities into year end. The thing is, though, this year, I would argue there's a lower probability of that happening. I think it's probably not much better than 50-50. We've had a bit of a rally over the past couple of weeks, actually a very sharp rally. But it came off of very oversold conditions. And as I do the rounds with our network, which is institutional investors and hedge funds and individual investors as well, I see a lot of folks, very much still basically not only hoping but also positioned for a year-end move. And so I just want to caution everyone that what happens if this doesn't come to fruition. That could really leave a lot of people kind of on the wrong side of the trade. Again, I think it's about a 50-50 chance this year to get a further year-end move from here. we'll have probably like, a bunch more fits and starts is kind of what I'm thinking. Anyway, what I want to talk about here today, though, is more of the income side of things. And I always like to start this with this. It's a true story with a gentleman named John. His real name is different, but I went with John just because I don't want to reveal his real name. And John came to me about a year and a couple months ago, or something like that, a year and 3 months maybe. He was very proud that over the years he made a lot of money in the markets, but it turns out that he really was just making money because the market went higher. Can anyone relate to that? Like, you do well when the market goes up. Has anyone ever noticed that you tend to make money when the S&P 500 goes up? Like, unless you're actually short, of course. But then what happened last year, and this is a summer of last year, is a summer of 2022, he encountered this. You want to focus at the top pane here, this green line. You can see his account at the beginning of 22 into June of 22 went up almost by $1 million. But then he lost essentially all of that in a matter of about 3 weeks. So what took him 6 months to make, he lost in 3 weeks. And we're seeing a lot more of this kind of stuff happening. And what we are noticing is that a lot of people have not understood that markets are no longer as quote unquote easy as they were for 10 years or so, up until about a year and a half, 2 years ago. And so what we really think is we're in a different market environment, and we're in one that's going to ultimately have lower returns. I'll show you a chart here in a second, but we do expect the S&P to not really return more than low to mid single digits on an annual basis for the next 5 to 10 years. If you look at this 2.4 number here, this is actually Morgan Stanley's research, but I found it and I thought I would show it to you to kind of verify what we're thinking along similar lines. And in fact, that there's plenty of precedents for that happening. If you look at the stretch between the year 2000 to the year 2013, that's roughly 12 to 13 years. We had a secular bear market where the S&P did not actually make new all-time highs until about 12, 13 years later. And what that does to a lot of people is it frustrates them because they don't understand that, that they can't make money, and, the chart breakouts stop working. They have stopped working, by the way, about 2 years ago. People just haven't fully come to terms with that. And I just want to caution everyone that the S&P now, too, for the past 2 years, has actually literally just gone sideways. If you pull up a chart of the S&P 500, you guys will notice that it has done nothing but go sideways. And the reason I'm even mentioning this is because what I said a couple of minutes ago, which is that most investors, and this is more of a US focus, but it does actually correlate to most self-directed traders and investors, they tend to make money when, let's say, the S&P 500 goes up. So I just would like to ask everyone to think about that. Is your strategy based and reliant on an orderly market that just goes up over time? If that's the case, maybe I have something that would be interesting for you to see, which focuses more on giving us more room for error and really kind of more of an income approach, if we can call it that. We're going to use options for this. It's something very unique. It's something that I learned about 16, 17 years ago at this point from a hedge fund that I was watching very closely while I was working at JP Morgan. And, so just so you know, what I'm about to show you is not something that I just kind of pulled out of the air. This is something that I was basically watching one of the most successful hedge funds that I've ever seen do, and while I was working at JP Morgan as an investment banker. So I'll show you what this looks like here. But I think, yes, we might expect more volatility and choppiness going forward, but more than anything, again, just to summarize, we expect lower equity market returns. And so from that perspective, I would encourage everyone to look at what I'm about to show you as not something to reinvent the wheel, but something that is more along the lines of making a crucial adjustment to what you currently might be doing. How many people have noticed that it's become more difficult to make money in the equity market doing directional bets over the past couple of years? Let me see some hands up, right? Just buying chart breakouts. Has that become more difficult over the past couple of years? or are you one of the anomalies that's really just killing it right now? And there could be some that are doing very well, but for the most part, what we're seeing, and it's clear, it's become a lot more difficult. The question, of course, is what if this lasts another 5 to 10 years? And that is entirely possible, which is exactly why I'd like to show you what I'm about to show you. What we're going to show you here today is the individual investors' dependence on reliance and really just complete exposure to equity markets having to go higher. And from that perspective, I'd like to ask you one really important question. I would love everyone to just answer this. It's an important exercise for yourself to do. Type a yes into the chat box if, or type the word income into the chat box if it is one of your goals to generate income from your portfolio, from the market, meaning something like a monthly or quarterly positive sort of return in your portfolio. Type income into the chat box if that's one of your goals. And again, this is an important exercise, not for me, but for you to admit to yourself that if that is one of your goals, to be aware of it. Because what happens is a lot of people that have this goal tend to use strategies that are quite ill fit to actually accomplish that goal, right? So let me again redefine what I mean, or just reiterate what I mean. When I say income, what I mean is some sort of a steadier monthly or quarterly or some sort of, at some sort of more regular interval with lower drawdowns, right? And I see a lot of people typing in the word income into the chat box. So the reason why this is important is because in general, what we're seeing is that people who have that goal tend to use strategies that are extremely ill fit to actually make that goal happen. Does that make sense? And here's why. If you look at the chart that I've been flashing here on the screen for the past couple of minutes, what you'll see is sort of a random distribution on any given year for the S&P 500's monthly return. And you can see some months are up and some are down and some are flat. So given the fact that most strategies out there that people tend to use for income are highly correlated to the S&P 500, you can then make sense of the fact that it becomes very difficult for people to have some sort of consistency if this is what the S&P 500 does. And I hope that resonates with you, because it's, to me, one of the most important things that I think we can come to terms with. So let me show you what we'd like to do. One of the things that we find is that it's the frustration of the lack of linear returns that really gets people to essentially ultimately do very risky things. And so this is not just a picture of a pretty mountain range. The point is most people's returns tend to be a little bit like they make a bunch of money, so they kind of climb up the mountain for a few trades, and then they give it all up again over the course of 1 or 2 trades. And then they keep doing that, and it's very frustrating because they're not making money, but it's also frustrating because they're spending a lot of time or expending a lot of time and not really getting anything from it. So this in turn, as I alluded to before, leads to a loss of confidence in the strategy and ultimately even in themselves. So we don't want to do that because ultimately it just leads to basically gambling. And that's really when the real problems happen. So this is getting us back to John. Remember him from a couple minutes ago? And again, remember what happened to him. This is last year in 2022. This is what happened. He made almost $1 million and then he lost it all in 3 weeks. And I think most of you would probably agree that that's a frustrating thing to do. So what I've been working on with him for the past year and a quarter or so is showing him and implementing the strategy that I'm about to show you. And we're seeing a lot better result. He's much less stressed. His portfolio is no longer plummeting. It's no longer, it's really much more just generating income. It doesn't take a lot of time, but it's also something that's very easy in terms of I don't want to say, because easy is always the wrong term. I need to be careful here from a compliance perspective as well. What I mean by easy is I think it's not something that's difficult to understand conceptually. So let's get to it. So at the very core of the strategy is this phenomenon of steep slopes that go vertical. I think you guys have all seen this before. You have a steep rally and then it continues to go vertical, and at some point it's just finished. This is where the buyers get exhausted, even if just for a few days. Typically for a week or two is where we see this kind of window of opportunity. It can also happen on the downside. You can see something get extremely oversold. So we have a steep drop followed by a vertical collapse. And at some point, it just becomes so oversold that it just simply cannot continue to go lower at the rate at which it has. How many people in here have ever traded options before? Give us a quick type in options if you ever have. And it doesn't matter whether you have or not, by the way. I'm just trying to kind of gauge where we're at. But there's this thing out there for the past, particularly the past 5 to 10 years, where people have been getting extremely aggressive with options trading, particularly very, very short-term stuff. And what I can tell you is that people who use very short-dated options, whether they buy them or they sell them, ultimately tend to blow up. It's really a question of time, a question of when, not if. It can go well for years, and at some point it ends. And it really just has to do, and I'm going to quickly just flash by this slide here, but it has to do with the fact that a short-dated option has basically no forgiveness. So I'm going to show you guys something that's probably more or less the inverse of what a lot of people have been taught here when it comes to income and options. What we're looking to do here together, and we're going to repeat this 4-step process a few times together here so you can get in the reps and you can start using this. But one of the things that we're going to do here right now is we're going to look for these extremely overbought or oversold situations in the market. And again, this is something that I developed while I was working at JP Morgan. So you're going to get something that was developed institutionally. I didn't steal JP Morgan's trade secrets. I was doing this on my own with our managing directors group on the side, but we were kind of working with real markets on this. So I'll show you exactly what these 4 steps are. But again, keep in mind, we're going to look for these steep slopes that have gone vertical, and at some point they just become so extremely overbought or oversold that we have an unbelievable opportunity to generate income. And we're not going to use weekly or 0 DTE options, which in my view are just extremely, extremely risky, and it's a matter of time until bigger problems arise with those. So what we're going to do together is understand what it means extremely overbought and oversold. And notice I'm talking about extremes. I'm not talking about all the stock is up 5%, therefore it's overbought. No, I'm talking about extreme conditions of overbought or of oversold. And so typically what tends to happen is that the asset in question, when it's extremely overbought or oversold, is going to stall in price. And that is one of those things that I think is a little bit foreign to people, because people tend to think more directionally. So oftentimes we tend to see the mean reversion take place. Now, one of the things that I'd like to show you here is just an example. This is an older example, so don't look at this as something that happened yesterday. This is just to get your head around it. We're going to look at the current market as it is today in just a few minutes as well. So keep that in mind. But we're looking at Meta here, and you can see it had, at the time when I took this picture or this chart, you can see it had the regular channel to the upside, meaning it was trading higher within an already pretty steep slope. But then it kept having these vertical outbursts. You can see 3 of them happening here. And every single time when that happened, ultimately the stock ended up mean reverting, but that's actually not even really what we're looking for. What we're looking for is that after the steep move and the vertical move comes, you tend to see consolidation. Now, of course, the question is, how do you find that? Well, we'll get to that in a second, but let me first walk you through this. So this is the same chart that I just showed you a second ago. We're just zooming in a bit closer here on the chart. And we can see we arrived at that point right there. And I would imagine some of you would agree when the stock gets to that point, one could either sell it, take some profits, maybe if one wants to be aggressive, you could buy a put or even maybe short the stock. The trouble is if we make a directional bet here, we only have a 1/3 chance of making money, right? If you buy a put or you short the stock, you're only going to make money one out of 3 ways, meaning if it goes down. Not only that, it has to go down now, it has to go down by a lot. And it has to go down, right? So it's one direction. But what if we could put on a trade if it's structured properly? And this is the important bit here, right? How do we do this properly? That could make us money even if the stock were to go sideways, or even if it were to go against us to a degree. Well, in this case, the stock got very overbought. We got a signal, and I'll show you that on MetaStock here in just a bit. But what happened is the stock had overbought, so we simply made a bet that it's not going to go up here. So as long as it stays below this point, which I think this was about 8% up from where the stock traded, so we could make money whether the stock goes sideways, lower, or even 8% against us. So we simply did a very simple option spread, but there's a couple of really crucial points here with it. So first of all, you might notice that in February, when this was put on, we did not use February options. We didn't even use March options. We actually used April options, right? So that's a really important point. Why did we do that? Because if we use short-dated options and the trade goes against us, we're going to lose more or less like 3 wheels in our car. But by using April options in February, we have the opportunity of maybe only getting a flat tire. I don't know about you, but when you're going 50, 60, 70 miles an hour, I prefer to just get a flat tire rather than lose 3 wheels. Losing the 3 wheels in your portfolio terms means it's kind of like a portfolio blow up or just a big drawdown in terms of the actual individual loss on that specific trade. So in this case, what we did is we sold this call spread and we collected $100 per contract. So if I would have done this with, let's say, 10 options contract, I would have received $1,000 upfront deposit in my broker account. You can see that was reduced by 76 cents. So I ended up making $760 if I would have done this with, let's say, 10 contracts, or $76 per contract. And what ended up happening is because the stock went down, we were able to close this in just a few days. But we don't need the stock to go down. We can have it go sideways or even maybe a little bit against us, and technically you make just as much money over time, which basically means that we have more than a 2 out of 3 ways of making money. Is that resonating? So in this example, instead of shorting the stock, in which case the only way I can make money is if it goes down now and goes down a lot, what I can do is say the opposite. I can say, listen, I would like to be able to make money if it goes down. That's good. But I don't know if the stock's going to go down right now and by a lot. In other words, I want to be able to also make money if it goes sideways. And even if it goes a little bit against me, in this case, almost up to 8%. Right? So now what you have is a much higher probability trade. Now, you might say to yourself, that's boring. The question I have to ask you then is, are you in the business of the markets because you're trying to make money? Or are you looking to just entertain yourself? If you're looking to entertain yourself, then by all means, swinging for the fences is more fun. But for those people that are looking to actually generate income and make money, in my view, at least for what we do, this has a lot higher satisfaction rate in terms of actually being profitable over time. And we know this empirically as well. So that's an important point. The other point about this is just because we're using options that expire, in this case, 2 months out, it doesn't mean we hold the trade for very long. We actually only hold the trade for about 2 weeks on average, which is completely the opposite of what most people do. Most people use extremely short-dated options, right? Like a weekly or a daily option or something like that. We use much longer-dated options, but we only hold the trade for 1 to 2 weeks on average. So here's what this looks like. So this is another example, and we're going to go into the current market here in just a second. But this is what happened in March 2020 when we had the first COVID lockdown. The S&P had dropped about 30% over the course of 3 weeks. And I remember walking into the office that morning and thinking to myself, and then we had our morning call that I don't feel comfortable buying the S&P. That's down 30% in three weeks. Because I didn't want to catch a falling knife. But what we did feel comfortable doing, and we ended up doing, is we said that after a 30% drop in 3 weeks in the S&P, we are comfortable making the bet that we don't think it's going to drop more than another 18% on top of the 30% over the next 2 weeks after that. So what we did is we used the SPY ETF, and in March, we used June options. So it's completely the opposite of what most people do. In March, we used June options. So we sold the 190 put way below the market. We bought a 185 put. We received income for that at $105 per contract or $1,050 with 10 contracts deposited in our broker account. And then if you look closely, you can see on March 24th, which was 8 days later, the S&P, the SPY was actually at the same spot where it was on March 16th, but we somehow made 11.4%. We ask yourself, how the hell is that possible? It's possible because we structured the trade right. And this is the kind of stuff that I think is something that a lot of people that are looking to generate income, or certainly people that would see the risk of maybe the equity market going more sideways than up over the next number of years. Again, the S&P's already just gone sideways for more than 2 years now, so it's already happening. I'd encourage everyone to look at that. Can you guys give me a quick yes if you can kind of see where we're getting at? Is anyone excited about this? So, because I want to show you now how we find these points in time. It's nice to know that these things exist, but let me show you how we find this stuff, and I'm going to use MetaStock here to do all this, to do all this and find the opportunities. So I'm just going to quickly skip past a couple points, but specifically speaking, these credit spreads are really focusing on income. So what I did earlier today is I went into the power console on MetaStock, and I just did a search for optionable stocks that are either extremely oversold or extremely overbought. And I think I only scanned for the oversold ones, by the way. And I'll show you guys in just a few minutes here what these results were. So I will show you in a few minutes what the results were that I just ran just before the open today. In the meantime, though, let me just show you, before we get to that, so again, I just ran this morning. I'll show you this in a minute. In the meantime, though, let me show you some popular stocks that I think a lot of you probably know, and how our Vertical X Pro indicator, which is what we're using for this, that I developed while at JP Morgan, how we're finding extreme overbought and oversold. I should also preface this by saying, when we were looking at this particular formula, it took us about a year, maybe 15 months or so. What we were trying to do at the time at JP Morgan is we were trying to figure out what constitutes extreme overbought and oversold for something called the credit default swap. If you don't know what that is, don't worry about it, but it's basically a bond derivative. And I ended up over time looking at this and seeing how this would work on equities and ETFs and futures markets, and ended up working actually even better, to be honest with you. So let me just show you, for example, on a few equities. So this here, I think, is Airbnb. You can see we have an arrow printing, and then you can see the stock stopped going higher. So just imagine if we had a tool that were to give us the opportunity that tells us over the next couple of weeks, this stock is most likely not going to go higher. It's quite likely to go lower, but it may also just consolidate. What if that's something we knew? So in this case, what we would do is we would sell a call way above the market, and we would buy another call against it a bit higher. We would generate the income and just keep it on for 1 to 2 weeks and then move on with the income, right? Because again, the stock could go lower, which it did in this case. We would make money. It could go sideways. We would make money. We can collect that income, or even if it goes against us to a degree. Here's Nordstrom. You can see this stock got very overbought. Remember, we're not looking just for a little bit overbought. It got extremely overbought. So we would sell a call spread up here. and we'd keep it on for 1 to 2 weeks. In this case, the stock ended up dropping very quickly, so we could close it in literally just a couple of days. Or here's Southern Company. This was just a few days ago, or a couple of weeks ago, I should say. You can see it got extremely oversold. Can you guys all see this? Right, so the stock got very oversold. And what one would have done in this situation using our indicator is to just sell a put spread. So we would sell a put way below the market. We would buy another put against it, just like that S&P 500 example I showed you before. And then just collect that income over the course of the next 1 to 2 weeks. In this case, you can see the stock ended up rallying from $62 all the way up to $70. That's $8. That's more than 10% over the next couple of weeks or so. So very, very powerful. Here's another one. Again, I'm just going through some popular names. And if you guys have some tickers you want to look at, I'll see if we can get to it later. This is Dick's Sporting Goods, DKS. You can see kind of very overbought. And all they would have done is sell a call up here and then buy another call against it, collect the income, keep it on 1 to 2 weeks and move on. In this case, you can see over the next couple of weeks, the stock basically just went sideways to lower. Here's gold. I know a lot of people, is anyone following gold here as well? This is the GLD. We got an extreme overbought signal there. And then just a few weeks ago, we got an extreme oversold signal on the daily chart. And so all we would do is sell a put below the market, buy another put against it, keep it on 1 to 2 weeks, and collect that income and move on, right? Another one here is Foot Locker. This happened in late August. And again, I'm just trying to show you tickers that I think everyone knows, right? This happens on many, many more tickers, by the way. Just want to show you a few. Also, by the way, if anyone here is a day trader, I'm going to show you guys how we use this on an intraday basis as well. We just got a signal in the NASDAQ 100, by the way. And I don't have the live thing here, but if I do, I might be able to show it to you quickly afterwards. But this is on the daily chart, Foot Locker, and you can see got extremely oversold. So simply would sell a put below the market, buy a put, keep it on 1 to 2 weeks, and move on. This stock ended up moving from $16 to 22. That's a huge move percentage-wise, right? And we would just go in there and collect that income. Is that starting to make sense, folks? Can I get a quick yes for those people that are paying attention to this? Yeah. So let me move on and show you just a few more things here in terms of on the daily chart. This is another stock that I came across, got extremely overbought and went down. I do want to show you guys some intraday stuff, just so you can see, and I'll quickly try to show you the live data, the live thing I just got here before on the NASDAQ. Oh, yeah, here it is. I can show it to you guys quickly. Do you guys want to see the live chart right now? You just got overbought like about a half an hour ago. So this is a live chart right here of the NASDAQ 100. Can you guys see that? And you can see it got overbought. And since then, the NASDAQ 100 is basically dropping. So signal right there happening literally right now live as we speak. But let me just show you a couple more things on an intraday basis. So here, for example, this was, what was this? This was just yesterday. I think this was Microsoft, if I'm not totally mistaken. This was just yesterday. And you can see the stock had very oversold. No, it was IBM, I think is what it was, IBM. And it got extremely oversold. This is a 5-minute chart intraday. And then it stopped going lower and actually rallied quite strongly, right? So intraday, of course, you have a much shorter time frame, closer to like 30 to 60 minutes. Okay, so you can see very profitable in that case. This here was PayPal, on a same idea, right? 30 to 60 time frames at the most. Now, I promised you before that I would run the scanner for you, and I ran the scanner. And this morning before the open, we would get more signals now if I ran it now, but I, of course, had to prepare for this. So you can see this is this morning. Today is what is today? The 10th of November. You can see it up here. There you go. So just so you know, this is today. And it showed me that Becton Dickinson is very oversold. So the ticker symbol for that, if you guys want to have a look at it, is BDX. And if I look at the chart, and this is the chart using yesterday's close. I didn't have the live data yet because the market hadn't opened when I took this chart this morning. In fact, let me adjust this a little bit so you guys can actually see the full thing. I had to kind of rush it, but here we go. So what you can see here, it got extremely oversold. So now the idea would be to sell a put spread on this. So the idea would be to sell some puts below the market, buy some puts against it, generate that income, and keep it on for 1 to 2 weeks and move on, right? So this is what's called the Vertical X Pro. Now, it took us about 1.5 years while I was at JP Morgan to figure out what the parameters are for this. So this is not a matter of using like a MACD or something single factor, overly simplistic. There's a whole bunch of stuff that we take into consideration for this. And by the way, on the daily chart, you can see Becton Dickinson actually got overbought as well earlier this year in late summer. And you can see the stock then ended up going from 280 all the way down to 235. And now it's telling us it's oversold. So this is something very, very helpful for us when we're looking at portfolios, but also from an income perspective. So for example, we also run an investment advisory firm. It's called Blue Marlin Advisors. If you're interested, you can go to bluemarlinadvisor.com. And one of the ways we use this indicator is for if someone owns a stock, if one of our clients owns one of these stocks, if it gets extremely overbought, we'll take some profits and buy it again lower. Or if it's extremely oversold, we'll buy more or start legging into a position. Here, for today's purposes, here for the discussion here, we're really focusing more on trades using the indicator, right? From an income perspective. So remember, this is a 1 to 2 week time frame is what the trade will be. This is now a daily chart. So we're now looking for the stock to basically consolidate, maybe go a bit higher or even a bit lower over the course of the next couple of weeks or so and collect that income. So we would sell a put below the market, buy one against it, keep it on for 1 to 2 weeks and move on. This is just a scan I ran a little while ago, just so you guys can see stocks get very oversold, overbought in this case, Shake Shack, and this is what it looks like on MetaStock. Or here's Shopify, same thing, extremely overbought, and then ends up kind of mean reverting. So, and we'll check back on the intraday signal on the NASDAQ futures in just a few minutes for those people that care about that kind of stuff. So what I'm showing you here is a process that for us has really worked for a long period of time. It's something that we developed at JP Morgan, and I'd like to introduce you to what's called the Options Income Secrets. The Options Income Secrets and the Vertical X Pro is designed to use on multiple platforms. Certainly here, of course, we're primarily here to talk about MetaStock, and that's why I want to show you how it works there. What I would like to show you here is what the Options Income Secrets package looks like. What we're going to get with the Options Income Secrets package is not only the indicator for life, but also monthly meetings and everything else we need for this, including a chat room to make this work both on an intraday basis for those people that like the day trade, but from an income perspective using options, credit spreads, the way I showed you. What we're going to get here is the strategy that I showed you today. We're going to get this, what I consider to be a very low stress, high probability cash flow income strategy. The benefit, of course, is that the goal of it being steadier and more regular income into our accounts, meaning that we don't have to second guess trades, and meaning that we know every month that we have a reliable strategy that's repeatable. The repeatability here is the most important thing to really put the odds in our favor. And ultimately, of course, the goal is to put more dollars on a more regular basis into our account without having to swing for the fences and chart chasing. With the course itself that's included as well, you will learn to use options the way we do. The benefit is that we start trading with more confidence. We have a process, and it gets a little bit easier every day until it basically becomes second nature. So I'm going to give you a cheat sheet as well, so you're not alone, because we know that trading can be very lonely. And that process, that repeatable process, is extremely important. So I want you to have all the help you need. But we also want to give everyone an edge, which is really all about the indicator and the scanner. And I showed you here before how this works in MetaStock. If we have a bit of time, we can play with this a bit more with Jeff and I in just a few minutes. But the reason why winning traders do is not only strategy, it's also sometimes there's a tool involved. So we're going to give you full unrestricted lifetime access to the indicator, the scanner, and the whole process here. What I also would like to show you quickly here is when we look at this again, we'll come back to MetaStock in just a minute, but the point is, this is one of those things that it's all about repeatability and process. You look at, for example, how it looks at MetaStock, and you can see how it shows up. We have the exploration button there. It's called the, sorry, something's popping up here. It's called the Power Console. And on the Power Console, we can scan for the Vertical X Pro. This also works on other things as well, like Thinkorswim and so on and so forth, so just so you know. But of course, we're here to talk about MetaStock here today. So that's how that works. To me, honestly, one of the neatest things about it, but what makes the Vertical X Pro so great, is that it really gives me and us access to what I consider to be the highest probability credit spread income trading setups, and also day trading setups for those people that like to day trade. So we're going to give you a platform and a foundation here that whether you're new to trading or whether you're a professional like an investment advisor, and you have the strategy and you have this tool to really focus on monthly, quarterly, more regular income. That's exactly what this does. And that's really what it's very specifically designed for. So in terms of what's included here, let me just give you a little bit of a rundown. First of all, what's included is the course videos. We have lifetime access to the indicator and the chat room and the member webinars we do twice every single month, where we actually give you trades. And we throw in a bunch of other stuff that I'll show you in a minute. Quickly just checking, by the way, the intraday signal is still working. This is on the NASDAQ futures right now. They're just printed before. Just as we got started, it's still overbought, and the NASDAQ 100 is still going lower marginally. So let's talk a little bit about what some people are saying. So Dave, for example, came to us. He wrote that if you follow notes and you actually stick to the rules, you can make good, steady income. That's what Dave wrote to us. And we could show you half an hour worth of testimonials, and that's not really the point. I just wanted to show you what it looks like and how we like to use it. So I just want to quickly mention this. I don't think this is something for people that are in the markets for entertainment. If you are the kind of person that's in the markets for entertainment, you don't really take it serious, you rather just, do something for entertainment, maybe trading isn't even your thing then, but certainly not this strategy. But I do think, people that are focusing on really trying to make something work out of their portfolio, people who are looking and realizing the odds, I think for those people, this is something that really should be a part of their consideration. This is something that we do also at Blue Marlin Advisors for our clients over at the investment advisory business. So this is not just something that's in practice. We've used this now for 16 years since we developed it at JP Morgan, and we're using it for our clients as well. But really the point of the strategy is to turn it into more of an income machine. That's kind of how we look at it, both personally and also for our clients. So here's how it breaks down. There's an Options Income Secrets course included here. It's a bunch of course videos. It's valued at $976, lifetime access. We do twice monthly, every single month, twice live member webinars where we give you an actionable trade every single time. We have about a hit rate of 80% profitable trades in those member webinars alone. That's without our clients even actually using the indicator. That's $997. The Vertical X Pro indicator, again, this is lifetime access. This is not a 1 month, this is not an annual, this is lifetime access. It's valued at $1,997. We have an Iron Condors course as well for those people that like that. The total package value is $3,970. And we're going to knock 90% off right now for the first 50 people, because actually Jeff and I, we have something to celebrate. We actually have this indicator now finally also on the website. So for those people that find this interesting, what you want to do is you want to go to the steadytrader.com/meta. You can also use PayPal if you want. PayPal breaks this down into like baby payments on a monthly basis. Again, that's what PayPal does, not us. And it's $397, and that's it. It's just a one-time payment, and there's no recurring fee. That's what I'm trying to say. Sorry. I want to quickly talk about the chat room. The chat room is on Slack. So what we have is we have a chat room where we talk about, for example, this overbought signal that I just showed you. I literally put it in the chat room just as we got started for members to be aware of. It's open all the time, and it's wonderful of people that are using this indicator and this kind of a strategy. So if that's something you'd like to do, it's accessible through all the different platforms. If you have a phone or a tablet or whatever. So we do monthly webinars, as I said. So the monthly member webinar takes place twice a month. It's live, and what we do in the member webinars is not only do we teach you how to use the indicator, we scan the market live. We give you typically a live actionable trade. Again, we have about an 80% hit rate on profitable trades just in those member webinars alone. That's lifetime access as well to those member webinars. So this is not just something that we do every once in a while, every single month live. The next one's November 21st. I believe that's the week after next. It's going to take place at 10 a.m. Eastern, 7 a.m. Pacific, and you'll be aware of that. You'll get an email sent to you. You'll get an onboarding phone call as well. Every single person here gets an onboarding phone call, a personal onboarding phone call by one of our representatives. So just so you know. So that's all included for life. This is not an annual deal. This is not a monthly deal. This is $397, 90% off right now for lifetime access. It is limited to the first 50 people, because we want to be able to give you a quality onboarding process. So just be aware that if those 50 slots are taken, then we're going to have to close it down. As I promised you, quickly checking in again on this. So still get that overbought signal on the NASDAQ futures. It's still kind of dropping. So let's see where this is. Keep this in mind as we go through the rest of the Friday here. Now, Jeff, I don't know if you're here, but I did want to just quickly celebrate here, and I'll put my camera back on just to be.
I wouldn't leave, just so you know. I'm here.
I know you're here. No, I just wanted to quickly see if you wanted to mention that we actually were able to now put this also on the this indicator now, like officially on the platform in terms of the store.
Yeah.
I don't know if you want to mention that.
Definitely, I want to show how to. We've got a lot of scannings about or a lot of scannings about questions, a lot of questions about scanning. But I promised to ask for Dennis and Keith, does this work on Interactive Broker or TradeStation?
TradeStation, yes, although I would not use it for day trading there. It's easier to use it in other platforms for day trading, just to be fully transparent. By the way, when you use this, you even get access to our own platform that we created. So you want to use this maybe in conjunction with MetaStock. I didn't even show you this, but like you can literally in the members area, what you'll do is you'll access the indicator, like it says indicators, and then you click on one button that opens up this thing. Okay, and then you can literally even create your own portfolio. You can add your own portfolio in here. You can create, and you're going to get email trade alerts sent to you when one of these stocks is overbought or oversold. You can rank it in different, if you want to just go through ETFs, and it's literally designed for this. So you get lifetime access to that as well. I should have mentioned that before. This is the way I use it. To be honest with you, for day trading, I use stuff like MetaStock, but it's wonderful, and it just gives us alerts on all the different stocks and ETFs and whatever else we have in here that's overbought and oversold. Like for example, sorry, quickly let me make sure I have the right screen resolution here. Here. So like for example, Estee Lauder, for example, you can see 6 days ago got oversold and the stock has now been bouncing. So it's the opportunities are pretty much endless. So just thought I would show you that.
All right, I'm going to show how it works in MetaStock too. Yeah, there you go. And yeah, you can get that at steadytrader.com/meta. If you have more questions, here, let me go ahead and just show you the scanning real quick. If you have more questions, or if you want to talk to us, or if you want to see what this looks like on a chart, all of that kind of stuff. We do have staff that's available here. metastock.com/saleschat. You can also go to you can also call us. I'm going to drink some coffee between the next presenter and the next time I get to talk. But you can also give us a call, 800-882-3040. So I do really like the box that they put together here. I thought
that is some good artwork, man.
Yeah, they do. The guy that does this, he does just such a good job with all of his design elements. That's not all he does. He gets a little sensitive when I say he just does design. That's definitely, he does a lot, but I really like his design. Anyway, Serge, let me show the people here how the scanning works real quick. So I just actually ran a scan. Actually, my pictures are in my way of myself. But the thing I like about MetaStock is just how easy it is to scan. And Kelly and I and everybody's been talking about how much we like scanning and the data availability and all that kind of stuff. So if I wanted to run an exploration, and we'll just do it real quickly here, I'm going to go ahead and open up our Power Console. I'm going to go to what we call our Explore, which is a scan tab. I'm going to go ahead and click on that. I just noticed, this is brand new, and I just noticed that if you want to find the Vertical X Pro setups and triggers right now, it's called Vertical. So we're going to get that fixed as soon as possible. But if you're having troubles finding it, just look for Vertical. It's a little bit misspelled, and I just noticed that. So we'll definitely get that fixed. And I was like, where is it? I know I just installed this thing. So, but anyway, for this, I ran the setups and the triggers. Okay, so the setups are going to find stocks that are getting extremely overbought or oversold, and the triggers are going to find stocks that also are kind of ready to kind of execute on. Okay, and what I'm going to do here, and again, the thing I like about MetaStock is it doesn't matter what markets you're interested in. It doesn't matter where you're coming to us from. If you're in India, we have tons of Indian customers, and you can scan against it like the National Stock Exchange, or if you're in Australia, or if you're in London. If you're in Australia, you're probably not watching right now, but if you're Australia, London, anything like that, you can just select the markets that you want. What I've done is actually just selected Dow, S&P, and NASDAQ. I'll run the scan. I'm just going to, I did go ahead and run the scan. It's going to go through, and it's going to, out of those stocks, it's going to go through all 526 of them now. It's going to reject anything that doesn't have a fit, and it's going to basically give us a list. Now, I ran this just a few minutes ago. There wasn't any triggers today, but there was a setup, and you can see it's going pretty fast, but in the interest of just not boring you, I'm going to go ahead and show you one of the ones that came up. So if we kind of come here.
Yeah, BDX did come up before. I scanned it just before the market opened, just so you know.
Is it part of the S&P 500 or the Dow? Because I only did 600 stocks.
I just ran optionable stocks.
Oh, okay, yeah. Which is a list you can absolutely do, yeah. I usually just, when I'm doing demos, I just do a very small list so it runs really quick.
Sure.
But since this set up, here you have a trigger right here. When it's a trigger, in MetaStock, it's just going to show up as a circle under the chart. If it actually triggers in, if we go back a little bit in time, you'll see that we had a couple of setups here. Then we had a trigger, and then it went up. Okay, so the arrow isn't going to show up until you get a trigger, but you can kind of see how that works over time. In addition to that, we've got the commentary. So if you come in here, it's going to tell you why it's setting up. I'll show that real quick. And while I do, Dinesh wants to know how long the coaching sessions are and when are they?
Yeah. Okay, so let me be very clear about this. There's a different, so the coaching sessions, they're twice monthly member webinars, right? So all the members join, we'll have, it's just, honestly, I mean, the turnout is crazy. How many people always show up to this. And they're typically run about 40 to 45 minutes. And we always start from the beginning. So, because there's new people joining every month, but there's people that have been in there for 7 years. You know, they keep coming back every single time because I go through I show them a new trade every single time, live actionable one. And if it's not actionable that day, I will send them a trade alert. It's not a trade alert service, but I will go above and beyond when there is a trade alert that is not actionable that day. I also show people how to use it for day trading, and hopefully we'll find a live trade. And of course, for the options credit spreads that I showed here today.
Right.
So they're twice a month, and they last about 40, 45 minutes. I'm usually wiped after them because there's so much great interaction. So I'm looking forward to
I love scan sessions like that. I love kind of being in them, and yeah, they're great. So let's see. He says, hey, thank you. Dinesh says, we already asked that. Dennis says, I just brought the product. Thank you. Thank you, Dennis.
Welcome aboard.
Yeah.
We'll see you in a couple of weeks.
Because he bought the program. No, that's the wrong way around. Thank you, Dennis. Appreciate you. All right, very cool. So the whole value of this is $39.70, $397 here at the event today. That'll include the Options Income Secret Trading Course, the Vertical X Pro Indicator, the Iron Condors Made Simple. You can call us at 800-882-3040. You can visit us online at metastock.com/saleschat. You can also go to thesteadytrader.com/meta or metastock.com/conf-promo. We give you a lot of options here. So help yourself. Thank you very much for coming. And thank you for signing up, Dennis. Appreciate that. Serge, thank you.
Thank you. This is fun on a Friday. You do a good job with these events. I think they're so very helpful, because there's so much misconception out there in terms of how the markets work, and you draw a simple line and that's it, and that's just not it. You need to be more granular, and I think these sessions you put on really do offer a lot of insight into how things can work. So
they're only great because of the speakers and the audience. I just keep the show on the road. So thanks.
Yeah, but someone has to put on the show. No, I mean, and of course the audience, has to be willing to learn, and I think so I commend everyone that's showing up to these things. It's really worth it.
Awesome. Thank you very much, Serge. We'll see you again soon, and I'll talk to you again next week.
You got it. Have a great weekend, guys. Thanks so much.
Cool. Go ahead and do this. And let's say thank you to one of our sponsors. CMT Association sponsors. Stan Dash is going to come a little bit later today and talk about why you should look at maybe joining the CMT Association. If you're looking to trade professionally, if you have assets under management, if you want to have more assets under management, they're going to present Tyler always presents some pretty compelling reasons why having a CMT designation behind your name could be very helpful in all of those approaches. So come back for that. If you're not going to be here this afternoon, go to cmtassociation.org, and it's a great, well-respected, well-reputed organization. All right. And then, of course, we're MetaStock. The offer we're doing today is you can do all the scanning, the testing, the forecasting, get your real-time alerts, the commentary, all that kind of good stuff. If you buy a month, what we're going to do is give you a second and third month for free. We're going to have somebody sit down with you for up to a couple hours and talk you through the different tools of the program and how to use them to find better trades. We're going to give you unlimited access to that team. If you have questions, you can call them. They do such a good job, and we certainly appreciate them. I think we're up to like 4 or 5 people that are not me, but just presenters and stuff like that, talking about how much they like our support team and how good of a job they do. So anyway, the thing I'll say, because I don't want to go too long right now, is it's been rated #1 for 30 years straight. If you've been using MetaStock for a while, thank you. We appreciate that. We want to bring you on board with what we feel unbiasedly is the best platform available anywhere. Okay, so we are biased, but give it a go. There's a reason it's been rated so highly for 30 years. metastock.com/conf-promo, 800-882-3040, metastock.com/saleschat. Reach out and find out, I guess. All right, cool. Our next presenter, our next presenter is Fausto Pugliese. Fausto, how you doing? Let's see. Well, your audio's not on right now, but let me see. Can't tell you if I've muted you or unmuted me. Let me see here. Let me unmute you. And then I can also send a unmute request. See if that works. Did you get a pop-up? We've done this before, recently. Yay!
There we go.
Cool. Fausto, I love telling stories about you. It's been a long time.
Blame him.
Fausto is such a generous person that one time he got in trouble at the Traders Expo for giving away cheese.
and prosciutto.
Prosciutto. I love having Fausto on. He's going to talk a lot about real-time analytics, looking at level 3, level 4 data, understanding where big institutions are lining up. He's by far the expert of that. And so let's go ahead and get a screen share over to you, Fausto.
Sure, no problem.
And welcome. Thanks for coming in.
I love coming in. You guys are the best. Looks like you had a great audience showing up again.
Yeah. Do you have YouTube open?
What's that?
I was going to say, we also have quite a few people on YouTube. If we get some questions, I'll make sure you get them.
Sure. All right, there we go.
And I do see your screen. I'm really good at getting out of the way. So I'm gonna let you go now. Go.
Well, that's fine. That's good. That's good. All right. So everybody see everything okay? Good to see everybody here. Wow, I got a great audience. Well, thanks everybody for being here. A couple things. Let me get some more organized here. Fix everything here. Here we go. All right. So yeah, listen, I love being on MetaStock. I've been here. I know these guys. It's been almost like over 20 years now. And, listen, if you've been around as long as we've been around, you obviously must be doing something right. And that's the most important thing. And what I'm going to talk about how to master real-time order books, analyzing for the stock trading market. I'm going to talk about some stocks that are moving. I'm actually going to just jump right into it and show you some things that are moving. I know everybody's been here listening to the presenters. You've been here all week, but I'm going to bring a stock over here really quick. Did you guys see right now what's happening with PLTR? So PLTR, just blow up the screen right here. You can see the stock started this morning right around $18.20. It's already at $19.40. Now you probably want to know, why is it going up? Who's driving it up? Well, I'm going to talk about something. I'm going to bring this over really quick. And I'm going to talk about level 3 and level 4, which is what I'm very well known for. How do I know this? Because I was one of the original day traders, original market makers who started the whole industry. So hold on, let me just fix this a little bit better for you guys can see a little bit better. There we go. There we go. All right. So I'm going to show you exactly. I don't know if you guys have ever seen me before, done a presentation. I was just on NASDAQ on Wednesday. I'm a regular guest. I'm one of their, I speak very highly of how to actually trade these markets, how to use market makers tools and stuff like that. And you could use it on the MetaStock platform too. And it just helps you just be more alert, how to read the future. And that's what we're going to talk about, because you're looking at these numbers. I know a lot of people look at them like, I don't know what's going on. I don't know what this means. It's moving too fast. I get it. We've all been there, but I'm going to simplify it, work a little slow with it. And then we'll go to these markets. And then the best part of what we're going to do is I'm going to ask anyone who has a stock, I want to check it out. And hey, don't you want to know if somebody's trading and getting out of a big block of stock that you're in right now? Because who are you? You're just the ants on the floor. You just got to follow what the orders are, because it's not what you think, it's what they think. And that's what you're going to learn being here today. So let me just get this out of the way and let's get into the whole presentation really quick. Just a quick little disclaimer, just let you know I'm not making any guarantees or promises. This is strictly educational only. So just please be very alert before you go out there and make your first trade, because trading is a high risk. Now, just to let also you know a little bit about myself. I know that Jeff, we've known each other for over, it's got to be 20 years now. But I was actually one of the original day traders that started back in the early 90s. And I founded Cyber University back in 95. And let me tell you, I love it ever since. I love teaching people how to trade. I hate people being out there being very negative about trading, because a lot of people fail is because a lot of them are not as smart as you guys being here. They want to go out there, want to try it and everything else. So what I'm looking to do today is I want to invite all of you to come and join my professional trading room just to see what other people are doing, people we train. And it's not about the winners that we need to focus on. It's the losers you need to focus on. We don't teach people how to make money. We teach them how to stop losing it. Once you figure that, the winners take care of themselves. So I'm going to obviously invite all of you guys to come in, in the next few moments and show you what it's like. You're all invited, because we want to show you how we practice what we preach. And not only including that, we're going to give you a couple of workshops and stuff like that. You can talk to our staff, all that stuff. Listen, Jeff has mentioned to you, I've competed against every school in the industry. And, you know, I won every one of them because a lot of them are not really day traders, you know. But the thing is this, it's not about winning championships that make you good. It's about, can you teach me how to do it? And that's what it's all about. So, like I said, I've been around and I've done so many events all over the world. And I just love being here and love talking to people like you because I want to change your life when it comes to trading. Now, here's just a couple of quick little images of some people we've trained, and hopefully I can make some of these people, because you look at these people here, they're just like you. They're ordinary people. They're grandmas, they're grandpas, they're border control people, they're engineers, they're teachers, they're first responders. You know, they're just everyday people that just looking to, you know, make a day's living. So what we're going to cover, what we're going to show you is basically how to identify breakouts. I'm going to talk about how to use NASDAQ, you know, book viewer, which is only one of the several ECNs out there, which is basically 50% of the volume out there. I'm going to talk you how to read order flow and predict stocks movement, and also how to use price action. So if anyone's interested right now, if you want to cut the line and join in, you can take your phone, you can scan that QR code right now, get 1 week access, and or you could just wait until the end. No big deal. All right. So let's get right deep into it. My question to everybody is this: how long have you been trading or investing for? So I want to make this fun. I want to make it interactive. So I see everyone's, well, Barb, I see that you already put in a couple of stocks. We're going to get to those stocks more towards the end. But before I do that, I want to get to know a little about all of you. How long have you guys been trading for? It's been a couple of months, a couple of years. And I'm talking about seriously. I'm not talking about like, oh, I've been doing it for 20 years, because no one's been trading, you know, consistently for 20 years. All right. So as everyone's filling that out in the questions, just to let you know a little bit about me, I've been doing this for 30 years. I love it. I have not stopped doing it. And it's been one of the greatest jobs, I thought, because you have the freedom to do whatever you want. And that's what's great about it. So if you're doing it for a year, 5 years, 2 years, I see people putting in the chat room. Now, this is how I want to answer this question for all of you. This is why I've been doing it for so long. If something's working, that's why you got a long-term job, right? If it doesn't work, you're going to find a new job. So just to let everybody know, if you've been doing a specific type of trading for more than 3 months or even 6 months, and it's not working for you, you got two issues. Number one, you probably found the wrong person to teach you how to do it. Or two, it's just not your style of trading. And that's why MetaStock has all those great presenters here. Some of us talking about, like I just saw a Serge talking about options. You know, he's very well known. Love Serge, does a great job. You know what he does. Everyone's different. You might not like the way my style, you might not like his style, but you got to try a little bit of everyone's stuff and find out what works best for you. So I just want to clarify that, because, you know, you don't want to get overwhelmed and find out like, oh, this sounds great and I want to do it, but it might not be your style, okay? That's why we're all different. So basically I want to talk about some stocks that we traded this week, and I want to show you the good, the bad, the ugly, and the very successful ones. What made these stocks move, what traded. So there were a couple of big things that moved. Obviously, it was a really big week on earnings. And, believe it or not, as much as you think the market came down, we've been having a nice little rally in the market. I don't know if you guys have been noticing it, but 80% of the stock companies out there beat earnings. And the bad thing about it, if you missed earnings, you got crushed, okay? Which is good for us, because we go long, we go short. That's what trading is all about. And how do we know that? It's because we follow the orders. And I'm just going to give you a couple of stocks. Shopify, great day trade. Hold on, let me get my little pointers out here if I have my tools. There we are. So let me get my little pointers out here so you can see. So you can see like Shopify right here in the pre-market had a great move. Then when the market opened up, great run up there on that stock right there. Let me change it right here, move it up again. Ooh, where's my mouse? There we go. All right, AMD. Earnings came out, stock had a big pop up. You could see it. Stock goes from 105 to 109, goes to 113. Great little day trade. Roku, same thing. Stock started after hours, had a big gap up, opened up. Once the market opened up in pre-market, stock goes from 70 up to 84. And by the way, This is like within days, and you can see how the consistency happens, right? The thing is this: what is making these things go higher? You know, and I know that we just love to know what everyone else is doing. Now, I live here in the heart of Wall Street. Okay, in a town where I live, okay, I have some of the biggest traders in the world that live here. I live in New York. In New York is the financial capital of the world. What I've learned, from day one until today, you are never, ever going to beat these people, okay? I'm sorry to tell you that. But you know what? There's hope. The hope is you could join them because these people are moving hundreds, if not millions of shares a day. They don't have time to deal with you, but you can get the crumbs on the floor. And the crumbs is like having the right tools, like you're using with MetaStock and like what you're using on, and using that tool, which what the exchanges are doing. So let's go see what's going on right now. All right. Well, actually, I'm going to say that to the end. Right? I don't want to jump into things yet. So the question you have to ask yourself is, what is your strategy to buy? And I'm just curious if everybody could just answer this question. Is it charting? Is it indicators? Or is it news? Or is it all the above? Just out of curiosity. Just let me know. What makes you excited about getting into a stock? Okay. And that's really what is going to help us to realize what we're doing right and what we're doing wrong. So as everybody's filling that out, just give me a quick question. Let me tell you why majority of traders fail. Because trading is a very big failure rate. You know what? It's actually a 90% failure rate. And here you are standing here and saying, why would I want to be involved in a business where there's a 90% failure rate? You know why it's so high? Because those 90%, 80% of those people are not getting educated. They're not smart like you being here and listening in. Do you know how many traders trade every day? I think it's over 20 million. Now, that would be great. Jeff will love to have 20 million people here, but that's not going to happen. Some people are ignorant. Some people are like, well, let me try it. Let me do it on my own. We can't help those, but we're here to help you. And that's why MetaStock has some of the best gurus in the industry to kind of teach you all the different strategies. So let's try to not be in the failure rate and learn how to be in the success rate. Now, how do we do that? We're going to use certain tools here. And these are the tools that I use. So hopefully everybody has a little pen and paper written down because this is where you just want to start taking some quick notes. Now, on the MetaStock platform, you have some tools that you're going to use. You have scanners, you have charts, but I'm going to talk about those because a lot of you want to know, how did I know PLTR was going up? Where did that come from? Why is that one going up and not the other ones? Well, first of all, I don't have a crystal ball. Okay, you have a crystal ball at in your own hands using the MetaStock platform. It's basically the big percentage gainers and losers. Now, I don't know if anyone here follows me on Instagram or on YouTube or on Twitter, but we post our, we're broadcasting live every single morning and every afternoon, and we post all our watch lists. All we're doing is we're going through this watch list that you got on the MetaStock platform, and we're picking the big percentage gainers and losers. Now, you're probably saying, well, which one, Fausto? How do you know which one? Well, listen, there's something we teach that's called the 3 T's. It's called tradable, trend, and trap. The first T is you got to know, is the stock have good volume, good spread, good volatility? I'm not here now. I don't have time to teach that, but if you register to come my trading room, I will give you a little layout how to do that. Okay, so that's basically one of the big outcomes. You got to learn how to play the game, all right? And you got to know exactly what is going to give you the least amount of risk with the high amount of reward. Now, I could almost guarantee you this. When you come into my trading room and you see some of the stocks we're trading, I would say about 80% of you are trading stocks that you should have no business being in. And the reason why I'm saying that is they're probably too fast, too volatile, too expensive. And there's a lot of factors that come into play. But when you look at a stock like, I don't know, let me bring up a stock like that moved today. Did anyone see the stock Blink, BLNK? I don't know if you guys saw this stock, but let me show you BLNK. BLNK started this morning at $2.70. Woo, that's too cheap for me. Do you think we care? Okay, because if BLNK went from 270 in less than an hour, ran to 340, if you do the math on that trade, do the math, you're talking literally almost 50 cents. Now, does 50 cents sound like a lot? I don't know. If you bought 1,000 shares at a $2,700 investment, you make 50 cents, it's $500. That's about $100,000 your salary. Anyone happy with that? Making that in an hour? Now you're probably asking, well, where did you find it? Well, if you look right here, it's the third biggest percentage gainer on the market, okay? And you have that on your MetaStock platform. Now, the question you're probably going to ask, which is the next thing, why is it going up? Well, we're going to talk about that. Did you see the orders out there? Do you see people bidding it up? Do you see the 40,000 share buyer? Did you see the 13,000 share buyer? Okay. Now you probably want to know when it's going to start going down. Well, did you look at the sellers out there? The 25,000 share seller, this another 25,000, another 20. I mean, we're going to talk about that. But the thing is, finding them is easy. You know what the hard part is? Knowing, okay, that's the one to pick, and that's what we teach our traders. So, but the way you figure that out is you just got to know where the buyers and sellers are. You know, just keeping it black and white. Apparently, we do it green and red right there. So let's talk a little about the tools that we use. So let's talk about level 3. Now, having the MetaStock platform, you got a lot of bells and whistles out there, and depending on what kind of trader you are, they have all the tools that you need on that platform. Now, one of the things that it's very hard to implement in a platform is, getting these level 3s and level 4s. And, and getting level 3 is very cheap. I mean, it literally, you know what you pay for MetaStock. This costs $15 a month. This is directly through NASDAQ. You could only get it through NASDAQ, okay? So that's one of the reasons why it's kind of difficult to get it through other platforms. But for $15, let me tell you what you're going to get, all right? But before I do that, let me explain to you what we're going to look at, all right? Because I think that's one of the issues we got to be focused on first. Look at my pens. So, I don't like that color brown. I need red. Okay. So these are your buyers. These are your sellers, okay? Now, with the buyers and sellers, these are all the people who want to buy the stock at every single price from high to low. And these are every single person that's looking to sell the stock, for the cheapest to the highest. So you're seeing everybody around the entire world that are trying to negotiate how to buy, want to buy the stock Peloton that we're looking at. So any stock you want to look at, I know, Barb, you brought up Tesla. I know that, Michael, you brought up Y. I mean, any stock. We can look up any stock and we could see 50%, because the other 50% is controlled by like maybe your, other ECNs out there. But 50% on one exchange is the most out of all exchanges. Is a lot. Now, I don't know about you, but do you know where 50% of the buyers and sellers are? I almost doubt it. But we're gonna change that as of today. So let me clear this out, and let me change my slide, and let me show you how we utilize this data. So everybody out there is always looking for supports. Okay. Well, unfortunately, supports don't exist unless you have the buyers out there to make that support. So we're looking at a stock right here, PLTR, and you can see how the stock came right back down. And it came to a price right around, what was that, $14.50? Hit $14.50, went back up to $14.7, came back down to $14.50, and went all the way back to $14.80. Now, you're wondering, why did it pick $14.50? Why did it stop at $14.70? Why did it go to $13? Maybe Mr. MACD told you it was going to go to $13, but it didn't. Maybe Mr. Fibonacci said it was going to bounce at, $14.80, but it didn't. What happened here is this. When you look over here for supports, you're looking for buyers. And you'll notice here, when you look at the book viewer, when you look at the buy column, you'll notice that you have a buyer right around there on the buy side at 1445. Now, there are buyers at every single price level. You got them at 1470, you got 1460, you got 1450. All the buyers are at 1445. Okay? Well, guess what? What happened when it got to that 56,000 share buyer? It went up. By knowing and having a game plan and not being prepared to pay 1475, and you were just prepared and say, you know what, I'm going to be patient. I'm not going to rush, okay? Because that's where the biggest buyer is. Well, guess what? That's where the smart money is. And that's what makes you smarter than the other 90% of the people that fail in today's markets. Now, let me continue to show you an example on a resistance. Now, remember, everybody's looking for resistance levels. Why looking for resistance? Because you want to take a profit. Well, you can't have a resistance unless those sellers are out there. And when you look over here, we're looking at another stock, Pins, which is Pinterest. Stock is going up, and it started right around here around 27.70. And it decides after around 10:15 in the morning, after making a beautiful run for almost about $3, decides to stop at 30. Now, you're probably wondering, oh, yeah, no, 30 is like, is a whole number. 30 is, part of some type of whatever. Some people have all these weird things, has nothing to do with what you think 30 means, other than that you have a 91,000 share seller has been sitting out there. Okay. So you could sit there and you could look at this, you could analyze the stock whatever and as much as you want. But unless someone's going to execute or that guy cancels, it's not going past 30. Now, don't take my word for it. When you come into the trading room, or I'm going to show you in the next few moments, we're going to see that. Now, let me just ask everyone a question. Did I lose anybody yet? Because we got close to almost 200 people in here. I'm just curious. Do we lose anybody? Anybody following along? Just give me a yes or no. Just want to make sure everybody's following along. Because it's going to even get more interesting. All right, perfect. Let's go over a couple of examples and show you some situations that happened here. Okay, so let's look at a firm. Now, a firm's going down. You ever own a stock and you're like, oh my God, how much money am I losing? Am I going to get out of this position? Oh my, I'm losing $1. You ever buy a stock and as soon as you buy it, the damn thing goes down. You're like, what the hell just happened? Now you freak out and you're like, do I sell it here? Do I hold on to it? Oh, Bill from XYZ company said he told me to buy it on my newsletter and maybe I bought it too late. What do I do? It comes down to one question, one answer. Where are the buyers? Okay, where are the buyers? Good, Tim. Thank you very much. Reg, Dennis, Barb, Raymond. Good. I'm glad you guys are paying attention. All right. Where are the buyers? That really comes down to it. Well, a chart's not going to tell me that. So what I have to do, I got to go back and I got to see what's going on in the exchange. So when I go to the exchange, I'm going to look at the buy column and I'm going to look where all the big buyers are. And guess what? Right here around 2196, I got a 24,000 share buyer out there. That's about $500,000 worth of stock. I don't know about you traders out there, but I don't put, I know most of you probably guarantee you guys don't put 400,000 in an idea, right? But someone did, and he's out there. And the only way, and that's, listen, and let me remind you all, this is not Fausto or MetaStock's platform. This is a seat on the exchange. You have a seat on the exchange. You're seeing the orders out there, okay? So what do you think is going to happen when we get to that big 24,000 share buyer? I don't know. Maybe it'll go up. Well, that's what happened. And not only did it happen, it didn't happen immediately. It basically was hovering there for about 20 minutes. The guy was not leaving. The trader, those orders were not getting executed. And if you were just patient and you waited and you didn't panic, you could have converted that winner that turned into a loser back into a winner. And and I know we've all been there. We've done that. Mistakes that you've made. You jumped into it. You freak out. You're like, do you get out? Listen, trading, that's part of the business when it comes to trading. You got to know how to keep you cool. You got to just know how to read the market, and you just got to trust what's going out there on the street. because I'm on Wall Street, you're on Main Street. And if you want to get on Wall Street, as much as you might despise those people, which I do too, because I know it. Everyone always tells me, oh, you deal with a bunch of crooks and thieves. And listen, I just got a phone call today. You want to hear about a crook? I'll tell you a crook. I'm actually in the process of getting a new car. Okay. I was promised that they were going to buy my car for X amount of money to get my new car. Apparently, my car took 5 months to build. And then they were trying to BS me and try to tell me, your car's not worth what we told you before. I'm like, I don't care what you told me. You want a bad review? You guarantee me you're going to pay me that money for that car, and no matter how long it's going to take until that car got delivered. So don't be BSing me, okay? Because you're doing it to the wrong person. Now, how I know that? Because I'm a trader. So, and guess what? They lowballed me after I spoke to them. Boom. Sorry, Mr. Pugliese, you're right. So my point that I'm trying to get to is that there are crooks in every business. You just got to know how to play the game. All right? Because if I didn't know how to play the game, I would be out several $1,000s now on my car. And some of you here will be several $1,000s maybe lose on a stock. But if you just know how to play and you surround yourself with the right people that say, listen, don't worry about it, don't panic, just follow and see what this guy's doing. He's the real deal. NASDAQ will not let anybody put an order out there that's fake, because I know that's the next people thing ask me. And they say, how do I know that's a real order? You want to know how it's a real order? When you come to my trading room, we'll use your money. We'll dish out $200,000, whatever that is, $500,000, and we'll execute it. We'll see how fake it is. I don't think anybody wants to take that bet, okay? So let's look at another stock, DraftKings, another stock that came out with earnings this week. So why is DraftKings going up? Must be buyers out there, right? Simple as that. So because traders are buying it, we got to know, okay, well, if they're buying it, things don't go up in a straight line. There's obviously, it's going to hit a resistance level eventually. How do we know that? Let's go check out and see what's going on the floor. Once again, remember, you have a seat on the exchange. By the way, let me just, I don't know how long, I know some of you, John here said he's been trading for 20 years. I don't know if you guys know this, but do you know how much money it costs to have a seat on the New York Stock Exchange 20 years ago? Okay. Just like everybody says, where are the best traders? So they're like, oh, they're on the floor of the exchange. All right. Okay, great. Do you know that you actually have a seat on the exchange today? You couldn't do it 20 years ago because it costs about a couple of $1 million. But now you can. Why would you not want to have a seat on the exchange? Knowing because everything's electronic. That's basically what NASDAQ was done. So I'm just not trying to take a step back. I just want to kind of remind everyone the technology that you have today. Listen, a lot of you are here because you want to do this, as supplemental income, or you want to do it as a career, whatever it is. That's why you're mainly here. You took the time to be here all day to listen to all those gurus. To understand what's happening, you gotta, these are the things that they use. So let's get back to DraftKings. So DraftKings going up, and our goal is, where is the sellers? Now, could everyone tell me, do you see where the sellers are? Where is the biggest seller of the stock? Can anybody tell me? I basically just kind of went to a quick little breakdown with you. Okay, good. Anyone else? Where's the sellers? Where's the biggest seller on the stock on DraftKings? By the way, if you don't know the answer, don't be embarrassed. Just give me a question mark. I'd rather you be honest with yourself, because if you don't know this answer, that means you don't know how to trade. And if you don't know how to trade, you should not be trading. You might not like to hear that, but listen, trading is not for everybody, okay? But I'm just trying to show you things that are in black and white. Tim, you're correct. David, you're correct. Dennis, you're correct. Raymond, you're correct. Tom, I didn't hear from you. Walter, I didn't hear from you, Walter. Okay? I don't know what you're doing, Walter, but listen, it's keeping it simple. Yeah, Right there's the biggest seller. Now, let me ask you something. You think do you want to kind of question that 37,000 share seller out there on DraftKings? That you have a guy out there trying to sell, you have a couple of 3 orders out there that make up the 37,000. Do you think you know more than that 37,000 share seller? Oh, I don't care what that guy thinks. I love DraftKings. I don't care if somebody wants to sell 37,000. That's okay. That's okay. Let somebody else buy it from him. Okay? Let's see if we get through it first, because it didn't. And that's how you convert winners into losers, or big profits to little profits. And that's not, and because getting out at 34, if you didn't get out in less than an hour, guess what? You just threw away an extra $1. $1 on 1,000 shares, $1,000. $1,000 over the course of the year, it's a $250,000 salary. I don't think people want to just dish out dollars, okay? Now, who here, could it also be a fake order? Okay, well, I'm going to answer that. But by the way, everybody here probably, before I answer that question, where can I get book view, or people are going to want to ask me, okay? So there's my email address. I'm not going to tell you where to get it, because I will do you a disservice, because if you go to the exchange, you're probably going to get it. And first of all, you don't know how to use the defaults. I want to give you a little workshop on it so you actually know how to use it. But let me explain something to you really quick. So everybody has my email address. It's right there on the screen. It's $15. Okay. I don't make any money. I work for NASDAQ. Okay. But I'm just here. MetaStock wants me here because you have, the best platform out there to trade with. So, and they don't want to lose you. They don't want, the acquisition cost to get traders, they don't want to lose you guys to say, you know what, this didn't work for me, I want to get out of it. That's why we're hosting these events. But if you want to add and learn how to be a lot better of a trader on your day trades, on your swing trades, on your options trades, just get it's not going to break you. And guess what? You're not locked into anything. You do it month by month. You know what I mean? But this is what Wall Street traders use. I'll tell you a funny story. I was on NASDAQ. I don't know if you guys register. I was just on, I'll send you the video. I was on NASDAQ on Wednesday, and I was at a round table with with 2 analysts. And let me tell you, I can't compete with these guys. These guys are Harvard graduates, geniuses. I mean, they'll run circles around anyone, right? But they couldn't run circles around me is they're not traders. And, but what made them why they are there today, which is what we're trying to do with you, is that great traders never stop learning. People that are in this industry. And, one analyst there uses it all the time. He's like, Fausto, I can't believe you're talking about this. I mean, I use the MetaStock platform and I also use this. And I'm like, God, I can't believe more people aren't talking about it. The other analyst is like, how do I get that? I didn't know I could read the future. So anyway, just take my email address. I want to give you a workshop on it. I want you to learn how to use it before you do anything else. Okay. So FaustoP@ctucorp.com. All right. Now let's go see some action on level 3. So what I want to do is, does anybody here have any stock that they want to trade? And just put it in there. Now, to kind of answer one of your other questions here, Singh has a question asking me, could these be fake orders? Let me explain something to you. Could your brokerage firm allow you to put a fake order out there? The only fake order you could put is on demo mode, okay? Now, can somebody cancel? Well, if you put a limit order out there, can't you decide and change your mind and cancel your order? Of course you could, all right? So if someone ever tells me, is that a fake order? That tells me you don't know how to trade. That means you have absolutely no clue or what you're doing or whoever trained you. There's no such thing of fake orders other than demo mode, okay? And I'm not trying to beat you up here, but I just want to kind of point it out that if anyone ever said that to you or mentioned that, or anyone here, that just shows you they don't know how to trade. There's no brokerage firm. You call up Charles Schwab right now. Hey, listen, I want to buy AMD, but I want to put a fake order out there. Could you do that for me? They're like, how are you going to do that? How am I going to put a fake order for you? You know what I mean? I'm going to put my name on the line. So hopefully that kind of answers your question. So anyway, let's look at a couple of stocks really quick. I'm going to see what I can find. And, you know, and I want to do some brand name stocks. Okay. So, I'll look at a couple of stocks. I'll see it. ARM. Let me see. Not really that much volume in ARM. ARM, not really a fan. Not really big iceberg orders out there. EXPE, oops. I need something that has volume on it. EXPD, not enough volume. Expedia, you got about 1 million shares. I need something with more volume. More volume. A, 600,000 shares. More volume. Anyone else? Need something that had something popular. SRG, 300,000 shares. Okay. NVIDIA, that's not a bad, but let's look at NVIDIA. Okay. NVDA. So NVIDIA has traded about 18 million shares. Okay. So now let's look at NVIDIA. Popular stock. Stock's been on a nice little run. You can see here, it basically has, NVIDIA has run from, you can see here from 400. It's at 478. Nice little move, nice little trend. Now the question is, if you were trading NVIDIA and you were making money on it, what's the smart trade of NVIDIA? You got to have a game plan. You got to know where to get out, right? You want to know where the resistance levels are. So I'm going to bring up NVIDIA, NVDA. All right. Now, looking at NVIDIA right here, what I'm going to be looking for is big block orders. Now, I can see here at 185, I have a 37,000 share seller. There are about 997 orders out there. Okay. There's another big order here at 782. And buyers go, not that much. But I could see that there are some big resistance levels here. So let's just look at, we'll look at 485. So 485, if I zoom in over here and I draw a trend line at 485, that's about right here. So you can see right around that price back in July when we got close to 480, which is pretty close to that 85 after running from 400. What did it do? It came back down. It came back up right around here in end of August, right, kind of more of a slingshot, okay? Right, close enough, within margin of error, hit that resistance, came back down to 400. Came back close to here again, back in October, came back down to 400. Now we're getting close to that big iceberg order out there. What do you think should happen? Can it go to 500? Absolutely. But 400 to 480, do you really need that extra 20 points? Is it going to make you or break you? Because if you were the person back in July, let's think about this. 80 points up, 80 points down, 80 points up, 80 points down, 80 points up, 80 points down, 80 points up. You could have traded that stock in and out all day. That's what trading is all about. All right. Let me pick up another one. Let me do another one for you. What else we got here? Tesla. That's got good volume. Tesla is actually one of the most searched stocks out there to trade. And Tesla, probably a lot of people like it because it does have one of the greatest options out there. And by doing that, Tesla also has got great iceberg orders. Great iceberg orders. So let's check out Tesla. So let me see what we got going on here. Tesla. Okay. So Tesla seeing orders out here. And not only as a day trade, but I'm going to look at it as a swing trade. So Tesla right here, you could see, a lot of support levels, right around the 200, right? Right around here, about 290, 200, right around there, okay? You're running great, even a little bit more, right around there. So you got support levels, you can see even around a 205, okay? And resistance-wise, we have right around here, around about 200, 220, right around here. So let me bring up level 4 and show you what we got going on here. So right here, you could see at 205, you got right around there. Hold on, let me pause this. There we go. So right around here, you got about 62,000 shares that can be bought at 205. You got 2,000 orders out there. Kind of makes sense, and we're at 210, right? But 205, you can see there, 23,000. On the sell side, we got some big sellers right around here, right around 215, which is right around here. You can see it got, and you can see right around here back in August, there was a big support levels. So it kind of makes sense. You see where I'm going with this? It just gives you a game plan, where to get in, where to get out. Now, that's on the long term as a swing trader. Now, what about a day trader? Well, if we look at as a day trader, look at the big support level right here. All right, look what happened. The stock this morning got crushed. It went from 213 all the way down close to 205, right? What did we say the support level was? Didn't we say the support level? We saw 2,000 orders out there that made up 62,000 shares between 206 and 205. That's a lot of orders out there. Kind of makes sense. It was hovering there all day this morning. So if you watch this stock and let's say you saw, oh my God, it's doing great at 9:30. It ran from 209 to 213 and I don't know about 213. Now the stock is going down, and you can see that there's not as many orders at 213, but you could see how it hit 213. You had a couple orders out there, but there was a lot of orders at that 206. And if you were just sitting there patient and just waiting, and you were waiting about 10 minutes, 15 minutes, and then all of a sudden, look what happened here from 10:30 to 11. You had 30 minutes to realize that these big orders on the bid were never getting filled. If you went out there at 206 and you got out at 210 right now, let's say half, did pretty well, okay? Now, don't take my word for it. Take what the street's word for it. A couple of questions in here. Should I add resistance support levels on high-frequency tradings common? Well, basically, that's what these are. A lot of them are high-frequency trades, algorithms, market, institutions putting their orders out there. You got to understand something. They trade so many stocks, so the orders are actually going out there. And let me just make another comment, because I'm gonna tell everyone how to register now, because we're running out of time. I want to give you guys an opportunity to register. So basically, options, right? Who here trades options? Do you know that there are big options calls everywhere, and an option is being triggered by a transaction of a stock? So if there is somebody going to do a big option trade, somebody has to cover that trade on an option. And guess what? You're going to see it here. And by the way, you want to be a good options trader, you should learn how to trade the stock first. I mean, in all honesty, because it's the movement of this stock that makes an option move. Now, let's talk about how to kind of get involved, because what I want to do is I want to invite all of you to come into my trading room and see this live. Okay, we do live commentary, we do everything, and it's no better time because this is really one of the best times of the year to trade. So, the thing is this: if you look those people on the left, there's me on the right. That's actually a picture of me doing a presentation at Charles Schwab. But if you look on the left, look at those monitors. They're all those monitors are data. They're all looking at the data. That's what these traders are doing. So, and this is why CyberTrade University has been endorsed and sponsored by some of the biggest brokerage firms, just to name a few. Okay, and let me tell you, they do. And believe me, you want to do your homework? These people do credit checks on us, background checks. They would never let us do presentations, and like MetaStock, if they thought we were teaching people, how to lose money. So that's why we're here. So, and not only that, but we have probably, a great rating on Google, an A+ rating at the Better Business Bureau. Our reputation, being around for 30 years and keep it that long is priceless for us. And that should be something that should make you trust us more too, because that's what we're looking to do here. So let me get you guys invited. I want you to see this stuff live. And listen, today's the last day. Get registered today. Get you fresh in your mind. You can start on Monday. It's going to be great. You're going to have a good time. You're going to see all this stuff live. And we're not only that, but I only showed you level 3. I didn't even show you level 4. Level 4 is going to blow you off because we're out of time here. But level 4 is going to really knock your socks off. You thought this was pretty cool, but you see what I show you later. So this is what we do. Let me just tell you how we actually do our classes. So basically, we do live audio broadcasts. We actually start in pre-market at 8 o'clock in the morning. I know we have people all over the world here. So, we'll start at 9. We do live audio. We'll pick up at 2:30, but we're trading live all day long. I'll show you right here. Here's our trading room right now. And these are all our instructors. I'm in there, Alex, Josh, John, Rich. A few of them actually are off for today. These are all our traders. They're all trading. And it's the middle of the day. It's kind of slow, but they're trading the stock really quick. You actually did pretty well today. But these are, you can see right here on the top, this is all alerts. They're basically alerts. These are all the traders. There's no audio going on right now because it's the middle of the day. We're not really, not really big action. But we do live audio commentary all day long. Now, this is what's going to cost. $9. That's all I'm asking for. Now, some of you here are probably falling off your chair like, wow, that sounds pretty cheap. Listen, we're not looking to make money off anybody. We just want to know if you're a real person. We don't invite anybody unless we know who you really are. We don't know if you're a heckler. We don't know if you're a competitor, whatever it is. But all we're asking is, $9, join our room for 1 week. Listen, I can only spark your interest what I've done here in the past, 40 minutes. Imagine what you'll see for 1 whole week, okay? And you don't have to be there all day. You could be there in the morning, you could be there in the afternoon, you can come for 1 hour, whatever it is. But if you register, I'm also going to give you my book. You can go to Amazon, you can pay $47, or, it's been published by Wiley, one of the most reputable publishing companies in the industry. They would die me to make a day trading book. I'm going to give it to you for free if you sign up today. How to beat market makers at their own game. How do I know that? Because I was a market maker. I'm going to teach you how they do it. It's a color book. You're going to like it. It's great. It's a fast read. It comes with it. These are all the things you're going to get for the $9 really quick, okay? You're going to get live commentary. You're going to get 3 workshops. I'm going to show you how to get Book Viewer. You're going to get Traders Talk Library. And as a bonus, one more last big bonus. If you register, you're going to be able to talk to me on the phone personally. Now, why would I do that? I'll tell you why. We actually vet all our traders. I want to make sure that you know what you're getting yourself involved in before you actually go do it. And if you're serious, we'll take you seriously. So you're all going to be able to talk to my staff before you have your appointment with me. And the thing is this, we want to make sure that you know what you're getting yourself involved in. And you know what? You're probably not going to want to talk to me if you finally realize this is maybe not for you. And you know what? That's okay. Okay? It's not for everybody. But we're going to give you a money-back guarantee. Listen, I don't need your $9. Okay? You can see I've done very well over the years. But just it's more of just an application fee. We're not going to charge you anything after a week. We don't play that game. We just want you to kind of get your feet wet. So all you have to do is take your scanner right there, scan that QR code, $9, you're in for 1 week. And listen, if you want to continue with Cyber Trade University, because I know people are asking me that, listen, we'll talk about that when that time comes. Right now, you're here, you have an opportunity, you have some great presenters, you should buy a little bit from everyone, but here's a very good deal for all of you guys to benefit how to follow the orders. Now, does anyone have any questions? Any questions in the meantime? If you have any questions, yes, it will be recorded too. Absolutely.
That's what I was going to say. Yeah, you got it.
Now, as you register, just once again, you'll be able to book an appointment. You have a lot of automation. Tell us a little bit about you. If you've been using MetaStock, let us know how you have your layout set up. We'll be able to kind of advise you a little bit more how we kind of customize it on our end. We want to do everything that we can to give you the best customer service. Listen, I hate see people lose money. And just like Jeff and everyone else who are here, we hate being in front of audiences and having people so negative that, you're going to lose all your money. It's a 90% failure rate. You know what? Let's go out there and change the world and make people realize, because the first thing I always tell everyone, I ask them, who trained you? How did you learn? And you know what their argument is? Well, what does that have to do with it? I don't know. I don't want someone to do brain surgery. They never went to med school. Okay. Well, why would you want someone to trade your money who never went to finance? What are you doing? Go out there and learn how to do it the right way. You got great gurus here. Try a little bit of everyone stuff, and here's another opportunity. A couple of quick questions here. I just registered the link to register. Well, thank you very much, Carmelon. I look forward to seeing you, and hopefully I look forward to talking to you on the phone. You're the king. Dennis Stackett. I don't know about the king, but I love being here. I mean, I love being talking on MetaStock. That's why we had such a great relationship over 20 years. I love Jeff all the time. He's been such a loyal, great product. Loves his, and does everything he can to make you guys more educated to be successful in it. Thank you very much, Raymond. Appreciate it. You're more than welcome, Michael. Thanks for being here. Anyone else have any other questions? Jeff, I know you have a question. You always have questions.
Well, I don't have any questions from YouTube. What's the link? I just sent the link. Dennis says, you're the king. King Fausto is how I'm going to introduce you next time. Don't forget. Great session. Thanks, Fausto. Thanks, says Michael. It was great. Thanks. So a lot of good comments. Not a lot of questions, though. But you did a good job.
Everybody's too busy registering. But, before we go, I just want to make one last thing. I want to thank somebody very, very important here, more than Jeff and anyone else. I want to thank our veterans, okay? Thank you for your service. I know it's Veterans Day tomorrow. Thank you for your service, keeping us safe. If it wasn't for you guys, we probably wouldn't be here where we are today. So thank you, all right? Just want to let everybody know that. Salute to all of you.
Quick question from Satbinder Singh. I think I got that perfect. What is level 4 quickly?
I think, you know what, when level 4 is more of a heat map where you can kind of see these orders, how long they've been out there for, and if they're been adding to their order. Envision that you could take those orders and seeing it in numbers, and you could see it on a heat map. But that's what we'll cover when you register. But right now, we don't have too much time for that. I could only spark the interest of what we're doing now. So we'll cover that when you register.
Let's see. Reg says, amen to the veterans, and MetaStock says, amen. Thank you, veterans. So.
Thank you very much. Appreciate it.
All right. Thank you, Fausto. Good to have you.
Thank you. And everyone else will have a happy Thanksgiving, too. I'm going to be the first one to say it. All right.
Oh, I'm looking forward to it. We're not far. Can't believe how fast it's coming.
We sure are not. All right, Jeff, thanks a lot. I'll see you. Everyone have a great day.
You bet. Thanks, Fausto. I was just reviewing one of my stocks and commodities magazine right here. So in case, a little bit of a preview of coming things. So ctu.co.trial, or just click on the link in the description. So let me go ahead and do that. Actually, I put the link in for organizers here. Let me do this real quick. We'll go to ctu.co-trial. And then instead of sending it just to the presenters, I'll send it to everybody. It's great to see you. I hope you're enjoying the conference today. I am. Let me go ahead and make me the presenter. And let's go ahead and show my screen. Although we got out of the slideshow mode. Let's go back, get back in here. And as you might have guessed from me running to my desk and grabbing a bunch of Stocks and Commodities magazines, it's time to say thanks to Stocks and Commodities magazine. So Stocks and Commodities magazine is a great sponsor. They have been sponsoring the events. I remember like 12 years ago or something, I called and I said, I have an idea. We're going to get a bunch of just speakers together and we're going to do a free event for everybody. And we're just going to talk about trading for all day. And they like the idea. They've been sponsoring the events ever since we started them. And it's a physical magazine. As you can see, I've got quite a few copies right here. I just grabbed a handful from my desk. But we really do appreciate all of the work that they've done over the years. And in fact, 45 days to Christmas. I guess I better start doing some shopping. In fact, the next prize that we're going to give away is 12 months. 12 issues of Stocks and Commodities magazine. Actually, with your year subscription, they do a bonus issue that's called the Reader's Choice Award. So it's actually 13 issues. It's an $89 value. And what I need from you, because I always have you guys help me pick out the winners, is I want you to give me a number between 1 and 11,641. So just to kind of explain why that means right now, type in a number now. But what that means is I've got a spreadsheet here I've listed out all of the people that have registered. And if you've registered, you're going to be on this list. And if you type in a number, you can help me pick a winner. So write a number now, 1 and 11,641. Now you might want to know, am I on the list? And if you're watching us in GoToWebinar, you're on the list, definitely. You don't have to do anything, you're already there. If you're just kind of caught us on YouTube and you haven't registered yet, what we want you to do is to be eligible for the prizes. There's a link that's pinned. It's like right here. Actually, it's maybe over here. In the chat at the top, and you just click on that and it'll ask you for your name and your info, and you sign up, and then you can be on the list. And we've been giving away some pretty awesome prizes. So Frank, thank you for the number. We're going to go with that one. It is 997. So let me go ahead and pull that up real quick. And that is, okay, and I can confirm that you're in the US. And you registered it with the first name of Silver. So Silver N in the USA. You're going to actually get physical copies of this magazine since you're in the US. If you're international and you win the magazine prize, you just get digital versions. But if you're in the US, you get a digital copy or actual physical copy. Those memberships and all of the memberships actually include all of the articles that they've published, all 17,000 of them plus, that they've actually released in the last since 1982. So let me go ahead and we'll do one more winner if we get some YouTube numbers. Neil said 29 in YouTube. So let me go ahead and pull that real quick. 829, okay. Oh, I'm on the wrong spreadsheet. Let me go ahead and go to the right one. Neil, thanks for the number. The winner on that one, I'm not sure if this one is in the US or not. It's a Tara N at Yahoo. So let me see, that's not the actual email address, but Tara N with a Yahoo account is the winner for the second prize. So that's a very, very cool prize. Yesterday, everybody's wanted to win it. So congratulations to both of you. Thank you for the numbers, guys. And there you go. Cool. I thought, hey, I should show all my stocks and commodities magazines. When am I going to have another chance? So yeah, we have just a filing cabinet full of stocks and commodities. I love it too, because every month you get good articles. You can kind of go through it. There's an ad for us in the back of it for this one, but it does really allow you to kind of learn a little bit every noon if you just go through it. So again, thanks Stocks and Commodities for sponsoring the event. We are, of course, MetaStock. We've been making software since the 80s. It's been rated #1 by not the editors of Stocks and Commodities, but the readers of Stocks and Commodities. So they do a contest every year, 30 years straight. MetaStock DC has been rated #1 in its price category. It's been rated #1 because it can help you scan markets. It can help you test trading ideas. It can help you do forecasting and get probable price movements. It does real-time alerts, commentaries, signals. We've talked a lot about it over the week. I just want to say it's been rated #1 for 30 years in a row, and you should try it out if you haven't. And what we're going to do as an offer is if you pay for a month, we'll give you the second and third month for free. And that means you'll be running it into February 10th. And the price of that could be as low as like $23 per month, since pricing starts at about $69 a month. If you have any questions about MetaStock, if you want to talk to us about what MetaStock can do, just get in touch. metastock.com/saleschat, metastock.com/conf promo to just sign up. And I'm getting a phone call right now. Let me go ahead and send that. And then 800-882-3040. So thank you again. Thank you again to us. Our next speaker is Sunny Harris. Sunny has been frequented our group quite a few times. She's going to talk about her SunnyBands and how they work. They're very, very cool indicator that I'll let her kind of spill the tea on with. But I will say this, I've known Sunny for a number of years. I'm glad we're starting to have her more and more on our events. And I want to make sure that we keep her on our speaker list because she's a really awesome technician. So Sunny, that's how I'm going to introduce you today. Let me go ahead and, how are you?
Good, how are you?
Great. Let me make you the presenter here. Okay, and then I'll just make sure we can see your screen.
Which one do you see? I have 5 of them.
Okay, well, I think I see the right one. It says Online Traders Conference, MetaStock.
That will be you.
SunnyBands. Yeah, cool. All right, I'll get out of the way. Everything looks good here. Do you have any questions before we start yet?
No, I don't. My presentation may run a little short, so get back to your desk.
Okay, I'll stay here then. Thanks, Sunny.
Okay, I am Sunny Harris, and the title of this presentation is using SunnyBands and my dynamic moving average histogram to trade the E-mini. And we're going to talk about more than that, actually, or also known as at last SunnyBands on MetaStock. So if you've been waiting for the MetaStock version, it's here now. My passion is in helping beginners. I love to work with beginners and intermediate traders, and this talk is for all those who have not yet become wildly successful, and people who have not traded much and want to learn, and folks who want to improve their trading results. I love to teach and mentor. I do a fair amount of consulting and mentoring, and it's one of my passions. I think I'm the only presenter that's going to give you my cell phone. So right there in red, 760-908-3070. Don't call during this presentation, but you can call any other time. The disclaimer is you can and will lose money trading. It's a very risky business, and only trade with money you can afford to lose. Please read this whole thing when you get a chance. And they also want me to say past performance is not a predictor of future results. All investing involves risk of loss, and individual investments may vary. The examples provided in this presentation may not be representative of typical results. Your capital is at risk when you invest. You can lose some or all of your money. Never risk more than you can afford to lose. Like Fausto said, 90% of the people who try it blow up their account. So when I post these slides, you can click on this link in the, my website's moneymentor.com. So if you go there, you can read the presentation if you become a free member. Okay, I'm a professional trader and have been for almost 43 years now. I trade both futures and stocks, and I don't trade options. And I'm going to tell you a little bit about myself and show you how I trade today. I've been trading since 1981 through the 41% crash of 1987, the 38% crash of 2000, the 52% crash of 2007 to 2008, as well as the 38% COVID crash. So you got to know how to trade both markets. You got to know how to go long and short both. I trade the S&P 500 futures contract, the E-mini, on 1 and 5 minute charts. I've heard it said it's the most difficult market to trade, but it's what I've been specializing in for 42 years, so it's the one I stick with. And I also have some long-term stock holdings. A week or more is long-term to me in stocks. And I do have some crypto. So today I'm going to show you how I trade with SunnyBands and my dynamic moving averages. Those are the 2 indicators that work so far on MetaStock, and we will have more. So first, let's get to the free stuff. If you sign up for Sunny Side of the Street, my technical newsletter, you'll get a free one next Sunday night, where I explain what my indicators are telling me about 15 different markets. If you can't find it, just give me an email, sunny@moneymentor.com. Or when this is posted, you can click on the link above. So I will be posting it later today, probably. And I have a free podcast, the Sunny Harris Show, with no commercials. It's on Spotify primarily if you want to look for the Sunny Harris Show. And we interview famous traders and authors. And this is how the Sunny Side of the Street starts out every Sunday night. And just real quickly, I was #1 trader twice, rated by Stark Research. And I was using these 2 indicators that I'm going to talk about today. And right there you can see right on top. So I grew up dirt poor in Appalachia. I have 3 degrees in mathematics and 1 in telecommunications. And 54 years I've been programming, 42 years I've been trading. I was a systems programmer for Lockheed as my first job out of college. That was a lot of fun. I helped found a little company called ISCO, which was the world's leader in computer graphics software. And then I retired when I was 30 and sold my shares of the company. I then gave my money to money managers and they lost $75,000 in 3 weeks. And I thought, I can do that poorly on my own. So I took my money back and taught myself to trade. So I started out reading 117 books and now I've read 747. And that's just trading books. That's not novels. I read those too. But I didn't enter a single trade for the first year of watching the market because I wanted to learn to read the rhythm. And I think that's very important. Oh, and I published a monthly magazine for 8 years called Trader's Catalog and Resource Guide. This says I've written 5 best-selling books. It's more than that. Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, Trade Station Made Easy, and then a side book with my friend Linda Blair. And now I've got 2 new books out, which you might want to read. It's 1,300 pages of instructions. And I've written articles for all the major magazines in the industry. Those are they. And here are the covers of my books. So you can recognize them on the shelf if you see them. Oh, and I also wrote Using Easy Language 9.x with Murray Ruggiero. I ghosted it for him. And there's the magazine. There's that one. And these are the 2 new books. Amazon.com. I've been named a top 10 consultants in Stocks and Commodities magazine and top 10 courses and seminars. I already told you I was rated #1 top trader by Stark Research, and I have belonged to all of these organizations. Just so you can see what others say about me, there's a little page called Whips and Quotes on my website, moneymentor.com. And I just wanted to read this middle one for you. Margaret, who's a nurse, said, I just wanted to update you on how trading is going with SunnyBands. I hope I'm not jinxing myself by telling you this, but I'm so happy with your indicators that I wanted to share with you. From the start of the trial on August 29th until I purchased your indicators on 9/6, my portfolio was up 28%. So she made 28% in 1 week. From the start of the trial to today, my portfolio is up 74%. Thank you so much for your help and your indicators. I have so much more confidence in trading now, and I'm still learning. I can only see things improving here. Thank you so much. So most of the people who take a 1 week free trial of my software send me emails like that. I have a Facebook page, and you can see what I think is going to go on in the market. You can subscribe to Sunny Side of the Street, my Sunday night newsletter. And I do have customers all over the place. Let's talk about how to make a 6-figure income. That's $120,000 a year, let's say, just for round numbers. If you divide that by 12 months, you need to make $10,000 a month. And some people say, well, that's impossible. I can't make $10,000 a month. It's hard to do. But if you divide that by 20 trading days in a month, that's only $500 a day. Or 5 trades at $100 each. Now it's doable. If you break your goals down like that, you can achieve them much easier. So on the S&P that I trade, the E-mini, there's usually between $1,000 and $3,500 per day available to you if you're willing to go long and short one contract. I'm going to break down how I trade and show you exactly what I do. And while the next few images may look complex, they're really not. And color keys me into action. I color code things so I know what I'm looking at without having to think about it. I don't like to be thinking about what something means on the chart when I'm trying to trade. This is a chart of the SPY, the ETF for the S&P 500. And it's like, okay, what is that doing? How do I know when to go long and when to go short? It's easier to see in hindsight, but it's not so easy to see when you're looking at the hard right edge of the page. So that chart really doesn't tell me much, at least. In fact, it just looks kind of scary. Is it going further down? Or is it going to go up? Is it at a bottom? Is it going to turn around? And what's high and what's low? We know buy low, sell high, but what's low? So I add Fibonacci lines to my charts. So you can see there, those are the Fibonacci retracements. And now the thing starts to take a little more form. Look at how it goes across here, hitting this Fibonacci line over and over and over, and then finally gapping below it. And it's trying to head back up to it right now. So I'm going to tell you a little bit about Fibonacci. Not everybody knows. Leonardo Paisano, named Fibonacci, which means the son of Banacci, was an Italian mathematician born in Pisa in 1170. His father, and I don't know how to say that, Guillermo Bonaccio, worked at a trading post in Bugia, now called Berger, the Mediterranean port in northeast Algeria. As a young man, he studied mathematics in Bugia, and during his extensive travels, he learned about the advantages of the Hindu-Arabic numeral system. So the Fibonacci sequence numbers starts with 0 and 1, and then each subsequent number is the sum of the two prior numbers. So 0 and 1 would be 1, and that's the next number. So sequence goes 1, 1, 2, 3, 5, 8, 13, and so on, where 13 is the sum of 5 and 8, and so on. So I'm going to tell you about the ratios that these numbers perform, because that's what we use as traders. So if we do a little spreadsheet and we put all the Fibonacci numbers up to like the 20th one in there, that's where we get to. So if you take the ratio of one number to the adjacent number, so how do we do this? So we take 2 divided by 3 is 666. 3 divided by 4 is 0.75, etc. You'll notice as these numbers go down the column, they all converge on 0.618. So that's the Fibonacci ratio that we're most familiar with. So it's one number and the next number. And you can see the 618. Now, if you do one number to not the next number, but the one after that, then this converges on 0.382. You can see this ratio building. And that's the 0.382 retracement. So one number to skip a number, take the next one, gives you 0.382. If you do it with the fourth number, you get a ratio of 0.236. Are these numbers familiar? This is on your trading program. If you just pull a Fibonacci line across prices, it has this sequence or these ratios built into it. But now you see why. So one number, skip 2, and that converges on 0.236. Now, if we take the second number divided by the first number, you can see in this column out here, we come up with 1.618. Isn't that sort of suspicious? Here we got that 618 again, but this is 1.618. And that's the way that goes. Now I add what I call attractors to my chart. I call them anything, horizontal lines, Fibonacci lines, moving averages, trend lines, anything that price is attracted to and is likely to come back to. I just call it an attractor So that's a trend line attractor right there. You can see it going from this low, picking up the trend here and here. It breaks through it at this level, and then look, it comes right back to that very same line. I've also got a horizontal line in here. Again, it's an attractor to me. And you can see price hits it there and has support. Hits it again over here. It breaks through it over here. It comes up above it and can't go and goes back down again. And as I said earlier, I think that's where we're going, is to this next line. And then I add two of my own indicators. These are things that I wrote for myself because I found out a long time ago that moving averages produce a lot of whipsaw and you lose your profits. You make them in the trends and lose them in the whipsaw. So I have two indicators. One is called SunnyBands, and the other is my dynamic moving average histogram, or DMA_H is how I look for it. So here's SunnyBands on a chart. And you can see I left the attractors that I had drawn on there. And you can see that these bands contain price. See how it stays within the bands if it goes. The way I trade it is when it comes down on red and hits the bottom band and bounces up, then I go long. There are special rules for a flat DMA, which is right through here. And that is, I don't trade those. That's congestion. And then we break above it again, and we have a little loss there, and then we're long again for this run. So that's how I trade SunnyBands. Now this is the histogram. At the bottom of the chart, you can see gold lines and red lines and purple and green ones. So the dynamic moving average, or DMA, is colored in two lines, gold and purple. So you see the gold line at this point in time is on top and the purple's on the bottom. So we go down to the histogram. If the numbers are below the zero line, that means that purple's on top. If they're above the zero line, that means that gold's on top. Now, when you have gold on top like this, and then it turns red, that's signaling me that the market is making a change. This histogram measures the difference between the gold line and the purple line. So when the distance gets shorter and shorter and shorter, we're often likely to make a turn in the market. Likewise with the purple, when it turns green, that means purple's still on top, but the distance between the two lines is getting shorter and shorter. Now I can see something with a chart with attractors and Fibonacci trend lines. They're not just support and resistance. Trend lines are attractors. Moving averages are attractors. I have an indicator called the recession indicator that draws from the highest high to the current price and gives me a percent. I was watching that carefully when we were moving down 20%. So that's an attractor. Fibonacci retracements are attractors. Elliott waves are attractors. If you count waves, you'll see that you've got a 5-wave predicted and you've measured the distance. That's an attractor. So let's go a little farther. There's SunnyBands again. And let's say we buy and hold one share of this ETF, SPY. So if you bought at the beginning of the chart, which was 1993, and you sold at the end, at the final price of the day, that would be $389.74 per share over a lot of years. Now I have an indicator that's not yet available, but will be on MetaStock, and it's called PHW, or potential hourly wage. I've invented this little indicator because I wanted to know what was possible. And if I'm comparing stocks, I want to know which one I can make the most money with. After all, that's the only reason to trade, is to make money. So I'm looking at taking, finding the ideal profit, and then I take 60% of that because I know I can't catch all the highs and all the lows. So if you did it that way, you'd make $3,600 instead of, what did we do before? $389. So that's quite a difference when you're trading versus just investing. If we do the same thing on IBM, here's a chart of IBM with SunnyBands and the dynamic moving average histogram on it. If you buy and hold versus trading, you can make $134 versus $3,600 trading. And this is a daily chart, of course. Now, it works on any time frame and any symbol. So I've got a daily chart there, but we could go down to a 5-minute chart and get the same kind of instruction. And this was just one share. Now let's look at Tesla and see. See, you can see that the SunnyBands do the same kind of thing. The beauty of them is let's look at the congested period. Right through here, this is congested. And the moving averages don't go back and forth over each other 3 times like they would with the standard moving average. Likewise, down here, we have congestion. And you can see it finally switches over when the market's actually going up. So it eliminates at least 90% of the congestion that a standard moving average would experience. So if you buy and hold on this one, you'd make $218 with one share. I mean, we're not talking much here. And while trading, you would have made $2,300 per share, one lot. NVIDIA, Fausto looked at NVIDIA. Same story. SunnyBands does the same thing with any chart, any time frame. So buy and hold on this one was $449 a share, and trading was $2,000. So then remember, that's the PHW amount, which is 60% of the ideal. So this is an investor's chart. This is a daily chart of the SPY again. And you can see that the trend is up. And this is a trader's view on a daily chart again. And now watch this one. There's a down, there's an up, another down, another big up, down again, up. You see all the trades that a trader can make? So that's how we get the profit so much larger, is that we swing trade instead of just investing. So as I said, my indicators work on any symbol, on any time frame. They work on MetaStock, TradeStation, multi-charts, and NinjaTrader. So I'm working on more, but I'm going as fast as I can go here. This is the 15-minute ES. This is the E-mini. And you can see the same theory applies. Buy at the bottom, sell at the top. Ride, as long as purple's on top, ride the trend. Here's the 5-minute chart of the SPY. Same theory. And a 1-minute chart of the SPY. So you can see all these things, all these time frames, all work within SunnyBands. Buy down here, we sell up here. We buy, we're short here. This is congestion, and we get out right there. And then we buy, and then we sell. And this is just over and over again all day long. When you're doing it correctly, trading is boring. It's certainly a lonely job, but it's boring if you're doing it right, because you do the same thing over and over again, day after day. So how do you know when to buy in 1982 when Apple was 12 cents a share? How do you know to hold it for 40 years? So I look at my SunnyBands and my histogram, and the answers are there. The dynamic moving average was designed to measure favorable and adverse excursions from the dynamic. Sorry. SunnyBands was an offshoot of my dynamic moving average, and it was allowing me to investigate the excursions from the DMA. So that's what the channels are. The bands are average true ranges away from the dynamic moving average. They are not like Bollinger Bands. Everybody says, oh, these are just like Bollinger Bands. And he uses standard deviations away from a simple moving average. And standard deviations are statistics that tell the market where it should go. And the simple moving average is the one with the most whipsaw. So if you'll put both of them on your charts, you'll see that Bollinger Bands and SunnyBands are not alike, except that they're both channels. So my DMA is smooth and it dances seamlessly with the market. And I use ATRs, which tell the market where it has been and is going, not where it's statistically possible for it to go. So here's a chart with a simple moving average on it, and you can double two simple moving averages. You see right back here, we have a crossover here, crossover here, crossover here. So during a period of congestion, you've got these crossovers, and that's called whipsaw. So it's going back and forth and getting nowhere, except it takes money out of your pocket. And that in trends, they're not bad. But here we go again with congestion, and we cross over and then crossover. So you lose money on both of those trades. Over here on the right, crossover, 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 crossover. So that's why I started investigating how to program something that would not do that. Here we see on a different chart, crossover, 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 crossover. And over here, lots of crossovers. They give late signals and whipsaws. See, you don't go long until over in here. You don't go short until the move's over. So this is what moving averages will do for you. If we put them both on the chart together, it's kind of a mess, but you can see how closely my moving average follows price movement. So let's look at it a little closer. So the gold and purple is the dynamic moving average, and the red and blue are the simple moving average. Let's get even closer. So you can see right here with this double crossover that the moving average has, gold stays on top this entire time all the way through that move. That's the beauty of the dynamic moving average. So it's unique. It's unlike anybody else's moving average. It calculates its own links dynamically within the algorithm. And on top of that, market moves about as much as it usually moves, which is why I use ATRs to measure how much it usually moves. So here are the rules for trading SunnyBands. When the market's going up, and where I've got blue, read green, because in that chart we just looked at, they were red and green. I use red and blue. When the market is going up on green candles and gets above the upper outer band, upper outer SunnyBand, and it turns red and dips below the upper outer band, I go short. When the market's going down on red candles and gets below the lower outer band and turns blue and it pops up above the lower outer band, I go long. It's just as simple as that. There are some more complex rules for those who want to take a deeper look into how this works. And when I sell you my indicators, I give you the customer support personally. I do a white glove installation when a free Zoom call. And then following that, I do another Zoom call in the live markets together. So it's a lot of customer support. Here we have long and short trades. So the red lines are short and the blue lines are long. And you can see there, I marked a few of them. I didn't mark every one of them, but you can see there where the trades are. And here's a swing traders chart. So we've got a 15-minute chart here on Apple. I have another indicator that colors the bars different during the overnight session. So you can see what's overnight and what's in the day session. So I can see it makes my life easier. And here's a 5-minute chart of Apple, which is the day traders chart. So in the same amount of time, an investor made $168 per share and the trader made $299 per share. The day trader made $610 per share. If you'd started with 100 shares, then the investor made 16 grand, trader made 29, almost 30 grand, and the day trader made 61,000. So it's quite a difference. If you can catch those trades, it's certainly more lucrative. At a starting price of 47 cents in 1981 and a current price of 156, an Apple investor would have made 399%, which is really excellent. The trader would have made 635% profit, and the day trader would have made 1,200% profit. That's why I'm both a trader and investor. I have long-term stock holdings and very short-term e-mini trading. So the question you have to ask is this even possible? Yes and no. You can't catch all the moves. You're never going to. You might get a hole in one once or maybe even twice, but you don't get it every single time you play golf. So according to my research, you can capture about 60% of each move. So you give away 20% on the entry and 20% on the exit, and you catch the 60% in the middle. But an investor has to sit through long periods of scary negative markets. So I like to be in and out, and that's why I trade. And the trader can always go short. I know you can go short stocks if you have a margin account, all that, but I just don't like to do that. So let's look at the Dow just a minute, because it's something we're all familiar with, and it's reported daily on the news, and we all relate to the numbers. So if they say the Dow's down 300 points, then we know what that means. If I tell you the ES is down 88 points, do you relate to that? Most people don't really hang on to that the way they do the number for the Dow. So we were down 9% from the recent recovery high. Let's see what we're doing today. We've got a little 233 points up on the Dow right now. Yeah, it had at one point from the high, it had lost 3,200 points. That's a big number. So if we look at the Dow Jones on a weekly chart, we have this kind of thing, and my presentation window's in the way. So you can see how it's congesting as it tries to go down over here on the right. And let's look at the Dow Jones on Vantage Point software. It's predictive software. AI is for artificial intelligence. I've been using Vantage Point for many, many years. It gives me a perspective of where things are likely to end up or down tomorrow. And I post it every day on my website, moneymentor.com. It's the Vantage Point prediction for tomorrow for the Dow. So if you want to go to moneymentor.com, you can see that for free, and then you can click on the link to buy Vantage Point. So I do consult it every night before trading the next day. And there's the link if you want to get some free training on how to use it. Here, for instance, I made this presentation a few days ago. So that was this gray bar at the end shows you the predicted value for the following day. So they correctly predicted that that was an up day. Now here are the SunnyBands rules. This is what I use in my own trading, and this is the more complex stuff. It's only for educational purposes. I'm not giving advice. I'm just showing you what I do. So we've got level 1. The rules are, and I told you that a little bit ago, I enter long when red candles are moving downward and touch the lower outer band, and turn green and move back inside the lower outer band if price confirms. And by that, I mean the next bar has to be above the body of the signal bar in order to consider it confirmed, and then I take the trade. I enter short when green candles have been moving upward and touch the upper outer band, and they turn red and move back inside the upper outer band. Again, if price confirms. So if I want to go short and want it to move down, the next candle needs to be a red one that's lower than the body of the signal candle. And that's what that looks like. So we see blue candles going up, red coming inside, we go short. Here we've got red coming down, blue going up. Second blue confirms, we ride it to a flat DMA, and that's just as far as it's going to go. So we take profit right there because these lines are flat. So we've got that, and these are the trades. Level 2 rules are, and I just alluded to that if the DMA midline is flat, in other words, the angle is visually sideways, then I don't expect price to move very far beyond the midline. And that's what you just saw. We took profits at the midline. In fact, a flat DMA often acts as a barrier to further movement. And here's what that looks like. Purple is on top on this one. So there and there. You see how those are trades that just go from the lower outer band to the midline? They just hit that flat DMA and stumble. So there's a flat, and there's a flat. Now, if gold is on top, you see we're going long, and we get long down here at the bottom as a lower outer band, and we ride it up until price touches the flat DMA, and then I take profits. That's also a short signal right there. So here's the signal, and here's the confirmation. But I know that since the DMA flat is flat and it's only probably going to the DMA, I'm not going to enter that trade because it's already there. There's no way to make any money from it. So there's a flat DMA, and there's a flat DMA. Now the last level is, and this is an overarching concern, when purple is on top and has a slope to it. See, this one doesn't have a slope, it's flat. Over here, when gold is on top, I'm gonna stay long until it turns flat and it tells me to get out. But as long as gold's on top and the slope is positive and rising, then I'm gonna be long on that. So gold's on top, stay long until the DMA is penetrated. If purple is on top, stay short until the DMA, the purple one, is penetrated. So we're short all the way through down here. Purple stays on top that whole time. And right here, it penetrates the DMA and we're out. And this is how I choose stocks. I don't short stocks. I buy and hold after a buy signal. When I get a sell signal, I take profits. So the next chart shows me that all stocks that are above the 21, 55, and 200-day moving averages. 21 and 55 are Fibonacci numbers, so I like them. And that puts me a little different than the standard 20 and 50 moving averages that everybody else is watching. So it also tells me whether my DMA is bullish or bearish and what the potential profit is. So I'm looking for stocks that are above all three moving averages, the 21-day, 55, and 200. And this is, and I don't have this scan yet, I'm sorry, for MetaStock, but this is it on my trade station. And you can see the three moving averages are right out here in this three column scan. So it scans and puts a red if it doesn't qualify. It colors the cell green if it does qualify. And down here you say all three green, and if you follow that over there, oops, it tells you the stock. And I only trade those stocks that have three greens. I also scan for high performers that are still bullish, and here's the scanner result. So that'll put that out, and you can see which ones are above all three in the listing. This is my website, moneymentor.com. And let's talk about my products for a minute. These are things that I have personally programmed, and they are for use in my own trading. This is what I actually use every day. And I don't hold any secrets. When you purchase them from me, I tell you exactly, well, I just did tell you exactly how I use them. So I don't keep anything back like some do. And I make them available to you, and I show you exactly how I use them. So if you go to Money Mentor and click on order, it'll take you to all the prices so you can see how all the products I have and their pricing. Or you can go to moneymentor.com/products.html if you want to look at charts of the products in each of them. And I don't hold anything back. I train you to use them for free on Zoom calls. There's some stuff you can access if you become a free member on Money Mentor. I've got a strategy trading forum, 4 sessions, 1 hour each. If you're a member, you can download that. I did a technical analysis forum where we talked about all kinds of technical analysis patterns and charts. Again, this one's free for members. And it's not too late. You can access the slides and videos, both there. And then I also, with Sam Tennis, we did an easy language forum, but it costs a little bit. It's five 1 hour sessions. And you can all get all of them at moneymentor.com. Then I offer, for a price, education and consulting, easy language programming services, mentoring. I have a complete bookstore. If you go to moneymentor.com and click on books, you can order straight from Amazon, and it's only trading books. I offer a distance learning course called Solving the Puzzle, and the indicators I use myself in my own trading. And then if you want to subscribe, I have a Sunday night newsletter called The Sunny Side of the Street. This is a special offer for this group only. If you order before the end of next week, this coming week, you can have 20% off of all my indicators and mentoring. Or if you wait, then it'll be 15% off if you order before the 18th. That even includes consulting and mentoring time, which I just never do that. And if you want a free trial of my indicator, now I don't know yet how we're going to do free trials on MetaStock, but I'm sure Jeff knows everything. So give me a call on my cell phone or email me, Sunny@moneymentor.com. We'll get you set up. Or you can text the word trial to my cell phone. Now let's see if we've got any questions. Jeff, I don't see how to get to the chat.
The first question is, how do I unmute? I was having a hard time. Lars, actually Lars is a big, a longtime customer of MetaStock. He's been here for a couple of days. He says, "Hi, Sunny, it's nice to see you again after all these years."
I can't hear you, Jeff.
Oh, how about now?
Yeah.
Okay. Lars says, "Hello, Sunny, it's nice to see you again after all of these years."
Oh, hi, Lars.
Andrew says, "Great job, Sunny." Dinesh says, "If we want to learn how to trade the E-mini, what is the best way?" Thanks for the question, Dinesh.
Yeah, the best way is to give me a call. We'll get you set up.
Michael says, "Very good, very transparent. Thank you, Sunny."
Thank you, Michael.
Okay. And then Neil says 4 is not a fib number in chat. And I don't remember you talking
That's
about
correct.
4.
It's a Lucas number.
Okay, there you go.
I don't think I used a 4 anywhere. 1, 1, 2, 3, 5, 8. Okay.
I didn't notice you using a 4 either. So, but let's see. Yogs says, ages are you using for your SunnyBands? I don't think he spelled. I think there's something a little bit. Maybe he's asking what ranges you're using for the SunnyBands.
Language? Maybe he meant language.
Maybe Yogs just retyped that question. we can take a look at it. Bill says 4 is the product of 2 fib numbers. So there you go. All right, that looks like all of the questions. Yogs, I'm not sure. Well, let's give you another moment or two in case you want to kind of rephrase that question because we don't understand it. But he means, what moving averages do you base your SunnyBands off of? Thank you, Yogs.
I use my own dynamic moving average to base SunnyBands on, and it's an average that I've used matrix algebra and calculus to create the thing. And they're
dynamic. It's not
dynamic.
20
it's
period.
dynamic. Yeah, it's not like any other moving average.
Barry says, excellent, Sunny. And then he also asks, can you clarify why you no option trading?
Sure. I tried for 2 years to trade options, and I found out that I was real good at losing it every time. So, they say, well, you're limited to $2,000 risk, but the problem is I'd lose that $2,000 every time. And since that's not the reason I'm in this business, I gave up options. Futures are much easier to trade for me. Some people love options. I don't understand them.
Yeah. One of the things that we are, that I would like to point out is we are actively working on this product. We didn't get in time for the conference, but if you're interested in us letting you know when it's available, we would be happy to reach out to you. And so what I'm going to do here is actually just kind of put in our information. And then that way you can get in touch with us and we can keep you apprised. Of course, when it comes out, we'll let everybody in the database know. But if you want to kind of be notified by us from one of the members of our sales team, metastock.com/sales chat, they'd be happy to jot down your information, set up a follow-up for when that's available. Barry wants to know if you have a futures trading platform you'd recommend.
Well, what's wrong with MetaStock?
We don't do trading. Just scanning and analysis. Yeah.
You don't have a trading part to the platform. I see. Well,
Correct.
I hate to say this during a MetaStock presentation, but for my own futures trading, I use TradeStation.
Cool.
And they're both a charting package and a brokerage.
There you go. Bill says, excellent indicators and excellent presentation. Thank you very much.
Thank you, Bill.
All right. Very good. That's the end of the numbers, or the questions, I should say.
All right. Then back to you, Jeff.
All right. Thank you very much, Sunny. It's good to have you.
Thank you so much.
Looking forward to we'll have to have you back in as soon as we get those indicators ready, and we'll do that.
Oh, let me put this up real quick.
Oh, for sure. Yeah, definitely.
There we go. I forgot to do that.
Let me type this in the chat too. So, and then the email is Sunny at, and then thank you very much, Sunny.
All right, Jeff. Thank you so much. Have a great day.
Looking forward to it.
Have a great week, and it's Friday.
It is. We'll be back here tomorrow if you want to come join us.
I'll be working. I might as well.
All right. Thank you very much, Sunny. All right, cool. Let me do this. We're just going to kind of move over a little bit. And then I'll make myself the presenter. And then go ahead and show my screen. So let's go. Okay, here we are. We're running a few minutes ahead. I don't know how to handle this. Let's go ahead and say thank you to stocks. Oh, we just did stocks and commodities just a second ago. So
hey, Jeff.
Appreciate stocks and commodities. Yes?
I know how to handle running ahead.
We should do prize.
We should give stuff away.
Yeah, for sure. That's definitely, well, we do that no matter what, Greg. Ooh, whether we're in front of things or behind things, or do you want to help me do a prize?
Absolutely.
Actually, people are already typing. They know what's going on. They know how. So the numbers that we're using today. Go ahead. I'm going to do a little bit of a blurb for AAII. But if you give us a number, we will do a prize. I think we'll do the MetaStock prize a little bit early today. How's that sound, Greg?
That sounds fantastic to me. MetaStock, the trading platform, which lets you choose which broker you want. You're not locked into a broker when you use MetaStock.
Yeah. You mean in order to use MetaStock, I don't have to deposit a whole bunch of funds?
No. In fact, you could change your broker overnight, and MetaStock wouldn't care.
Mike has a question. Maybe you could help me answer Mike's question. He wants to know, he missed the beginning of Sunny's presentation. And is there a way he could go watch the beginning?
Absolutely. If you look, I don't know if Mike is on, he must not be on YouTube, or he probably wouldn't ask that question, but if you just go to youtube.com/metastock, you'll see our playlist. And I've also put that link a couple times on the YouTube chat. As well, it's on emails I've been sending out this week regarding this whole conference. So there's a couple ways to see it, but I'll go ahead and post it in the YouTube chat. Jeff, you might want to post it in.
I did.
There you go.
I posted in the GoToWebinar for you. So that'll take you to all of the sessions. We're going to work on putting timestamps on all of them so that you can kind of go to whichever presentation you want. But it's a little bit of work, and we haven't got quite there yet. I'm about to start working on that. So,
this might be a good time. Sorry, Jeff. This might be a good time to point out that we usually log in about 10 minutes before each day to give people a chance to log in and get settled. And that's me just counting down to your main presentation. Generally, we erase that or edit it out of the final video, but on these longer things, for some reason, YouTube does not allow you to do that. So if you don't want to watch me talk about the event that starts in 10 minutes, you can just fast forward. You get right to the main event.
Yeah, I actually love. I actually just like to loop that part where it's just you talking.
Oh yeah, me too. That's how my wife sleeps at night.
All right. You're welcome, Mike. Before we give away the prize, I do see a lot of numbers. If you're in YouTube, make sure to give us a number. We're going to give away a prize here. I do want to say thank you to AAII at AAII.com for sponsoring the event today. And this week, I keep saying today, but it's been a little bit more than a day at this point. We do appreciate AAII. They're a huge, well-respected organization. They've been helping nonprofits since 1978, and they've helped millions of traders. I'm sure you've heard of their investor sentiment surveys. They do that. They do a lot of market research. They do a lot of analytics. They have a whole active investor division. So there you go, AAII.com if you want to follow up, if you want to look into that. So, Gregory, why don't you give us a little bit of an idea of what's going to be included in this package? I'm
sorry. You caught me off guard. What package am I looking at?
We're going to do 3 months of MetaStock.
Is it 3 months at MetaStock?
Yes, correct.
Okay.
And so just from a high level view, have you heard about MetaStock before, Greg?
I have heard about MetaStock. It's a fabulous product for speculative traders who make their own decisions about trading, like me and you. It allows you to scan and test, and it has great things for evaluating price, where it's coming in the future, and it's just a great piece of kit for anyone who's a self-directed trader. And it includes quality market data, top quality. We're
going to include 3 months of Icon, Zenith.
Well, you're throwing some zingers at me, Jeff. It's been a while since I had to do an elevator pitch for MetaStock.
You're fine. Well, in case you haven't heard of Zenith, Zenith's been the top-rated software. Well, no, that's MetaStock. We're getting a little bit. I'm blurring my stuff together. Zenith's a very well-rated though platform. Very, very similar to like an institutional platform. They spent about $1 billion designing it. It is something that is very similar to what you'd get if you went and subscribed to a really professional newsfeed. If you were part of Bloomberg, or if you were getting Bloomberg, for example, it's really, really cool. In fact, Bobby's going to start in just a few minutes, and he's going to give us a really good demo of Zenith. So we're going to include that as well. In addition to that, we're going to throw in 3 months of Learn MetaStock. Learn MetaStock is, as Kevin came in yesterday and he did a bunch of training on the, you remember how super trend? I can't remember do you remember what it was, Bobby? The super trend filter. Yeah, super trend filter. And, but he does a whole thing around that. So we'll give you 3 months of MetaStock, 3 months of Learn MetaStock, 3 months of market data, no ongoing commitment, and we're going to give that away to 2 prize winners right now. The first one is going to be 5555. Thank you for the number, Yokes. Let me go ahead and tell you who that's going to be. And that is Nasser A in Kuwait. Congratulations, Nasser. You just won a very, very cool product. And then we'll do one more as well. And I want to say thank you for thanks for the help, Greg. The next one I'll give away is from Lee. Lee gave a number of 777. So let me figure out who that is for you. And that is actually a Wagner C in Brazil. So we're going to go ahead and I'll make a note of that as well. And Greg, thanks for the assist. Much appreciated.
You're welcome, sir.
Cool. Okay. All right. Very cool. Thanks, guys. How's everything going? You enjoying the show? Let us know. Want to hear what you're thinking. Mike, you're welcome for that. Oh, I just turn off my monitor here. Our next presenter is our very own Bobby Hiller. Bobby Hiller has been working for MetaStock for 7 years now. He does business development he does a very good job, actually. And he's going to talk a lot about the Zenith platform that we just talked about. Before we start him, I'm going to do a real solid and I'm going to read the legal disclaimer so that he doesn't have to. You're welcome, Bobby. And then I'm going to, as gracefully as I can, get out of my seat and let him come sit down. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I try to say that a little bit different every time. I don't think I started this at exactly the start for you, but there you go. And I do have, if you tab over, I have Zenith ready for you. So Bobby, I'm gonna let you take over for a minute. Here you go.
All right.
I'm gonna take my laptop. I'll see you in a minute.
Okay. Thank you, Jeff, for the introduction. Hello, everyone. Glad to be here with you today to talk about Zenith, one of my favorite products that we have here at MetaStock, and honestly, something I don't think that we talk about enough. So I'm really excited to be able to take the opportunity to kind of go through things with you guys, show you some features that you may not be aware of. I guess I'll give my own type of disclaimer here that's a little bit different from our legal disclaimer. Zenith is an extremely powerful product. There is a lot going on within the platform, as you can even just see from my first slide here, which is just a screenshot of like a home page for Ford. I'm going to be showing you guys a lot of information today, basically is what I'm getting at, and I don't want you to be overwhelmed by it. My only goal here is just to show you a few things that you might not have known about previously, and hopefully spark some interest into you doing your own additional additional research into the platform. And we'd love to get you guys set up with a trial of it as well. So if you see some things you think might be useful and that'll help you to expand your trading knowledge and to help you perform better throughout your investments and trades, then yeah, I'd say give it a shot. But don't allow yourself to get overwhelmed by everything we go to today. I'm just gonna try to show you guys a bunch of highlights of things that I think you might like and that you might be interested in. And as always, if you guys have questions or anything like that throughout the day, feel free to put those into the chat, and I'll do my best to try to remember to look over to this screen over here and answer any questions you might have. All right. So with that, let's jump into things. Jeff gave the assist on that legal disclaimer. We'll skip that. He also gave me an intro. I have been here for just over 7 years now, and I will say I really enjoy my job here. I think I have a great opportunity. I primarily work with all of our international partners, and I help them bring their trading systems into MetaStock, or I help them to resell to their clients all over the world. I'm not a professional trader myself by any means. However, I do have the privilege of being able to work with a lot of professional traders that are in all sorts of different regions and have all sorts of different methods. So I think it's great that here at MetaStock, we offer a platform that allows traders from all over the world, from all sorts of different backgrounds, to really have more success in their trades. And I'm hoping that, I can maybe share a little bit of what I've learned from all these different partners and from our MetaStock platform. I'm hoping to just share some of that with you guys today. I'm sure you have heard a lot about MetaStock all throughout this, week-long presentation that Jeff has been so great to put on for you. I still kind of like to just touch things on a little bit. I actually heard Jeff just talking about some of this. But yeah, MetaStock, we have been around since 1982. So really for over 40 years now since we were very first established. And back in 1995, we were actually purchased by Reuters, or now known as Refinitiv. And then we released our first real-time data feed based on their technology in 2005. But it wasn't until 2012 that we released MetaStock Zenith. So this product's been out for a little over a decade now. And I know Jeff's been talking about, Stocks and Commodities Magazine and how we've been so well rated with them. Well, for the last decade or just over, the MetaStock Real-Time in Zenith has performed the best the last 10 years for its slightly higher price category. And then we have our MetaStock DC that's been around, much longer, and that's one for pretty much the last 3 decades. We did divest from Thomson Reuters, or now Refinitiv, back in 2013. We're still partnered with them. MetaStock's Zenith is still a retail version, basically, of the Refinitiv Icon platform, so it's very similar. When I actually open up the application on my desktop, it has their logo and name on it here, but this is slightly different. It's our retail version that we can provide to our customers at like a fraction of the price. And don't worry, we'll definitely touch on that pricing later on. But for now, I think I want to get ready to kind of just jump into it, or actually, sorry, this mouse sensitivity is very high. So hopefully I'm not moving around too fast. I think maybe I should actually stick to my slide for just a little bit longer to give you guys a brief overview, and then we're going to jump into things. But don't worry, I won't just be reading text throughout the presentation. We'll spend the majority of our time inside of Zenith. So with Zenith, it is powered by Refinitiv, and we have pricing data for approximately 70,000 globally listed companies. However, you might notice, like if you're inside of your MetaStock Real-Time and you look at all the instruments that we have access to, so when you're also including, Forex and futures and options and all that, et cetera, we have over 300,000 securities listed in there. And then once you dive deeper into things and you're looking at actual research items that we have available, or types of fundamental or technical indicators and things of that nature, there's over 40 million items available within this platform. We also have real-time news from more than 2,600 full-time journalists across 200 different bureaus. So a lot of people think that sometimes we only have access to like Reuters news, but that's not the case. We have more than that, significantly more than that within the platform, and I'll be showing you guys a lot of that today. So just to maybe even touch on these numbers a little bit more, because they really are so impressive. I mean, we cover over 150 currencies in there, and the FX data is going to be included in all of our packages too. We also include our news inside of all the packages, and cross-asset data that influence the markets. We have, equities, we have futures, fundamentals, economic data, you name it. It's very likely we have some level of access to it. Also, one of my favorite things about this platform is just how quick and intuitive searching through it is, and how easy you can come across information or find answers to questions that you might have come up. Pretty much everything within the platform has like a help indicator attached to it, so you can learn a little bit more about it. But I'll show you guys some really useful tips and tricks while we're kind of going throughout things today that I think should be quite helpful for you. All right, let's go into my next slide. So we do have pretty much global market data, and this is for agriculture, commodities, emerging markets, equities, metals, energy, Forex, real estate. We have all that type of stuff built inside of here. And yeah, I think maybe instead of going through these slides, we will jump into the actual platform itself. So let's do it. So Jeff was kind enough to open this up for me. This is our demo computer here. So I will say this is maybe slightly different than my setup that I normally have in my computer. So if I slip up anywhere, we'll blame it on that, not because I would ever forget anything here. And all right, so what I've basically opened up here is just the home page of Zenith. And kind of my style today, I want to just kind of guide you through some different workflows and how you can kind of navigate in to different pages and learn different things throughout here. A lot of stuff you can kind of just access from this home page. One thing you'll notice all throughout today's presentation is basically everything in here can be customized to kind of meet your needs. Like you might be looking at this home page and you think to yourself, I'm not really into the politics, policy, and risk stuff. Like, I don't know why that's kind of showing up on here. Well, you'll notice this little settings or wheel or icon here, and I can click into that and I can change the things that show up here. So for example, I could change this to like front page news and hit save, and now it's going to pull up the front page news here. I am very quickly going to turn down the mouse sensitivity just a touch here because it is very high. Bear with me. I believe I just opened it up on my other screen. Here we go. Yes, it is at maximum speed. So, all right, we've turned that down. Now we can function a little easier. Okay, so navigating in Zenith, how it's done. So what's opened up here is, just our homepage. So it's really easy to jump in to many of the different apps within MetaStock or into some of your saved favorite pages that you have here on the homepage. A comparison I like to make with Zenith is, it's basically like discovering the internet or the World Wide Web for the first time, but just for traders, because you can go in here and pretty much everything's a clickable link that you can go into and learn more. And the plethora of data is just so vast. There's so much going on in here that it's extremely incredible and powerful. And if we haven't mentioned yet, they did put over $1 billion into the creation of this platform. That's a billion with a B. So there was a lot of money and stuff that went into here. So yeah, it's great and interesting product, and it really does feel like it's entire own resource that's equivalent to like your web browser, but for trading. So from this homepage, as mentioned, you can jump into several different pages here. As I cover over things, it allows me to click into it. Oftentimes you're going to find like news and things of that nature within this homepage. Another really easy way of navigating, one of the most popular, I would say as well, is this very top search bar here. And if you just come into here, you can type in pretty much anything you want, and it's going to pull something up for you. So say I wanted to look at just a security and get a 360 overview of everything going on with a certain security. I've already kind of seen, okay, there's not a lot of big news pertaining to me on my home screen, but I want to go check out Ford. Just as an example, I can type in Ford up here, and if I do that, it's going to pop it up along with several other things that it thinks that I might be interested or wanting to go into. And then it also kind of tells me shortcuts to jump into different things here as well. So when I typed in Ford, Ford Motor Co. is the most popular, and it lets me know the symbol is F. And if I wanted to just go into its overview page, I could click right here, or I could scroll down one, and this also opens an overview that's slightly different. If I wanted to open up our quote app, that it's telling me I can do that here. So if I put in the symbol F and then a space and then a Q, basically saying if I type that in up here, so let me actually do that, F space Q, then I could just hit enter and it would open up the quote app if I knew that's what I wanted. Or if I wanted to open up the monitor app for Ford, it's letting me know the same thing here as well. I could just hit in F space MON up here and it opens that. Just trying to show you guys kind of how smart and intuitive this thing is. But let's go ahead and just open up that overview page and we'll take a quick look. So when I open up this Ford overview, you'll notice a lot of information. That's going to be a theme you guys will notice kind of throughout the day throughout my presentation. There's always a lot going on, but really, once you've spent just a little bit of time kind of inside of here playing around with things, maybe you utilize the learnmetastock.com offer that we have going on right now, and you go through their dozens of videos in there teaching you how to use Zenith, or we have free materials available on our YouTube and other places as well. But really, it becomes pretty intuitive and you learn things pretty quick. So don't be overwhelmed by everything on the screen. I'm even going to spend some time just kind of reading through it. And I think you guys will be pretty impressed by it. And any sort of feeling of being overwhelmed goes away pretty quickly once you've actually had some time to use it. So the first thing that we're seeing up here on the overview page is a business summary. I chose Ford at random, but most of us probably already know what that is. But it's a motor company in the automobile industry, and it's giving me just a quick overview here. So maybe you do a lot of technical analysis inside of MetaStock, or you maybe heard of some things that are doing some large price movements in the market, and you wanted to learn more about it before you invest. I mean, this is just a great page to go and visit to get a really quick recap of everything going on. You can learn about the company itself. You can see breaking news that's coming through right here. You can also click on any of these news stories here. I guess I'll show you as a quick example. And you'll notice, again, this is kind of like if you were just in a web browser per se, just how you can open things up inside of different windows and things of that nature. Once you've been navigating into like multiple pages, because I opened up something within the news app from the overview page, it popped it open in another screen. But if I click something in here, that's actually the same thing because I clicked it on the right-hand side. But you can also open things up in here and then simply click on the back button to navigate through it, much like you would in your internet browser. This is giving me information on it here and in different regions, but I can customize this to show only specific regions for me. I'm going to go ahead and close that down. If I scroll down a little farther, you can see there's events here, and I can click into specific events or navigate to the corporate event page. I can see recent developments, all sorts of things of that nature. You can also see price performance here. So we can get all the pricing data overviews at a glance, see the short interest, what it's done year to date, and it has a basic chart here. Zenith does have a lot of charting capabilities and multiple different charting applications that you can kind of utilize in here too. And I like to use it for, like, personally, it has a seasonality chart that I really like to utilize. It also has, you can put like some economic indicators onto your chart as well to like see when the derivatives came out on your chart or other just things of that nature that I kind of like to use. But for the most part, if I'm doing charting, I like to do it inside of MetaStock, just because as you probably all know, MetaStock is one of the most capable charting platforms out there, and it runs off of the Zenith data if you have MetaStock real time. All right, so if we keep going, you'll see here you can also get like just some fundamental overview data, and you can get recommendations from analysts. So this is telling you, of all of these analysts, 4 are recommending this as a strong buy, 6 as a buy, 9 as a hold. Then you have 3 at sell and 1 at a strong signal. If you wanted to know a little bit more about this or kind of what all this means, you can actually click into it. So I've gone ahead and done that. And now it's showing me more information here. You can maybe read this key down here, but it's kind of showing a graph for those strong buys versus the sells and et cetera. You can also see the price on here and the recommended mean and target price. But this is another just like useful thing that can, if you're considering shorting this security due to like your technical analysis, but then you come in here and you see that most analysts have it currently rated as a buy, then maybe that's something you would want to reconsider. There's a lot of different ways to utilize this data, and I'm not intending to tell any of you how you should trade. I just want you to know that there's a lot of information and resources available to you, inside of this platform. And then, there's a lot of different ways that you can actually utilize this data. All right, so if I go back here to our overview page, again, and kind of just keep going through it, I can also see like its relative valuation statistics here. And over here, we have estimates that are listed out, and I can change some of this around too. Well, within this page itself, I can change things. Also on the overview, it shows you, if I go up here on this bar that has additional things to open up, this is just like the very main overview page, but you can kind of go through here and change up some of the stuff that you're looking at within it as well, and how your overview page is laid out. So I've gone into like the overview for fundamentals, and now you can see all that here. And it's also kind of relayed where everything is. Let's see, so I can also scroll down, and another resource that I really like to use within Zenith on top of my technical analysis are the StarMine models. And StarMine models will utilize a lot of statistics and a lot of data to give ratings and valuations based on the specific StarMine models. And you can kind of scroll over them here and you'll get this little question mark that you can click on. So these are letting you know the main bullish StarMine models on Ford. And if I click it, this one specifically is letting me know the rankings for the StarMine's PIV ratio, and it's comparing it within its region on basically a scale of 1 to 100. And these are all bullish models. And then these are like some of the bearish models that are popping up. So like the price momentum for this one, it's currently has very poor price momentum percentage based off of other securities that are similar to it. But, you know, Ford is also such a large security that some of these you have to take in a different light or different setting, I should say. It's also letting you know that according to Ford's like financials and things of that nature, like it's at a high credit risk. And so you can get all that information as kind of just highlights and overviews here and learn more about them by clicking into them. You can also get a list of all the models because you'll see some of them are kind of, they're neither bullish or bearish. But this is something I like to look at as well. If I'm just comparing a few different companies and I don't want to, you know, be invested into too many trades at a time, I might come in and look at these StarMine models to help me decide like, okay, well, if I'm planning on going long, this one has more bullish ratings on the StarMine models than this other security. So that might be a reason I would choose this one over that one, or etc. A lot of stuff you can do here. You can learn a lot more about the StarMine model just kind of online and looking that up too. But these are actually very useful, I think. Again, just kind of scrolling through here, we also have events and other things that are popping up here. So really, this is giving you just a huge overview of a specific security that we've pulled up. But there's a lot more here too. So I've kind of the 360 menu, as they call it, you can go into that for a certain security. So I've clicked on that here, and I can look into a lot of that stuff kind of condensed down in here. So if I wanted to see stuff that's within the estimates, it's letting me know the pages for that, for company news, for market news, different real-time monitoring apps. So if I wanted to see, like, say, the options for Ford, this is one way I could access them. I could go into the Option Watch app for Ford. So I've clicked on that. And now, just to kind of show this to you guys real quick, you get a ton of different options data in here. Options Watch is one of the main apps for that. It's currently on Ford because that's where I accessed it from. But if I just wanted to go into the Option Watch app, again, I could just type in like options up here, and it will let me know some of the options for that. Another popular options app, actually, while I'm on it, I typed that in wrong, is the most. So if I want to see most traded options, I clicked that. It actually opened up in the background here. So there's another app that's called, most for options. And I just wanted to make sure I showed this one to you guys as well. You can see like put call ratios, open interest lines. You can apply certain indicators and things on the options. You can also put filters on here too for, you know, volume, lot size, the option price, strike price, whether it's a put call, the exchange it's on, the periodicity, etc. That's all available to you here inside of Zenith. So you get all that data too. Let's see. Where was I at in here? Okay, so lots of other applications to open up with that as well. And there's multiple ways of accessing all this information too. The breakdown we're going through today is if you're looking at a specific company and you want to access a lot of it, that's what this is kind of showing. So I can also see like index movers that it's in relation to. There's a time and sales app on here as well. So I'll go ahead and open up the time and sales just so you guys can see that. All right, so in here, you're seeing we have like basically every time and sell. You can see the trade volume. You can see the bid size, the ask size, the best bid and ask as well. Just a lot of information to kind of pull up in here. You can also, from within the time and sales app, open up the volume at price. So a lot of people I know like to kind of utilize that information. You can look at the volume weighted average price from within here as well. I know this is something a lot of people ask for. Volume at price, another popular thing that a lot of people like to utilize, and some people don't know that we have this available and it's in here. Money flow, we have the lift and hit, all sorts of different things related to time and sales are in here, and I can look at the current session, or I can go in and I can look at custom days or dates, so I can look at historical data, I can look at pre-market and post-market in here as well. So another great tool and feature within here. I'm going to go ahead and close that down and go back to our list here. Again, this is the 360 menu, so it has pretty much everything kind of just laid out in here. Again, we have all the fundamentals, debt, equity, derivatives, its peers, key links, etc. Another useful way of kind of accessing a lot of that as well is just on the overview page here for Ford. If I go through here, I can also access the news in this form, or like price and charts. So anything related to pricing and charting. And again, Zenith does have access to charts. Probably the most popular one overall is the financial chart. So I'm clicking to open that up. And I'll say too, Zenith there's a lot of data in here, a lot of stuff being processed, but it's normally pretty much blazing fast. The only time I ever experience it being slow is when we're broadcasting. So unfortunately, just when I'm doing the demos, sometimes it's a little slower than other times. But as long as you have a decent computer, and nowadays technology and computers have gone such a long ways, as long as you've bought a computer within the last few years or so, it's very likely it would be able to handle the platform. We recommend a minimum of 8 gigabytes of RAM. 16 is going to be a lot better if you can get that. And then a processor, we generally recommend like an i5. Well, I think I recommended it as an i7 with 8 cores, but the minimum is like an i5 with like 4 cores or so. And for some reason, I don't know why this chart doesn't want to open for me. Here we go. I might have clicked on the wrong one, actually, now that I'm realizing it. So here is just like a real basic chart inside of Zenith, but then you can go in and you can apply all sorts of different analysis. So I clicked on the analysis here, and I can come in and I can put on, Bollinger Bands, for example. So I'll go ahead and just apply that. And I actually might not have applied that. Oops. There we go. So I can turn on like Bollinger Bands or other basic forms of analysis. There's also event markers. I kind of mentioned this earlier when I was talking about charts. So if I wanted to see when dividends were paid out, I can put the little dividends on my chart here. I can also go in and I can put in like earnings. So if you want to see earnings on your chart and then kind of see what happened to the price after earnings were released, looks like earnings come out and Ford has gone down the last several times here. But all sorts of other kind of unique things that you can do in here, but this isn't the only charting app. There's other charting apps kind of just right under this price and chart. Like I mentioned earlier, we have like volume weighted average price and other things, but there's also other apps within Zenith, and I'm trying not to bounce around too much, but just to kind of show you guys, if I go up here, you can look at my apps, like the ones that you've saved, the most popular ones, or there's a list here. If I click charting, this pulls up a bunch of the different charting apps that are available in here. Another one that I really like that I had kind of mentioned earlier are the seasonality charts. So I can pull this up, and now this is, there's several years up here. This has the last 5 years applied, and I can see the price where it was at, what was going on here. So this kind of lets me know, let's judge seasonality. Yes. For some securities, in December, they might often be going up, like if it's the holiday season. So you have like November and December, a lot of people buying gifts, things of that nature. Maybe a security is more likely to go up. So this kind of lets you look at it like you can see here for, what are these years that I have turned on? So in 2021, 2020, I believe the blue is, yep, 2020, and then purple, like you can see all these kind of moving together right here. And sometimes you see that, hey, this doesn't have a lot of seasonality, and that's okay too. That's data. That's all we're looking for here is data. But yeah, that is another charting service that I really like within here. Let's see. Okay, I'm about halfway on time, so I'm going to go ahead and close that out. Oops, actually, I didn't mean to close Ford out. So let's go ahead and just open that back up by typing in F. Here's my overview. So back up here, again, estimates and different tabs I can access that way. Financials, like you can look at income statements and balance sheets and get like definitive financials and things in here too. So that can be very useful. I'm going to go ahead and just open that up. Let that load while I kind of go over some of the other things. You can look at the events in here. You can see ownership, you know, who owns the most shares of it or what holdings they're within and things of that nature. You can look at their debt and see how that's structured, as well as their peers and derivatives and filings. Coming back to this income statement. So this is letting me know the statement's annual in millions of US dollars. But you can see for the last several years, you can see their total revenue, the cost of that, their gross profit, their operating income. You can get all of this data. Another thing you'll notice on most pages, let me scroll this back up so I can hit show all here or hide all. But another thing you'll see on most pages is this option to download to Excel. So I can take this data, I can put it into Excel, and then I can work with it in there. You can also take most of the data from inside of Zenith and basically just copy it and then paste it into the Refinitiv Excel program, and it'll update that data automatically in Excel. So there's formulas that are associated and created to work inside of Excel, so you can view all this data and create your own custom pages in Excel too. So that's a really cool feature that's often overlooked. Another one of those features I don't think gets utilized enough. All right, so that is kind of like a company overview and how you would look at that and ways to kind of go through and access a lot of data. And again, I know there's a lot going on there, but it's really that easy to just type in the symbol or type in the name of the company if you don't know it, and then just kind of start going through some of these pages and just kind of learn or read about things to figure out kind of what's going on in here. And soon you'll find where all the useful information for you is, and you can start to customize these pages to be set up in the way that's going to be the most useful for you, excuse me, and your analysis. So let's also go in here. So I'm going to go up to the top just to kind of show you guys this, and there's a question mark up here. And so you can also come into here and you can go in and like turn on quick tips when you're inside of Zenith too. So if you feel like things kind of are a lot, it's letting you know, okay, this is where the icon menu is. This is where you access your workspaces and et cetera. And you can like click into those things and then it tells you about them. There's also like some online help and other things available in there as well. Or of course, you can always come to the MetaStock website, metastock.com, and we'll help you out in our support channel there. Or if you have like sales or billing related questions, we have a sales chat as well that we can help you guys out in. So always happy to provide you with assistance and things of that nature. But now I've kind of showed you like a 360 view of a company and overall. Let's go back to our homepage here. And so I can continue to kind of show you guys some of the apps and features in here. And then what I want to make sure that I remember to do as well is just kind of show you guys how you could create your own kind of custom workspace really quickly and efficiently, and show you how great that looks, honestly. But first, let's check out some of these other really neat apps that are in here. So if I'm back on my equities page, we've looked at a couple of these things already, like the time and sales and options watch. We jumped into via other methods. We can also look at some economic things here as well. So I've just opened up our economic monitor simply by grabbing it out of that home page. I also could have, again, just typed it in up at the top, or I can have it saved in my apps here and open it up from my apps. But here we are inside of, let me make this bigger here. Yeah, okay, so here we are inside of Zenith, the economic monitor. And so I can see the indicator name, so basically the economic event that's going on. I can see right here like what country this applies to, and I can see the pricing that it's affecting and all of that. What I am going to do is come up here and just change some of these settings a little bit. So currently I have it showing me everything this week. I could change this though. Like I could make a custom range or the last year or the next year coming up, or I can do the week ahead, etc. You can choose the event types. Maybe you don't care about agriculture or government sector or things of that nature. You could turn certain things off. So you know what, let's just look at agriculture and bank statistics. Search items, you can put in specific search items if you want to look for those. So that option's there as well. I can also come in and manage the columns. So the different things that I want to see in here within the columns themselves, I can turn those off or on. So let's like turn on the event type here, and that'll add an extra bar for the event type. Let's see, what else was I doing here? Okay, another thing that I personally really like to apply. So in this tab here, these bars you're seeing, this is letting you know, okay, do you want to look at things with a low market impact, yes or no? With a medium market impact, some things maybe might not be rated. Do you still want to see those? So I'm going to turn everything off except for a high market impact. I'm going to hit update. So this will apply all the settings I just applied or selected. And now everything that it's showing me is considered to have a high market impact. So this might have a large effect on the price. So I can have all these listed out here. It lets me know some of the info on them, but really if I want to get more information on it, I can just click into it. So I can click on the interest rate. It pulls this up. This one's for the Nigeria interest rate, what it's done historically, what's going on with it, the prior rates on it, etc. I can also come in here, and if I wanted to read the press release about it, I can simply just click on this press release button, and it's going to go ahead and pop that open for me, and I can learn about it in here. And now here's like the official releases for that. Also, again, you'll notice we have this Excel download button, so I can download this with real-time data with the formulas into Excel, or if I just want the ones that I have selected right now to kind of save in a list in there, I can do it that way too. So that's always very useful. You can also, oops, maybe I didn't want to do that. You can also add these to your calendar. So I've done that as well. I meant to click on this switch to calendar view so you can see it in this formatting. Again, though, I turned off a lot of stuff, so we're not having a lot show up. But if I selected more things, and also I can open this up and I can choose just specific areas too. So if I didn't want to have everything and I maybe just wanted the United States, I could also apply that. So now we're going to have the United States, just the big things. Oops, where am I going with this? Oh, here we go. We just have this day. Let's look at a weekly view. Lots of different ways to kind of change this and what all you're looking at in here. So that's the economic monitor kind of in a nutshell. Let's click out of that one. We looked at, the options watch. You can also open up like index movers and do some like sector analysis stuff. So this has .dji. Don't think we have that one on this computer. So this opens it up. I can see stuff in here. I can see the different prices of things within here, and I can click into them and get additional information on them. I can view the sectors in this formatting view as well. I have it set up as a pie chart. I actually, let's just look at something else like the FTSE. Let's see what this one might look like. Maybe I wasn't supposed to include the dot there. Oh, here we go. Now it's generating. So I can also pull up other things, and you can see what's up and what's down just really quickly at a glance. Here we go. Now I clicked into sectors and it's loading for me. Things within the FTSE, everything's kind of down right now except for energy. And this chart is just really useful. If you scroll over things, you can see the securities that are included within that sector. And then you can change this around too. So how this looks, what you're actually looking at, what affects the charting, like the pie chart, etc. So lots of different things you can do. You can also change it to like a bar chart or a table as well. Whatever works best for you. You can likely kind of change it around and make it work for you. You can see a list of more indices in here. Another thing I really like is you get like large index, and like you can view retirement funds and things like that too. So like if I want to look at the, T. Rowe Price retirement fund, if you're planning to retire, in 20 years from now or et cetera, I can track that fund in here and look at the stuff that's within it and get ratings and information on it all inside of Zenith. So I do not only do I utilize Zenith for, trading purposes, if I'm swing or position trading or whatever it may be, I also use it for my more long-term investments and retirement and things of that nature. You can also get a lot of real estate data in here. And I like to kind of follow along with real estate, with rates, with other market indicators of that nature too. So lots of things that you can do inside of here outside of just, looking at standard pricing data or something of that nature. All right, jumping out of there, let's keep going and let's look at a couple of other things, because I'm hardly scratching the surface of everything that you can do in here. I'm just hoping to show you guys a few things that you might not have known were available to a retail trader such as yourself. And this is probably the place where you can find a lot of it. So I can also from here jump into foreign exchange just in my sidebar here. Or if I want to jump into look at index futures or current volatile indices, I can do that. So let's actually just do that as a quick example. While I have this load, I'm going to let it kind of come over here. All right, so yeah, again, volatile indices, letting you know the percent change, what it looks like. From here, again, I can almost always click into something to get more information on it, to learn more about it. It's actually kind of confusing that I have my slideshow open like that in the background. Oops, let me jump back in. Demo computer, so so I didn't know all the tabs that were open. I'm just going to jump back into the home page this way because that's nice and easy for me. All right, so I can also go in, like I mentioned, see other things. So if you just wanted to look at Islamic finance, you can do that as well. So it has a category for that, which I know is really important to some traders. Because again, this is global market stuff. I'm in the US, so I'm normally looking at US statistics or things of that nature. Well, I say normally, but I often am. All of my partners are outside of the US, so I'm using all sorts of things inside of here. But yeah, whatever region you may be in, wherever you're tuning in from, know that we probably have data for you inside of Zenith. There's also a lot of other kind of just really cool applications and things inside of here and different things you can utilize. There's some really neat search tools and features within here too that you can use. So advanced search tools, let's go ahead and even just check that out. So I can come in here and be very specific about the certain things that I'm searching for and apply really unique filters and things to help me kind of do my analysis on stuff. Another really popular app, let's see what kind of pre-made apps are in here for just monitoring the market overall, or if you have certain things you want to save somewhere. A lot of people will use our quote center inside of MetaStock, or I really like to use the Monitor app inside of Zenith, though. I'll oftentimes take my explorations or my system tests from MetaStock and I'll copy those and I'll put them inside of Excel to do some analysis in there. And then I'll also put them inside of Zenith to track them in here as well. So it's just nice to be able to use all the tools at my disposal, right? So in here, let's see if there's any example monitors. We'll just pop one open. So this is monitor 22, just a random one here, but you'll see it has, this one's actually just of the Dow Jones here. And so you'll notice I can actually open it up and then it tells me all the securities that are within it and then lets me track them in here. But this is far more advanced than just your standard price monitor. So the Monitor app has literally thousands of different indicators or research items, things of that nature. Let me double click inside of this to open it up. There we go. That you can apply. So I've just kind of added a column here to kind of show you guys some of the things you can add. And you'll notice there's a lot in here. This is a silly example, but for Japan fundamentals, there's over 7,600 items related to Japan fundamentals that I could track within this monitor, just to kind of give an example. But let me think of just some good ones off the top of my head. So here, 52-week high-low range. So you're not limited to just text in here. So you can also set up this like little bar that's showing me where these securities are sitting within their 52-week high-low range. Also, oops, if I can type correctly here. So if I wanted to know where the Bollinger upper band sits and the Bollinger lower band currently are on a security, I can track that inside of the monitor too. So it's not just pricing data and things of that nature. You can track a lot more inside of here. Again, I'll go into this like larger list to kind of just look at some things. Right, so graphs. If you wanted to see it, put even just like a price graph on here, you can kind of see a price graph, and you can kind of go in and change these as well, and kind of create your own little custom things. And then you can sort it via different methods as well, and different columns. You can also, so just to kind of show you how easy it is to add something, like say I wanted to look at Bitcoin. So I can just come down here, type in BTC. The symbol that we use is BTC equals basically. So that added Bitcoin. I do have this sorter still on, so let me actually turn that off. If I wanted to look at Ethereum, I can just type in ETH, it'll put in the ETH equals. I can also do some other cool sorting here. So I'm going to just come above it and right click and say that I want to insert a header row, and I'm going to name this one crypto. So I'll just have my crypto listed here. And then also I could add like Litecoin. So now I have my crypto. Maybe I also want to have like, oops. I clicked some wrong buttons. This keyboard's slightly different than my keyboard. Sorry, guys. What was I adding here? So if I wanted to also add one for like, just indices or whatever header I might want to put on there, I can do that. And then I can put different indices or cryptos in here, et cetera. I then also really like, I can just click on this arrow here and it's going to open it and close it and change it. I can also go into the setting wheel here and I can add specific classifications to it. And then like sub classifications as well to kind of help me better sort and manage my different lists here. And you can have tons of lists. I can just come in here to see my other ones and just start typing in what it is that I want to open. I can also, let's go here, I can save as, so web room test. So I'll save that as like my web room test. You can see it changed the name up here. And now I can easily open this up again and come back to it later. Like maybe you have one just to monitor your portfolio. Maybe you have one for your active trades and you can put in different things of that nature. All right, so then when you have this, there's other cool things that you can do with this monitored list as well. So one of the other biggest things about Zenith is the news that we have. So let's go ahead and open up the news app here. So I've opened up news. This knows the last thing I was kind of looking at was Bitcoin. So it actually applied this up at the top. Bitcoin's actually up quite a bit right now. And so this news monitor I opened, it currently has Bitcoin up here is the symbol that it's looking for. But I can add other things up here. Maybe I just don't even want to limit myself, to Bitcoin. So I delete that. And actually, if I can just remember really quick. Okay, I couldn't remember what I named my monitor there. So I named that web room test. So instead of looking at just Bitcoin news, maybe I wanted to put in web room test. So I've put this into the news monitor and now it's pulling up all the news from anything that I have inside of that monitor. So that's another good reason to, maybe have a monitor set up for your portfolio. And now there's some other really cool things that you can do within this news application. So one thing I really like, you can see like market sentiment is kind of listed over here for some news stories. So, and the securities within it. So without even having to like read the full story, I know, hey, this right here is primarily red. There's a lot of negative sentiment within this article or this video. that's right here, which I know that's a video because it has that little symbol there. You can also see different distinctions and things of that nature. You can see where it's coming from, like if it's coming from Twitter or Reuters or etc. And again, you can also really just easily click into stuff, and then you get the full news story is going to pop right up for you, and you can learn more about it in there. There's other things we can apply here too. So if I wanted to add some special things, like I want anything related to, oh, sorry, not gas. I meant to say, if anything is related to like, yeah, oil and gas or things of that nature, I want it to be highlighted in this color. So if there's anything talking about that, it's now highlighted in that color, so I can know that very quickly. I can also come down in here and put in other things. So like, do you know what? I know I have my full monitored list in here, but I'm really curious about whenever anything's happening with Bitcoin. So I also want to apply, whenever it's, so I know I still have everything in this monitored group here, but if it's Bitcoin now, it's going to show up in red. So that just catches my eye quickly and I can look at it and know if I want to go into it and read it or etc. And this is updating in real time. This is real time streaming headlines coming from Reuters. So all this stuff is coming out immediately. The current time, the last thing that popped up was 20 seconds ago. All right, there's also other things you can do in here. So if you want to see the most recent, or if you only want to have like important things show up, or I can come over to here to my little filter and I can apply additional filters. Maybe I only want breaking news alerts, or I only want things that have like transcripts attached to them. I can search just within the headline, or I can search within the headline and the story text for certain things. I can also choose the sources it's pulling my data from. And yeah, just come in here and change all sorts of different things to completely filter out this news pop-up to show exactly the things that I want to see when I want to see them. And now I'm starting to kind of show you guys how you can combine some things and do some really neat stuff. So now I'm going to take this kind of to the next level to show you how you might really kind of create your own custom workstation with all of this. So we already have in the background, we have my monitor app that I pulled up. Let's go ahead and close this other one. So I have this Webroom Test Monitor app here. I'm going to go ahead and take this news application that I have, and I'm going to just come and I'm going to drop it off right next to it. And it is actually currently extending on to my other monitor. So I'm just going to shorten that a little bit. Let's go ahead and bring that down to here. All right, so what I'm going to start to do is just, create my own kind of custom workspace and show you guys how this works. So another application I might want to have is just, a chart. So let's go ahead and open up the chart app. So I just typed in chart, selected it, put it here. You know what? I think I also want the seasonal chart. Oh, it's actually seasonality. I spell that wrong. Let's look at let's do a financial chart, actually one that's just a little bit different. I just wanted to show you guys. So I can also take another type of chart. And what I'm going to do is I'm going to drag this inside of this one over here. So now I actually have two charts. This one, we haven't turned anything on for it yet, but then also a financial chart. And then I can also just add new tabs by clicking the new tab within these windows too. So you can have windows within your windows all throughout. And then if I came in here, I could put other things like maybe I wanted a time in sales right here too. So I wanted all of these kind of linked in their own box down here. And then what other applications have we been using? So let's come into here. Another one I really like is just this sidebar. And I'm still, there's going to be a little bit of a wow factor here in just a little bit. So I still have to combine all of these. So let me pull up my sidebar and let's actually put it onto the side here. All right, so when I'm dropping these off on the other, they're kind of clicking together, and you can see I can move these all around, and I can resize them, and I can put windows within the windows, and et cetera, as you've seen me do so far. So let's kind of keep going here, and maybe I also want, let's look here, just company estimates. Oops. Let's go ahead and open up company estimates. And I'm going to open this up a little wider. Then you could also put like your economics stuff in here, really whatever you want. This is all just for example purposes. So not only can you, oops, I didn't fully connect those, I realize now. Let me, oh, it's because this window over here is slightly different sized. There we go. When I get that orange border around it, I know they've connected. Oh, it did not connect fully. There we go. Okay. And now, here's some of the magic that I wanted to show you guys. So there's this little link button up here in the top left. And what I'm going to do is I'm going to make this purple. And I'm saying anything else now that I make purple is going to be linked to that application. Not so that they move around together, but you'll see here in just a moment. So if I come and change all of these to purple, and I just have to do this one time, I would also have to in these other windows. So we're changing all these to purple. And now you'll notice if I come into, say, my monitored list here, and I go into Boeing, and I click on Boeing, now all of these other applications that have linked switch to Boeing. So now I have the Boeing company overview open down here in the bottom. I have the basic chart right here, and the additional financial chart that I opened up, as well as time and sales. They're all also now attached to Boeing. You'll see on the sidebar application over here, it has Boeing, it has some of their basic information. This tells me their upcoming events. I can see their earnings on here, their peers, all of that. It's also put Boeing into my news monitor here. So any news coming in for Boeing is now showing up here. If I just come in here and click on something else, so we clicked on Goldman Sachs, everything changes over instantly to Goldman Sachs. So really cool, unique thing that you can do there. And then you can have tons of different workspaces that are designed for different things too. And if you want to switch between them, that's super easy to do. So currently this one's highlighted up here. Hopefully Jeff wasn't using this COTR. But if I click on it again, it's just going to close them all super fast. Click on it again, opens them all back up. If I had another one open, so this was the home page that was already applied, so I could have another one that I could have fully kind of customized to my own settings, and that's opened up here. Like so. Another thing I actually want to mention, I know this is kind of jumping around a little bit, but I showed you guys company overviews and things of that nature. You can also do that for countries. So you can pull up like a country overview and then kind of do analysis starting from there in that method as well. Close that down. So here I opened up one for like the United States, right? And I have its overview. Well, now just to show this better example, if I want to go back into my other workplace, it's as easy as just clicking on the button there. Then I can come back into my home page, just by clicking on it here, and it opens this one back up. Now, there's other ways that you can kind of create these custom workspaces and things too. Like you can come into the menu item here and open up layouts, and you could select just like a basic 4-panel layout right here. And as soon as I click that, it gives me the option to like open up or search for the apps that I want in here. So if I wanted a time and sales, a snapshot, a training, and quote line, I actually don't have that app on here. So then it opens all of these up. I'd have to open up a security in here, but that's another just really easy way to create like a layout like that. We'll go ahead and close that one down. Another interesting thing you can do is just come into here and open up test templates and then also save your own type of templates. So I can come into here and it already has one that's like an equities template. So I'll just open that up. And now I can use these templates. You can also find services that are, okay, sorry, services created by, or workstations, I should say, from some of our partners. So some of our partners have created their own workstations, and you can go inside and then open up their workstations. Like I have some saved on my own login. And then whenever you log into Zenith on any account anywhere, it's gonna have all your stuff saved there. we recommend utilizing the version that you download to your computer, but you can also access this on any web browser. So if you have a device with a web browser, you can access it on there as well once you've set up your account through our website. And yeah, that's a general overview kind of how all of this works. What I'm going to do now is just cover the pricing real quick, and then I think that's going to round things up. So don't worry, even though they put over $1 billion into the creation of this platform, and some, if a professional or institution is using it on their full level, they might be paying thousands of dollars a month. Our retail pricing is nowhere near there. You can get started for as low as $110 on our FX package, which gives you the live real-time FX and news. Or if you want a regional plan, you want to be able to access like exchange fees for real-time live data for like the US market or futures or something of that nature. Those packages start at $165 plus their exchange fees. And as part of the current promotions and everything that we're doing right now, we are also offering an extended trial. So if you were to sign up with us right now and you pay for just 1 month of service, we'll give you the second month and the third month for free. So that's going to allow you 90 days to really test and learn the system. We'll even schedule a support session to have one of our support members kind of help you get everything set up and show you some of the tools and features within here. If you also wanted to pair it with MetaStock, it pairs perfectly with MetaStock. You can get MetaStock real time for $100 a month on a lease. So for as little as $210, you could have 3 months access to MetaStock real time and Zenith. And you can sign up for the Zenith 3-for-1 by going to our chat room, metastock.com/sales chat, or visit us at metastock.com/EK3-for-1 to get the 3-for-1 deal on just Zenith. We're also available on the phone, and it looks like that's my time. I am not seeing questions. And go to webinar or on YouTube. So I think I'm going to wrap it up and let Jeff come back and take over. He's right here. I should have probably passed it off slightly earlier, but here you go, Jeff. Thank you guys so much.
Bobby.
My pleasure.
All right. How we doing? Thank you, Bobby.
Yeah.
All right. Let's not push buttons that I don't mean to push. All right. As I get set down over here. All right. Perfect.
Very good.
All right. Let me just get situated a little bit here, guys. Hope everybody's doing great. Looks like we've got Jerry Allison ready to go. I'd love to see that. And we're going to give away a prize, though. We're going to give away a prize. So let me go ahead and turn down the speaker just a little bit here. All right. Hi, Michael. Good to see you. Thanks for saying hi. All right. Before we give away a prize, I want to say thank you to our sponsors, CMT Association, AAII, and Stocks and Commodities Magazine. Our next prize is going to be 2 of these books, Around the Horn by Adrian Mance. These books are $95 list value. They're great, though. They talk about all the patterns that we wrote that he wrote, that we put into his add-on. And we're going to give away 2 free copies of that. So in order to give away those prizes, what I need you to do is, you know what I need you to do. You need you to give up me 2 numbers. Give me a number in chat for GoToWebinar. Give me a number. It can be anywhere between 1 and what was the upper number that we had? I don't have it right here. Oh, yeah. $1 and 11,641. So give me any number between 1, 11,641. And based on the numbers that you give, we're going to pick out the prize winners. So I got a number from MetaStock. Wonder who that is. And while you guys are typing in those numbers to help me pick the winner, I do want to just mention we are MetaStock. Bobby did a great job talking about Zenith. It's such a cool application that they put together. You can do that as part of your extended trial as well. If you go to metastock.com/conf-promo, you can also give us a call at 800-882-3040 or metastock.com/sales chat. So let me go ahead and do this. Lee, 1777 is the number you picked. Thank you for participating. I need to plug my mouse back in. Hold on a sec. Okay. Cool beans. Let's see. 1777. Okay. And that'll give us a D Patil in the USA. So let me go ahead and make a note of that real quick on my handy dandy prize list. And then the next number I'll take out of YouTube, which is number 2. Okay, so this would be probably the very first person that actually registered for the conference, because number 1 is going to be, country. This one is Ioannis out of Greece. So congratulations, Ioannis out of Greece. I'm going to go ahead and kind of make a note of that real quick, and then we're going to move on. So hope everybody's enjoying themselves. I hope you're learning a lot of really cool stuff. We have another great presenter coming right up, and his name's Jerry Allison. Well, I did mention this a little bit earlier when we were kind of going through the schedule before the open, but I always invite Traders Tax Accounting to do presentations. And the reason I like to kind of bring it in here is the very first time I saw a presentation, it wasn't Jerry, and I think, I'm not going to try and, but what kind of really opened my mind in terms of kind of what might be hugely beneficial for you, depending on kind of how much you're trading, how often you're trading, et cetera, et cetera, et cetera. It may be hugely beneficial for you to incorporate as a business. And that's what Jerry's going to talk to you about today as we get him started. And so Jerry does a great job of kind of explaining it out and all that kind of stuff. This will be topical to you if you are here in the US, because that's kind of where they specialize. But if you are here in the US, a trader here in the US, you'll definitely want to pay attention, because he's going to give you some really good information about whether or not you should be trading this business. So Jerry, how you doing?
Doing fine. How about you, Jeff?
Good. Did I set that up okay?
Yeah, I think so. All right. See, I think I need to switch my screens, don't I?
Yep. I can't see it, but I can see the presenter view. And now I can see the proper view.
All right. So I think we're ready to go then. And it's hard to believe that we're only 81, or not even 81. It's what I just calculated, 51 days away from the beginning of the year.
Yeah, it's hard to believe. My goodness.
Incredible.
Yeah.
Nuts.
Somebody said 45 days to Christmas. I think that was a number that was given, or maybe it was 55. I don't know. Anyway,
I don't know where the year went, but we're coming up on the beginning of the year, and as everybody knows, the beginning of the year is tax time. So we need to start thinking about some of that stuff. So thanks, Jeff, for having me. I'm going to go ahead and start my presentation here. I am Jerry Allison, and excuse me, I'm a CPA with Traders Accounting, and I do work with traders every day. It's funny, I was just talking about tax season. We're still closing down kind of the 2022 tax season. There's still a few stragglers out there. And then as soon as we get that done, we've got to turn around and start prepping for the 2023 tax season. So we are keeping busy and doing a lot for traders, helping you save money with taxes and make sure that you're structured properly. All right, so this presentation is basically trading in 2023 tax strategies for you. And this webinar has been adapted so that it specifically fits traders. And so it doesn't matter what you're trading, there's probably something in this session for you. And we need to start thinking about setting things up for 2024. So we're going to cover all of that as we go along. Before we do that, we do have to make the lawyers happy and do a disclaimer here. So to the best of our knowledge, the information given in this presentation is accurate as of the presentation date. Tax changes happens constantly, so you should consult with your tax professional before using any of this. This presentation does not establish a professional or confidential relationship between you, myself, or Traders Accounting. And Traders Accounting is not a law firm, and the information here should not be construed as legal advice. Now, just before we really get into the meat of this thing, I want to give you some contact information. I did put a link into the chat, so if Jeff could make sure that's available to everyone, because I'm not sure if it went to everyone or just the presenters.
Just the presenters, I'll get it over there.
Okay, I appreciate that, Jeff. Our contact information, the website link there is what I did. Jeff is going to transfer into the chat. If you go to that web link, there is a free ebook that you can download. And it's going to talk about a lot of what I talk about here today. And it's also going to be dealing with other things, such as could be the different types of entities, things like that. So please, you certainly put that into your browser and go capture that ebook. Our phone number, 800-938-9513, so that you can avail yourself of that if you want to give us a call, set up an appointment. And if you want to just email, you can email us at learn@tradersaccounting.com. All right, let's go ahead and get into this presentation. And of course, all of you are trading and that you want to make money at trading. That's great. And that's why you're doing all of this. Well, what I have found over the past several years, if you're serious about trading, you need to treat it like a business. So we're going to do kind of a mini business 101 course, but this has a very much a trading angle to it. So we're going to talk about a couple very important business principles here before we start talking about taxes and structure and all that stuff. There's a couple things that you do need to be aware of. First of all, when you're talking business, you have to be concerned about cash flow. Money coming in, money going out. And this is a simple business issue here that we talk about. And you guys are all in this session. You're wanting to make money, and that's great. You're concerned about the cash coming in. Unfortunately, what a lot of people do is they don't take into account the cash going out. And you can have all the money you want coming in, but if it's going out, you're not making anything. And so we're going to be talking about taxes and expenses today. So this is a very important business principle. You need to be concerned with both sides of the equation, not just the cash coming in, but also the cash going out, and setting up a plan to minimize the cash going out, including taxes. The other thing is, when you make financial decisions for your trading, make them based on your business needs, not on the tax code. I talk to people all the time and consult with them, and one of the things that always comes up is trading is very psychological. It is. If you're in the wrong frame of mind, you're not going to trade right. If there's things bothering you, you're not going to trade right. Well, one of the things that creeps in is people start thinking about taxes, and that weighs heavily on them, and they start making decisions based upon the tax code. They want to, at the end of the year, like we are right now, they want to go out and start spending a bunch of money to get tax write-offs. And that never works out well, ever. Make a decision based on your business needs. If you need something for your business, if you need a new computer, if you need something else, go get it. But if you're just doing it for a tax write-off, don't do that. And I could tell you about stories about business owners who went out and bought stuff for a tax write-off, and then what they bought just sits in a corner. Sure, they got the tax write-off, but they ended up spending a ton of money in the process. So kind of keep all of this in mind, that you want to treat this as a business. And so what we're going to do here is try to make you aware of your tax and your protection options as we go through this presentation. First of all, we are going to talk about trader tax status, and this applies to any trader. If you trade stocks, options, futures, Forex, cryptocurrency, it doesn't matter. Trader tax status can apply to you. So we're going to talk about that first. And then we will talk about entities. Jeff mentioned entities a little bit ago. Some entities work better than others, and we've got to be very careful about how we set this up. Or otherwise, we got to go back and change everything. It may not be beneficial to you if you set it up wrong. And finally, we're going to talk about the mark-to-market election. This is only for stocks and options traders. So we're going to cover these 3 topics, and then at the end I'll do a summary. And then also I've added a feature here, just a couple minutes on things we're watching, and then we'll open it up for questions and also put the contact information back up on the screen. So first of all, let's talk about trader tax status. This is something that's mentioned with the IRS. It's in publication 550. And if you want to, you can go to the IRS website and download publication 550. It has everything to do with investing. Interest, dividends, bonds, stocks, options, futures, everything is in there. Now, trader tax status is an option. It's a choice that allows you to deduct trading expenses, provide the criteria are met. So you get to choose whether you want to deduct expenses or not if you meet the criteria. Now, why would you want to do that? Keep in mind what we talked about a little bit ago. Cash flow. You want to keep cash from going out. You want to keep your taxes from going out if possible. And deducting these trading expenses will allow you to save on taxes, retain some of that money, and then you can take that money and reinvest it or use it to live on, whatever you're going to do. But it is a choice. You can do it or not do it. However, the criteria actually come out of court cases. If you read through publication 550, they give some extremely general qualifications. And I think the IRS sometimes does that so that it gives their examiners a lot of flexibility on what to deny and what not to deny. So we end up going to court cases to show what constitutes trader tax status. What do you need to do in order to have trader tax status? And there's actually 3 qualifications. And if you're going to trade individually, you need to meet all 3 of these qualifications. First of all, you need to have over 720 trades in a year. Now, that is one criteria that came out of a court case. What happens if you don't meet that? Well, if you're close to it, the IRS might give it to you. If you're not close to it, you may have some problems with if they ever come in. By the way, the only way to prove that, or the IRS is going to question this, is if they come in and examine your return. So this is not something that is going to trigger things necessarily. They have to come in and then you have to prove this stuff. So first of all, you have to have 720 trades per year. Secondly, there has to be trading in over 75% of the trading days per year. So if you're thinking, how many trading days to that? I calculated one time, it's about 189 days out of the year that you actually have to have some trades in. So you can take some time off. Now, if you read through publication 550, the general concept of this is IRS wants you to treat this like a business. Guess what I just started talking about? This needs to be treated like a business. And the court said in order to treat it like a business, you've got to be trading 3/4 of the year. You can take some time off, but you can't be taking significant time off. Be like any other business, if you owned a restaurant or an auto mechanic shop or anything like that, you're not going to take half the year off. You're going to be devoting yourself to that business. Well, they want you to be doing the same thing here. And most of you already do that. The third criteria is you have to be spending 500 hours in trading, research, and education. So the time you're spending here certainly is education, and keep track of that. Trading, obviously, research. A lot of you do research and use these programs to actually do your research. Keep track of your time in doing that. If you watch a YouTube video, or if you go into a chat room to talk about with a group of investors about what to trade, what not to trade, things like that, keep track of that time. Now, this last one, if you were to prove that to an IRS examiner, you would need to keep a logbook. So I would encourage you to keep some type of logbook. There's no specific format. If you're a paper and pencil person, keep it in like a journal. If you want to, keep it on a spreadsheet on your computer or a database or whatever is convenient for you. The format is not as critical as the fact that you keep something. Now, the first two criteria here, those are easily provable by your monthly statements. And so if an IRS examiner ever comes in, you can just hand them the monthly statements and say, you figure it out. But the hours, you really need to have some type of accounting there, some type of a logbook. So these allow you to actually deduct expenses on your tax return. And so if you meet all three of these, you can go back and you can amend your prior year's tax returns back to 2020 if you want, and go back and deduct those expenses. But please listen to the rest of this presentation before you start jumping into anything. But the tax savings you have depend upon your current tax bracket. So if you're in the 35% tax bracket, you're going to save more, in other words, 35 cents on the dollar for the expenses you deduct, as opposed to being in the 22% tax bracket. So you're only saving 22 cents on the dollar there. But saving on taxes is very important. Remember that cash flow, got to keep that money from going out. So this is a wonderful thing if you meet the criteria. And these 720 trades, remember, that can be anything. So it can be spread out over Forex and stocks and futures if you want. It's just, if you're trading a lot of stuff, that's fine. It counts. Remember, this is just trading in general. However, there's a warning. And I would be very remiss if I did not give you the warning here. If a person does this on their personal tax return, you're deducting trading expenses on your personal tax return, you have to use the Schedule C. Now, the expenses go on the Schedule C. Your gains and losses, whatever they are, go elsewhere on the return. It depends on what the character of them. So we won't get into that, but they don't go on the Schedule C. The only thing goes on the Schedule C are your expenses. Now, Schedule Cs are very problematic, though, as an individual. First thing is they increase your audit risk. Schedule Cs are the #1 most audited thing by the IRS. Now, that doesn't guarantee that you're going to be audited, but it does raise the risk. I've been in accounting for 30, 35 years, and every audit, with the exception of one, involved a Schedule C. So it is something that they look at. Schedule Cs have been abused for decades by people. And when you put numbers on a Schedule C, the IRS has no verification of them except to come back and ask you for them. So we have issues there. So that's the #1 thing that you do in a Schedule C. Anytime, it doesn't matter what business it is, Schedule C is going to increase the chance of being audited. #2, the home office deduction may not be obtainable. There are severe limitations on a Schedule C for the home office deduction. And for traders, those limitations really are important because you might be limited to just a percentage of your home office or your home mortgage interest and your real estate taxes. You can't even take a percentage of your rent in a lot of cases if you're renting. You can't even use the safe harbor, which is $5 a square foot. You can't use that either in a lot of cases. And so you are limited to a percentage of mortgage interest and real estate taxes. And if you don't have those, you can't take anything. So Schedule C has a limiting effect on that home office deduction for traders. #3, there may be no asset protection. If you invest as an individual, then if something happens, you get in a car accident that was your fault, or somebody gets hurt on your property and the insurance doesn't cover it all, then they can come after a lot of your assets, including your trading assets. #4, it's difficult to justify having a W-2 job and being an active trader. Now, I'm not saying that it's wrong to do. No, and I understand that, you got a job, you got to go to it, but you also like to trade and you want to make supplemental money. That's fine. The IRS has a problem with it. And so we find conflicts all the time with those. So if you're doing this on your personal tax return, trying to deduct these tax expenses, you could run into these problems very likely here. So what is the answer to that? Well, that actually gets into our second topic here. It has to do with entities. Now, there's all kinds of entities here, of sole proprietorship, single member LLC, general partnership, limited partnership, multi-member LLC, S corporation. I'm not going to read them all. Most of these really, it depends on your situation, but most of these aren't going to work for most people. The sole proprietorship, the first one, that's actually what we just talked about, deducting expenses on your Schedule C. And that's, we kind of advise people get away from that for all the reasons I cited in the last slide. You get away from it so you can decrease that audit risk. You can use the home office deduction. We don't like seeing Schedule C's on a tax return because it can create problems with the IRS. So the single sole proprietorship and the single member LLC don't do much for a trader. Now, I just mentioned the sole proprietorship. That's what we were talking about. A single member LLC is really a single owner LLC. And the only thing it does, it gives you some asset protection. That's it. If you're going to deduct expenses for a single member LLC, they go right back on your Schedule C again. The only thing you've got is an employer identification number and a name of a business. It really doesn't do anything for you tax-wise. And the revenue, the gains and losses, they go on the other forms like they're supposed to. A single member LLC, tax-wise, looks identical to a sole proprietorship. Doesn't do a thing for you except maybe asset protection. So what type of entity? Well, the type of entity that's right for you depends upon your situation. I'm going to talk about the most common type that we talk about, but it is very important that we discuss what the situations are and what you've got going and what your future objectives are as to which type of entity is important. So what we recommend often is the multi-member LLC. That's a partnership, but it is an LLC partnership. Now, why do we recommend that? Well, let me talk to you about the cons of this before I talk to you about the pros, because I'm one person that I want to make sure that everybody understands what's going on and that there are some negatives. There's always negatives to everything, but let's look at the cons of this thing. You do have a yearly multi-member LLC fee. Now you do have, if you've got a single member, you also have a yearly fee generally. In most states, there's a yearly fee. Some fees don't require it, a yearly fee, but in a lot of states, you do have a yearly LLC fee. Now, also with a multi-member LLC, a partnership, you do have a tax prep fee because you have to fill out and file a partnership return. Now, the business itself, the partnership, doesn't pay the taxes. That's a pass-through entity. So it's just an informational return that goes to the IRS, and then you put the information on your personal return with what's called a K-1. I mean, some of you are probably familiar with that. But you do have a tax prep fee to actually do that. So you got the yearly LLC fee, you got a tax prep fee, and then in order to trade under the LLC, you've got to move your trading accounts to the EIN of the LLC. And this is true in any entity. Well, it doesn't matter whether it's S Corp or C Corp, even a single member LLC. You got to move things under that EIN in order for them to be reported properly. And then once the brokers see that you've got a business, then they generally assess increased fees for that. So those are the three cons. Now, I'm going to talk about the first two specifically. The third one we can mitigate sometimes because a lot of people will juggle, at least use their personal account for like free real-time quotes and that, and then trade on their business side. So there's ways to get around some of those broker fees. Now, let's talk about the pros. Remember, this is an LLC partnership. And you may think, okay, well, what if I don't have a partner? Give me a minute and I'll talk about that, because there are even ways if you don't know a single person on the face of this earth. But let's talk about the pros first. First of all, LLC, you get asset protection. Yes, you get that with a single member LLC, but you get it also with the multi-member LLC. Very important because lawsuits inside the LLC can't get out, and lawsuits outside the LLC generally don't get in. Irish state's laws are different, but you do have asset protection. And some of you have very large trading accounts, so you want to protect them. And even if you don't have large, they're meaningful to you, and so you want to protect them. So that's number one. Number two, most people don't realize this, but when you have an LLC, you get to choose how you're going to be taxed. That's not true with other entities. When you set up a C Corp, that's how you're going to be taxed, C Corp, period. When you set up an S Corp, you can actually revoke the S Corp election, go back to a C Corp, but that's it. But with an LLC, you get to choose how you're going to be taxed. So a multi-member LLC, generally we recommend starts out a partnership. But when things start working out really well, we can file an election then for the company to be treated as an S corporation. Now that the company is still an LLC. That doesn't change. That's a state creation. We're just changing how it's being taxed with the IRS. So we change from partnership to an S corporation. We can even change to a C corporation later. And we can go back. If tax laws change, we can go back to a partnership or go back to an S corporation, whatever. You don't want to do this every year, but if tax laws change, with an LLC, you can change those taxation methods. And that is a very important flexibility tool that you can have in setting up your trading business. Number three, this is a big one, a reduction in IRS scrutiny. I mentioned that when you do things on your personal return, you have to report the expenses on your Schedule C. Now, some people just say, well, I'm just not going to report it on Schedule C, and I'm not going to worry about that. Well, that's fine. You can reduce your IRS scrutiny by not deducting your expenses on your personal tax return, but remember, you're losing out on the cash flow side. So by setting up a multi-member LLC or an S Corp or even a C Corp, you do get reduced IRS scrutiny. They tend to leave those businesses alone and because you're not doing a Schedule C anymore. Number four, home office deduction. This is actually a big one. When you have one of the other entities, a multi-member LLC, an S Corp, a C Corp, the home office deduction opens wide up. There are no limitations. And so then you get a percentage of mortgage interest, real estate taxes, or rent if you're renting, and your insurance and your utilities, including cell phone and, internet, HOA dues if you got those, repairs and maintenance. So there's a lot of things that open up here. And that's a very important deduction. Remember that, because I'm going to come back to that here in a couple minutes. Number five, another problem that this cures going into this multi-member LLC is it solves the W-2 trading issue. Remember I mentioned a little bit ago that if you trade as an individual and you report on your Schedule C the expenses, the IRS has a problem if you are having a full-time job and you are trading. And so this cures it because it moves the trading, at least the short-term trading, off into the multi-member LLC. And so it looks like now you're investing in this business while you still got your W-2 job. It takes care of that whole thing, and the IRS doesn't have as much of a problem with it. So this is something that's very significant as well. Number six, and I've got 7 of these actually, it solves the mark-to-market long-term, short-term dilemma. Now, I haven't talked about mark-to-market yet, but remember I mentioned mark-to-market is for stock and options traders. And if you're a stock and options trader and you make the mark-to-market election, there can be problems with long-term trading and short-term trading. Long-term is defined as a year or more. So if you're holding stuff that you're just holding it for long-term benefit, the IRS is going to try to put that under mark-to-market so that you end up paying taxes on unrealized gains. And you don't want that. And you would lose the long-term capital gains rate. It caps out at 20%. So we want to keep long-term and short-term stuff separate. And so by setting up this multi-member LLC, we can keep the long-term stuff on the personal side where you're just holding it. And the short-term stuff goes into the LLC where you've got the mark-to-market election. And you can actually, that's the best structure of getting all that done. Now, number 7, and I want to kind of get into this one for a little bit. And most people are surprised about this. The tax savings through the LLC, the multi-member LLC, can actually pay for itself. In other words, the refund that you get back from setting up this multi-member LLC can actually pay for the LLC's fees. And so I want to show you that right now. Now, by the way, we are not changing any tax brackets here. The partnership does not change tax brackets. The S Corp doesn't change any tax brackets. And a C Corp, some of you may have heard, there's problems with that. I won't discuss those right now, but there's some companies out there that are projecting those as being fantastic. They've got major problems, and so it's kind of steer away from C Corps. We do, but anyway, let's talk about how the government can actually pay for your LLC. If you already have yearly trading expenses, you may have data feeds, you may have education fees, you're paying to this conference, you've got home office deductions that I want to keep coming back to. You may have subscriptions to software, things like that. Those expenses, by deducting those, the refund that you get back can pay for your LLC fee and your tax prep fee. And I've got an example here to show you actually how that works. This is something that you can actually do. Matter of fact, the increased home office deduction alone, I've seen it happen, the increased home office deduction can get you enough of a refund to pay for these 2 extra expenses. Here's an example. Suppose a person lives in Illinois. The yearly LLC fee is $75 per year. So every year, excuse me, the company has to send in $75 to Illinois to renew the LLC license. And let's just assume the tax prep fee is $600 per year. I am just pulling that out of the air. I don't even know what our tax prep fee, quite frankly, because I don't deal with it, but let's just assume that. So that's a total of $675 extra each year. Now, let's also assume the person's in the 35% federal tax bracket and the 4.95% Illinois tax bracket. So a total of 39.95% in taxes. So doing the calculations, and I'll show you how this works here in a second, but doing the calculation, this person needs at least another $1,015 in trading expenses, in addition to the $675 just mentioned, to get the government to pay for the LLC. Now, you say, okay, $1,000 really is nothing. Let's go back to that home office deduction. Think about a percentage of your mortgage interest, a percentage of your real estate taxes, a percentage of your rent, a percentage of your insurance and your utilities. Most of you will get at least $1,000 there, right there. And the increase from going from Schedule C to here, then releasing that home office deduction can easily get you $1,000 in addition to the tax prep fee and the LLC fee can get you enough money to pay for the LLC. Here's how it works. Here's our proof. Recall the trader has $675 in LLC expenses. Tax prep fee of $600, LLC renewal of $75, and a tax rate of 39.95%. That's Illinois and federal combined. And we calculated that if they just get $1,015 in extra trading expenses, the refund is going to pay for the LLC. So here's the calculation. Total deductible expenses, you get the $675 coming from the extra LLC fees. And you've got the extra $1,015 that you have, let's say home office deduction. That's a total of $1,690 that you're going to be able to deduct now that you could not have deducted before. So you're going to write that $1,690 off on the partnership tax return. And when it comes to your personal return, that's going to be taxed or a reduction at 39.95% to get a $675 refund, which is the extra LLC fees, the tax return, and the Illinois licensing. So it is very, very possible that a multi-member LLC will pay for itself. Now, before we go on, you notice that I'm not specifying very closely S corporations and C corporations. C corporations, as I mentioned a little bit ago, have very significant issues. Some people look at that 21% tax rate and say, hey, that's the way to go. I would suggest you research the accumulated earnings tax. That's a second tax that can kick in. And that's usually the no-brainer for that. With S corporations, you are required to pay yourself a salary. So now you need a payroll company. You've got to file quarterly reports. You've got all kinds of payroll stuff going on. That is a requirement with S corporations. And quite frankly, for most traders, it's a hassle, which is why we suggest that you start with a partnership first. And then once the partnership becomes really successful, then we can go to the S corporation because you've got that foundation for income. And then we can then build the infrastructure and start talking about salary and 401ks and all kinds of stuff. But we got to start off simple first. So remember, with LLCs, you can change how you're going to be taxed. Okay, so that's for most people. But again, please talk to somebody and find out what's best for you before going and setting anything up. All right, let's move on to our third topic, the mark-to-market election. This is an election with the IRS for stock and options traders. This does not apply to futures traders, cryptocurrency, Forex, anything like that. It's just stock and options. Now, any business entity, including an individual, can make the election provided the trader tax status qualifications are met. So, now a lot of people get trader tax status and mark-to-market confused. They are not the same thing. Trader tax status allows you to deduct expenses, and anybody can do trader tax status as long as they're trading. Doesn't matter what they're trading. The mark-to-market election deals with the income side, and it's only for stock and options traders. But you have to meet those trader tax status requirements that we talked about. The 720 trades per year, that you have to be trading 75% of the trading days. You got to have 500 hours of trading, research, and education. So this is an election, and it eliminates wash sales. For those of you who traded options or options and stocks for very long, you know what wash sales are. Wash sales are a major pain to deal with at tax time, because basically what it is, I'll just give you the short version of it, it's deferred losses. The IRS says, well, if you buy back something under the same ticker symbol that you previously lost money on, and you do it within 30 days, then the loss on the first sale moves to the second sale. And if you're rapidly trading, like most day traders are, those wash sales keep moving in time and eventually can move over the December 31st timeframe, which means now you've got washes being pushed into next year, so you have to pay taxes on stuff that you actually lost money on this year. Mark-to-market eliminates that. It actually does something else. It actually looks at your account and says, okay, here's what the beginning value of your account was. Here's the ending value. If your account goes up, that's exactly what you pay tax on. If you lose money, that's what you get to write off. It's a very pure way of deciding what your tax liability is. Very accurate way, actually. Now, it also eliminates that $3,000 loss limitation. So if you make the mark-to-market election and you lose $20,000 in a year, you can write the whole $20,000 off that year and not just be limited to the $3,000 and then carry the rest forward. So mark-to-market is very advantageous. I've had clients who've written over $200,000 in losses off in a year. And if you have excess losses, they carry forward to the next year. But these clients have written off their entire W-2 income, pension income, whatever it is, and then any losses carry forward to the next year. So I think the mark-to-market election is very beneficial if you are a stock and options trader. Now, this is an election. It has to be filed with the IRS, and it has to be done at the beginning of a year. So for an individual, you cannot make the mark-to-market election for 2023. Your next window of opportunity is in 2024, and you have to do it between January 1st and April 15th. If you have an existing business that was formed prior to 2023, you will have to make this election between January 1st and generally March 15th. That's when the tax returns due. If it's C Corp, it could be April 15th. However, there is an exception here. If you form a brand new entity, so example, let's suppose you left here today and you signed up with your state and formed a new LLC today. You can make mark to market right away for that entity. So you would have your LLC, you move your trading assets over, and you could start trading with the mark to market election and have that right away. Now we're close to the end of the year, so getting that done, we could still probably get it done by December, and we do set up LLCs for people. I've seen them set up. Usually the official time frame is 2 to 4 weeks, but usually about a week or so, and they're usually set up. But this still can be done, and the mark-to-market election can be made, and then you've got everything ready to go January 1st. But that's up to you. So, but the election, unless it's a brand new entity, the election can't be made till the beginning of 2024. So let's kind of summarize this, and then we're going to talk about a little bit of other things here. First of all, trader tax status that allows you to deduct trading expenses if you qualify. So you've got to have 720 trades per year. You have to be trading in 75% of the trading days per year, and you've got to have a 500 hours of trading, research, and education. Forming a multi-member LLC provides asset protection, decreased audit scrutiny, and it could be free. You could get the government to pay for it. But again, make sure that you are talking to a tax professional to make sure that you are getting the right setup for you, because there could be problems. And we've had people come in and say, hey, I've got this situation. And I said, okay, the only way you can do this is with a C Corp. So, make sure that you talk to somebody first. And then finally, the mark-to-market election allows stocks and options traders to pay tax on what was really earned or write off entirely what was lost. So those three things there are the summary. Now, what I'm going to go before we get into the last slide actually has our contact information. And before we start taking questions, I've added this last slide, things to watch out for. These are traps that traders fall into. And so I want you to be aware of these. And these are three things that you need to be aware of. First of all, if you're trading through a prop firm, that changes everything we just talked about. Everything's off the table. Because what prop firms do, and for those of you who aren't familiar, basically you take tests and you try to qualify to trade the firm's money as well as some of your own. What they end up doing is, in most cases, they end up sending you a 1099 NEC for what was paid to you. And that converts everything. It's no longer gains and losses. Now you are an independent contractor and you now have self-employment income. So that changes everything. And you need to talk about that and make sure your tax professional knows about it when you go to talk to them about it. Second of all, this is a big trap that people fall into. Some options like SPX are treated like futures contracts. I've had clients who've been trading SPX all year. Matter of fact, last year, 2022, I talked to somebody here a couple of weeks ago. Well, it's while I was trading, it's still an option. Yes, but it's treated like a futures contract. SPX cannot be put under mark-to-market. It is treated like a futures contract, and you get the 60-40 split. 60% of it is long-term capital gains and 40% is short-term, and that does not fall under mark-to-market. Now, SPY is normal options. That's fine. So you have to be careful about what you're trading, because you get to the end of the year and realize, oh, I've been trading SPX all year long. Why am I not getting the benefit from mark-to-market? Well, it's because it's treated like a futures contract. So watch out for that one. This is a big one that is really coming up and creating some issues. Trading other people's money or even giving them advice can be a major problem. We have people usually once every other week, sometimes once a week, calling and saying, hey, I want to trade somebody else's money. And we say, no, stay away from that. The SEC has particular guidelines that if you even tell somebody, well, you need to trade this stock here, or you need to trade this over here, you now become an advisor. And even more so if you're trading their money. And you've got to have licensing if they classify you as an advisor. And not just is that a problem, but there's other federal regulations as well as state regulations. You can get yourself into a world of trouble, and we've had it happen at Traders Accounting, not with us personally, but with one of our clients. So steer away from trading other people's money. It creates all kinds of problems. There are ways to do it, but you need to have somebody seriously who knows what's going on talk to you about it. Okay, last slide here, our contact information. Excuse me. Website, again, if you go to that website link and you type in tradersaccounting.com and that link, then you will get that free ebook if you want to download that. And our phone number is 800-938, 9513, and then our email at learn@tradersaccounting.com. I don't know why I'm stuttering all of a sudden. So let's going to open this up to the floor to any tax questions, and then Jeff can come back on. Does anybody have any questions that they would like to ask at this point in time?
Yeah, they do, in fact. Let's see. And I'm going to go ahead and while you're answering, I'll ask the question and I'll get kind of some of the links and stuff out. Right now, Oscar wants to know what happens with mark to market if someone trades stocks, options, and futures. Thanks for the question, Oscar.
No, very good question, Oscar. Actually, what happens is you can make the mark-to-market election and it will only cover the stocks and options, and you can still trade the futures. They just fall outside. We have a lot of clients that actually, they trade crypto, they trade Forex, they trade futures, and they trade stocks and options, and the mark-to-market covers the stocks and options, but everything else is then treated the way it normally is.
Cool. Let's see. Will the 3,000 annual cap loss limitation ever be increased or indexed to inflation? Good question, Jim.
That is a good question. And there's been people hoping for that for years. And I don't see anything on the horizon. Quite frankly, with Congress being the way it is, I don't see any tax legislation coming down the pike. Even next year, it'll probably be 2025 before we get any serious tax changes.
Lindsay wants to know, does doing an MMLLC put you at professional trader status? Because with regulations and fees and all that, that's what I'm afraid of.
It depends on how you're classified. You're not going to be classified with the government that way. You might be classified that way with your broker. So that could be an issue, but as far as the government's concerned, you're not going to go to a professional trader status.
Yugs wants to know if you'll display the summary slide again.
Okay, let me back up here. And try that one more time. And there we go. There we go. Okay, we got it up there.
Somebody said the link didn't work. I just put it back in there, John. Okay. And it does work for me. So maybe there's a typo or something like that.
Possibly, or try a different browser, possibly. Okay. There could be several different things going on.
Barry said, I just got myself an LLC, but may not be an LLC. Is it too late to change that?
Yeah, do this actually. Your second partner could be an irrevocable trust. We set up LLCs all the time for single members, and they have an irrevocable trust, and then those two are then the partners in the multi-member LLC. Now, the irrevocable trust gets a percentage of the earnings, but it's all on paper. It doesn't have to be paid in. Or there's a couple other ways of doing it. If you have an existing business, then that business could be a partner in the multi-member LLC. There's a tons of ways to do it. So don't let being a single person limit you from setting up a multi-member LLC.
Let's say Amir says, if you trade futures only, do you deduct your losses, or is it limited to $3,000 per year?
Futures are going to be limited to $3,000 per year. There is no way to get around that, unfortunately. That's the downside to trading futures. is that you have to you get limited on the losses, but the upside is when you start making money, your 60% of that profit is now capped at 20%, the long-term capital gains rate, and that's a huge benefit.
Jocelyn says, you mentioned that MMLLC is an entity comprising of you and a partner, even if you don't know anyone. How can this be set up?
Yeah, and just as I mentioned, we can do an irrevocable trust. Another option is that you could set up a single member LLC and the multi-member LLC, and the single member LLC could be your second partner. For those of you who are wondering, usually husband, spouse, that's enough for a partnership. Or some people go get a family member as a 1% partner. There's a lot of different ways to do it, but it can be done, believe it or not.
Okay. Barry wants to know if it's okay to set up an MMLLC with his wife.
Yes.
I'm laughing because that's a lot of consonants to pronounce it.
It is. But yeah, actually, most of our LLC partnerships are husband-wife teams where one spouse doesn't do any trading whatsoever. And if you're wondering about percentages, sometimes they set it up as 50-50, sometimes they set it up 99-1, and everything in between. It really doesn't matter about the percentages, because if you're filing a joint return, everything comes back on your personal return anyway at 100%. So it really doesn't matter whose it is.
Whitney asks, what about having the corporation be the 100% owner of the LLC and you are 100% owner of the corporation? I'd like to request a diagram.
No, I've got the diagram in my head. It depends if you have an S corporation or a C corporation. If it's an S corporation, that would be fine, and that's a good thing. But again, with the S corporation, you have the salary component. You're required to pay yourself a salary. If it's a C corp, that's doable, but getting money out of a C corp is extremely bad. You either have to pay yourself a salary or you have to take dividends, which get double taxed. C corps are really, in my opinion, are things to be avoided. So when you talk about a corporation, you need to be very careful about that.
John, I am always impressed by the amount of questions you get, Jerry. Just
good,
like that. Yeah, no, it's great. It tells me that people kind of like it opens their eyes. John wants to know, what about the holding your trades for a maximum of 30 days? What about holding your trades a maximum of 30 days? Is there a rule around that?
No, there's really not. We actually have a lot of swing traders who are holding their trades for 30, 45 days, things like that, and they still make the mark-to-market election. I realize that the IRS, they tend, and you read about this, they tend to want the trades to be less than 30 days, but they don't really give anybody a problem over it if you go 30 to 45 days or even a couple months. It's really not that big of a deal.
All right. Barry says, can you clarify tax return? Use EIN. Does the tax return use EIN if you have LLC, and do you no longer use your SSN? So,
if you file, I'm certain this is a personal return. So if you file under your Social Security number, then that is a sole proprietorship, and that is basically under you. If you use the EIN, then you are filing underneath the single member LLC. But it really doesn't make any difference tax-wise, quite frankly.
Jörg wants to know, how does it affect inheritance tax if it's a husband and wife?
That's a question that actually's got a lot of components to it. It really doesn't affect your inheritance tax, except that you've got this ownership in the multi-member LLC. So basically what the business is worth is part of the estate. Now, if you've got a revocable trust where you have all your assets, personal assets in the revocable trust, you would need to put the ownership of the partnership shares in that revocable trust. Now, that's not changing it so that the revocable trust owns it. It's a legal document is all. You have to put it on the list. So it really shouldn't change your estate all that much.
All right. Last question I think we have time for. Do things change if you're a scalper or if you scalp as a trader?
No, actually, scalpers and day traders and even swing traders, it really from the IRS perspective, it's all the same thing. And we do have a lot of scalpers there that, skim that stuff off, and that's great. But it really doesn't change anything tax-wise.
Cool. That was actually all of the questions. I said this is the last question we have time for, but we fit them all in. There's one more comment. Barry wanted to say, and I want you to hear this. He wanted you to say that this session was great.
Good. Thank you, Barry. I appreciate it. I appreciate everybody who attended today.
Yeah, definitely. Me too. And I appreciate your coming in. I love the questions. Like I said initially when we started the very first time, and I think it was like the very first time Traders Tax Accounting presented in one of our rooms, I was like, there are so many things that I just never thought of. So it's always great to have you in here.
All right. Well, I appreciate it, Jeff. It's nice being here.
All right. Very good. With that being said, the information on the free ebook, the phone number, the contact information, all that stuff is in the chats. So reach out if you have more questions or want to get set up. Thank you, Jerry.
All right. You're very welcome. Y'all have a great weekend.
All right. Very cool. Let's go ahead and kind of move a little bit. I'm going to go ahead and change. I'm going to turn my light on. And then I'm going to turn my camera on. And then we're going to go ahead and turn on take the screen share. Okay. And then we'll show my screen. And then we'll go from right here. Okay. All right, very cool. I was making sure I had replaced Tyler with Dan because he's going to be talking to us. Oscar says, thank you very much. Yeah, he does such a good job. It's so clear kind of when he goes through and explains stuff. So lastly, I wanted to say that we are MetaStock. Yes, you probably figured it out. We have won 30 years in a row best software in our price category for a MetaStock program. Scanning is something we do very well. Testing trading ideas is something we do really well. Our patented forecaster is something that we do very well. So real-time commentary, alerts, all that kind of stuff. Pricing here in the US is $69 per month for the DC version, and then it goes up for that to starting about $210 or so for the real-time version. What we're doing here is we're offering an extended trial. So if you pay for a month, we'll give you a second and third month for free. You can do that at metastock.com/conf promo. You can do that at metastock.com/sales chat. And you can give us a call at 800-882-3040. And you know what time it is. It's prize time. So what I need from you guys is to give me a number. You know what's going on. We've been doing this for 6 days now. So what I would like you to do is give me a number between 1 and 11,600. Oh, actually, you know what? Hold that thought. I haven't done this yet today. And a couple times yesterday, I would actually just kind of scroll through randomly and pick out a couple questions for people that were asking questions and here during the day. And I like that because it kind of rewards you for being here. It rewards you for participating. And if you're on YouTube and asking questions, it really helps with the algorithm as well. So what we're going to do is instead of numbers, don't worry about that. I'm going to go ahead and tell you what the prize is, and then I'm going to pick a random question from sometime today, okay? And that'll be the winner. The prize that we're going to give away is a one-on-one consulting with Rick Sadler. Rick Sadler's coming in tomorrow. He's going to talk about his hit and run candlestick methods, and he does a really, really good job. We're going to give away basically a personal coaching with him, valued at about $350. So let's go ahead. I'm going to do this as fairly as I can. I'm going to look over here, see how our sales team is doing over there, see how our support team is doing over there. I've scrolled enough. And actually, I didn't scroll at all. Let's do that again. Okay. Wait a minute. This isn't okay. All right. This is a totally random method. Okay. The winner for that one is Michael R., who made the comment of 34.18. So I think that was back when Sonny Harris was presenting maybe. So Michael, thanks for participating. If you're still in the chat, say hi. And I'm going to go ahead and copy that out. We're going to do the same thing but we're going to do it in the YouTube chat. Now with the YouTube, I may or may not have your information. So I'm going to call out your username, and then you're going to need to email me at jeffrey.gibby@metastock.com. And the person that's going to win that one is a person by the name of Jerome Nevins, who chimed in this morning saying, Jerry Nevins here. So I think I got towards the top of the chat there. So Jerry, if you email me, MetaStock's going to put my email in the chat, jeffrey.gibby@metastock.com. You're welcome to give me an email. Just say, hey, I'm Jerry. I won the prize. And then that way I can make sure you get it. Okay. Michael, what's going to happen for you is I'm just going to kind of put your information in the spreadsheet. Rick will reach out to you early next week after I tell him who the prize winners are. So there you go. Very good. And a quick shout out to one of our sponsors. I'm going to do CMT this time because CMT is speaking next. But CMT, when Tyler comes in, I'm really excited because we normally have Tyler come in. I don't think I've had Stan come into the room before. But Tyler comes in and he does a really good job, and he talks about really a lot of different technical things. But then he talks about how if you're looking to manage money, if you have assets under management and you want more, if you're looking for more responsibilities in the trading business, how much having a designation of CMT could help you with that. And so if you'd like to find out more about getting a CMT at the end of your name, go to cmtassociation.org, or you can call them. The phone number there is 646-652-3300. For me, I'd like to say thank you to CMT. They're a hugely well-respected organization. We like the fact that they've been sponsoring our conferences now for, I think, since 2020, but I could be wrong there. But we're certainly happy to have them. So with that in mind, our next presenter is Stan Dash, and I'm going to kind of come over here. And since it's his first time presenting, I don't have any fun stories to tell about him, but he's a program director of the CMT Association. He's been doing it for a number of years. He used to work for TradeStation, but he's been doing the CMT thing for a number of years. And I'm excited to see, like I said, I've known him as part of being in the industry for a long time. I don't think that I've ever actually personally talked to him other than kind of getting ready for the event. So it'll be really, really fun to see him today. Stan, let's go ahead and get you started.
Sounds good, Jeff. Thank you very much. I should be able to click on my screen.
You should get right now a message that says share my screen.
Let's see if this is what.
Perfect. Yep, I got it.
Oh,
I see the CMT Association, and I can. It's coming through very good for me.
Okay, excellent. Excellent. Well, thank you, Jeff. Thank you for the introduction. Thank you for the nice words about the CMT Association.
I'm out of your way. I'm going to let you go. It's your turn. Go.
Very good. Very good. I guess I can put my picture up if people want to see it, but I'm not sure that's so thrilling. Maybe it was better off without it. But hopefully you can see those slides that are up there. And I'm going to talk you through a few things, and I want to introduce the CMT Association. First of all, again, thanks to Jeff for that lovely introduction. And of course, no pressure on me after all the nice things he said about my colleague, Tyler Wood. So that brought out the competitive juices in me. So let's see if I can wow you for a little while in this discussion. The CMT Association, we just celebrated our 50th anniversary. The association started off as a group of technical analysts at brokerage houses in Lower Manhattan, when Lower Manhattan was a little bit different than it is now. And a number of the technicians at that time were looking for a greater legitimacy. As compared to the fundamental analysts, they were looking for a way to exchange ideas. And they were also looking for a way to bring technical analysis to the public, and also to create a set of ethics and standards by which technical analysts would do their work, so that we would move away from some of the obfuscation that sometimes went on with technical analysis, but have real standards and ethical practices for how we talk about technical analysis. So that's really the origins of the association. Some of you have been around a while may recall that it was called the Market Technicians Association at one time, the MTA. That name was changed to the CMT Association, and we always seem to be finding acronyms that confuse people from the Metropolitan Transportation Association to Country Music Television. Nonetheless, we're the CMT Association, and we have just celebrated recently our 50th anniversary. As I was saying, the current is a professional association, and really our emphasis all across the board is serving a professional community, having standards for that professional community, credentialing so that people who have that credential are both pledged to the code of ethics, and it also means that they've conquered a body of knowledge in technical analysis. Various members of ours will go on to specialize in different aspects of technical analysis, whether it's quantitative work or trend following or money management or portfolio management. But they have at least qualified by going through a pretty rigorous process that I'll talk a little bit about later in the study of technical analysis. So it's our credentialing is certainly something that is critical to what we do. Education is ongoing education, both for the public and for our members. Ethics, I've talked about a few times, and it is important. It's a critical aspect of what we do. And in fact, when I talk a little bit maybe about the exams a little bit later, we have a series of 3 exams that credential holders must complete. And there are questions on ethics in each one of those exams. So there is no pass on the ethics. And we do take it seriously, and we make sure our candidates take it seriously. And of course, we're all about networking. I mentioned before that was really the origin of the association, to give a place for technical analysts to exchange ideas about current markets. Nobody is, there's a competitive nature in all of us also, and working at different brokerage houses or research firms or money management firms, but to be able to discuss concepts and broad ideas and applications as the industry has progressed. So that's really what the CMT Association is about. This a little bit more of a recap of some of that. I would encourage you, even if you're not a member, not planning to pursue the CMT credential, you might want to take a look at our website. Jeff mentioned cmtassociation.org. There is some of our information is in front of the member wall, so you'll be able to read some of those publications, access some of our knowledge base, see the calendar for global events. Many of those are open to the public. Some things are behind the membership wall. And of course, you would get information for that. Some things, by the way, are behind a sign-in wall, not necessarily membership. So if you're willing to put in your name and an email address, you can get to certain other parts of the website. But you might like poking around in there and finding some things. By the way, as I was preparing for this, I took a look at who the other speakers were during this week-long marathon that Jeff is doing. Reminds me of an old movie. And I noticed that a number of our CMT charter holders are lined up to speak. Some may be coming tomorrow, but Price Heatley is an old friend of mine, and he's a charter holder. Martha Stokes, I believe Martha's from out in Seattle. I don't know if she still lives out there. And Buff Meyer, off the top of my hand, those 3 are CMT charter holders and active members in our association. Maybe some others, and I don't want to slight anyone, but I did notice those names right away of 3 people who are charter holders and people I've come across in my own work over the years. I do want to spend a minute introducing myself. This is probably a little out of sequence. So let me spend a minute introducing myself, and then I'll back up. And the reason I want to do this is not just to, certainly not to impress you, because most of it is just going to mean that I'm old. But to get across the idea that we all come to whatever our career paths are in different ways. I was interested, I logged on to the last speaker, and I was interested in hearing about the accounting aspects of some of what we do. There are many people who come to this from many different directions. I started in Lower Manhattan in 1975 working for E.F. Hutton, and I had no idea what I was walking in to do, but they were willing to give me a check, and the office was very nice. And from there, I actually was in the futures department, in the commodities department, and it just took off from there, my fascination with capital markets and with technical analysis. I've been a member of the association for about 16 years. I earned my charter about 9 years ago. I was a mid-career or late career charter holder. I had been doing technical analysis, writing and speaking on technical analysis, of course, trading with it. And I had a few CMT charter holders who were reporting to me. I was the manager, but I didn't have the charter. So it was kind of a put up or shut up moment for me when I decided, although I had been a member, I decided at that point, I should take the dive, get the charter. Obviously, I was well versed in technical analysis, but I still had to learn the proper terms and the proper application that would fit the body of knowledge to complete the CMT charter, which I went ahead and did. And I'll tell you, even with years of technical analysis experience, it was a challenge. And it should be a challenge. It shouldn't just be a cakewalk. But I assure you, if you do go through it, you will learn quite a bit, even if you're already practicing technical analysis quite a bit. I've done a lot serving at the association. So before I became on the staff, as a member, I was on the ethics committee. I was on the journal editorial board. That's our annual journal that publishes articles about technical analysis. And of course, I was a member volunteer on the committee that oversees the exams and the curriculum before I actually joined the staff, and then had the full responsibility for the curriculum as a staff member. So I mentioned that there were three things. This slide is a little out of sequence. Let me back up. Three things I'll talk about in here, and I appreciate you staying with me and listening for a little bit. A brief definition on what is technical analysis. Most of you probably know, but I always find that in order to discuss something or to communicate something in writing, it's always good to make sure that we have the same vocabulary and that we're using the same definitions, and that makes the learning easier and makes communicating more effective. So we'll spend a few minutes on what is technical analysis, and I want to talk then about three different aspects of technical analysis that are, I was going to use the word basic. They're foundational. They could be very complex, but they're foundational. So I'll talk about those for a few minutes, and they are foundational in technical analysis. They're foundational in the CMT program as well. And then, of course, I'll mention why you might want to consider the CMT program and who it might appeal to. And for some of you, it may not be appropriate, but hopefully what we discuss will be of interest anyway. So we said first thing we do is we would define what technical analysis is. And I want to tell you something that's not on the slide because it's something I was working on just this morning. One of our members is our unofficial historian, and he is just a wealth of information about people and techniques and events in our industry and in technical analysis. And a group of us were chatting a few months ago, and I brought up the question, does anybody know where the name technical analysis came from? And I was sitting with a lot of people whose names you might recognize, a lot of very well-known technicians. We all sort of scratched our head, except our friend George had the idea. So George was nice enough to write a little monograph for us that'll be in our next version of the curriculum on where the name came from. So just to share that with you, I was editing it just this morning is why I'm thinking about it, of course. He went back to the roots of technical. It was roughly in the late 1800s, early 1900s, you began to see it in some of Charles Dow's editorials. Dow, of course, we consider an early proponent of technical analysis. He found it in other newspaper references. And he looked at the definition of the two words, and the word technical refers to jargon, nomenclature, techniques that belong to a specific art or science. The technical aspects of auto repair or technical aspects of the law. Analysis is from the Greek, and it means to break something down into its component parts. So early on, Charles Dow and others were talking about the technical condition of the market, meaning has there been a lot of buying or a lot of selling, what we might talk about overbought and oversold today. And of course, analysis is breaking down that technical condition. So that's where the phrase technical analysis really came from. About 120 or so years ago, it started to really become more prominent in use. And today we talk about the study of price action and market statistics. We're not looking at at balance sheets. We're not looking at income statements or earnings reports. I'm not making believe they don't exist, but I'm just giving you the formal definitions here. So we look at statistics like volume. We're going to look at price and time. We might look at statistics in the futures markets like open interest, commitments of traders from open interest, short interest in stocks. Those are all specific statistics that are related to the markets, reported by the markets, reflected in the markets, and that's all what we would call market action. So that is our focal point as technicians, the study of price action and market statistics to infer price trends and manage risk. If I had to sum it up, that's about as summing as I can be. There are a few other definitions that I put up here. This one's from Perry Kaufman, reflects the same kind of idea, systematic evaluation of price and volume to do price forecasting, trend analysis. From Edwards and McGee, Bassetti was the editor of the most recent issues of Edwards and McGee. The study of the action of the market itself. Can't get much more straightforward than that. I mentioned price, volume, and time. Those are the three core pieces. And everything else in technical analysis is an extension of that. And of course, in these days of much more data available and the speed at which we can transmit data, we also have some other things that we do bring into the picture, such as sentiment and things like that. I always thought this was kind of an interesting way to set your mind when you're trying to absorb what technical analysis is about. A technician is asking what's happening. Obviously, we're going to attempt to forecast what will happen and how to protect ourselves if it doesn't. But a technician's asked what's happening now and not why. I don't care why, I want to know what's happening. Does what is happening give me a clue as to what is going to happen? And again, if it doesn't happen, I have to prepare myself for the negative eventualities. And again, I am being very strict in these definitions, and we realize that there's more outside of that. We could boil it down to the supply and demand for shares or contracts. And that was up there because we draw the distinction between supply and demand for a company's product, supply and demand for oil or iPhones or computer chips. That's the company's products. Instead, we're talking about what's the supply and demand for ownership of the company, or in terms of contracts for ownership of corn or copper or gold or soybeans. That's really the supply and demand we're focused on as technicians, is not the company's products. Again, I'm staying straight and narrow with technical analysis. Now, I'm sure all of you know that, and unfortunately too many people think that a technical analyst is strictly about charts, and there's always the comparison to reading tea leaves and the comparison to doing a chart reading. And I hate those expressions because it does make it sound like hocus pocus. And over the years, as I lectured more and more about technical analysis and how to fight back against that hocus pocus idea, I asked people to stop thinking of the chart as some magic engram that you were trying to interpret. Think of the chart instead as a way you organize data. It's a sampling system. It's graphic. Most of us, human beings are visual. We absorb things visually. I would often say that perhaps if we could smell a chart, my dog would be a good trader. But we take things in visually. So we organize data into a chart. That's how we compress it. As we go forward, and we'll talk about this in a couple of minutes, as we go forward in our technical analysis, that's really a sampling system. So we organize the data into bar charts. You're all familiar with those line charts, candlesticks, of course, and point and figure charts, and there are many other types. I just put those up as a sample. But what I encourage you to do as you work with different charts, especially when you get into a rut, frankly, and we do, is to think about, okay, maybe I need to look at the data differently. It might be the same stock or the same index, the same ETF, the same futures market, but maybe looking at it differently will give me a different view, a different sampling. We look for price patterns. Price patterns are probably some of the oldest parts of technical analysis. Do they still have validity? We can debate it. Many of us have moved on to more algorithmic tools, and I'll talk about that in a minute. But I would not throw away the idea of chart patterns, and it leads right into that next bullet, which says behavioral finance. The classic example is, we buy something, it goes the wrong way, it gets back to the price we paid. Is that what we want to get out? Well, what I just described was resistance. People are buying in a certain area, the market drops, comes back to that area. Everybody says, well, now I got a chance to get out pretty much in one piece. That's resistance. we see that maybe it gets close to that. It gets close to the bottom level, and we start to see things like triangles, flags. So I wouldn't write off the price patterns. There is greater subjectivity to that than there is to things that we can program, but I wouldn't completely discount the idea of price patterns. I mentioned behavioral finance. We are looking at the supply and demand for shares or contracts. We're looking at the flow of people's money and the flow of their emotions. And behavioral finance is a very important part of that, just as I described the resistance area as a chance for people to work their way out of bad position when the market comes back to a certain level. Dow theory, I allude to. The Dow theory, the heart of it these days that I think is most relevant to what I'll call more modern technical analysis is the idea of confirmation. Is more than one thing, is more than one event, more than one tool confirming each other, such that I have greater confidence of my judgment about market direction. And Dow really did a lot of that concept of confirmation, and I think that's the most important point. Now, using MetaStock or other platforms, or with pencil and paper, as we did when I was starting in the business almost 50 years ago, indicators are derived from price and volume, and yes, open interest and other calculations, but indicators are something that's derived from price and volume. The important thing to remember in my mind, and I can't stress this enough, and I tell this to candidates and used to tell this to clients, the indicator only helps you if it gives you a better view on the action. If the indicator is just a replication of the action, well, I don't need the indicator. So the indicator should, in summary, the indicator should cut the noise, and we know there's plenty of noise in markets, and get me to signal. And I don't even necessarily mean just trading signals in a system sense, but the indicator should cut away the noise so I can see the important view of what the market is showing me. And as you use indicators, maybe you create some of your own or experiment with new ones. That's one of the things to ask yourself. Well, that's an interesting indicator, but does it help me see better what direction the market is taking, will take, and where I'm wrong, rather than just looking at the chart itself? And that's an important thing to remember about indicators. They should help you separate noise from signal. Now, there are two other terms I want to describe, and then I'll walk you through, we're doing okay on time. I'll walk you through a few things I mentioned, three specific techniques or ideas from technical analysis. I wanted to define, first of all, this phrase, quantitative analysis. It's got more syllables in it than technical analysis by one or two, so it must be more important. And yes, that was tongue in cheek. Quantitative analysis, of course, is something that's a very popular phrase these days. It goes beyond technical analysis, but where they have met or where it jumps from technical analysis to quantitative analysis, I used to say somewhat jocularly that when they gave technicians computers, that was the birth of quantitative analysis. Because now we could just crunch numbers that we used to do by hand and on pencil and paper. And I can remember when we used to have to buy computer time and put the phone in an audio couple in order just to crank out moving averages. Now they're on our phones, let alone laptops. Quantitative analysis using complex mathematical and statistical modeling, measurement research, assigning a numerical value to variables to replicate reality mathematically. That sounds a lot like technical analysis to me. And yes, the tools have gone a million miles. The data that has gone, the quantity of the data and the accuracy and the ability to crunch it has gone miles. But quantitative analysis is perhaps the extension of what we used to do traditionally in technical analysis. And the other thing I wanted to define was algorithmic trading. So an algorithm, a step-by-step procedure to solve logical and mathematical problems. And I'm just giving you these definitions so we have a common language. And so that as you begin to learn more about technical analysis, some of you are probably very experienced, others of you may be newer, you kind of have a little bit of an organizational structure for for where these pieces fit in and where these buzzwords come from. So an algorithm, step-by-step procedure. Now I break it down, and I'm not going to go any further in this talk past this slide on the subject, but I would break down algorithms into two different categories in this case: order placement and management. So if you work in an institution or you know someone who does, they will often use an algorithm for executing their trades. The portfolio managers have decided they want to buy 250,000 shares of this particular issue. They want to do it over the next 3 days. They want to do it with around something called a VWAP, which is a volume weighted average price. So they want to time slice it. They want to buy no more than this many, but at least that many shares every 45 minutes. Those are all algorithmic order placement and order management methods. The other use of the word algorithm that I have up here is algorithmic decision making, which is something that is more common for those of us as individual traders. Trading systems. I create a set of rules. I can backtest those rules. I can walk forward those rules. I can make adjustments to those rules and make alternative tests out of those rules. And if I'm comfortable with the results and I've done my research properly, I might then put those rules into play. And then if I'm confident that I've done the research well, I better follow those rules. So algorithmic trading can be both of those. And of course, trading systems is something we've been talking about for a number of years. Many years ago, I worked for someone where I said we had to do all those calculations every night. But the person I worked for was a very strict, very disciplined money manager, very successful. And the trading was absolutely algorithmic, meaning there was a formula. We made calculations, orders were entered based on those, positions taken, and risk managed, all based on those calculations, well before we had personal computers. And then, so I'm dividing that algorithmic phrase between order placement and order management and decision making. I hope that helps as you delve more into the world of technical analysis, and as some people will try and throw buzzwords by you. So now, let me talk about three different specific aspects of technical analysis. I picked these three because I said in the beginning of my talk, they're foundational. They're certainly in the CMT program. They're prominent in the CMT program, and they're prominent for anyone who's doing technical analysis, at least as it relates to the style of work that they do. So the three things I wanted to talk about are relative strength, breadth, and divergence. Now, when we talk about I'll talk about this in a minute. I alluded to divergence before when we talked about Dow theory, but let me dig into those three ideas. There are just a few charts for each one of these, so we get some general idea of what I'm talking about, and I'll give you a few definitions. And then begin to think, if you don't look at these at all or use these at all in your work, think about how you might incorporate some of these. Here we go. So here's a definition of relative strength. You'll see it's from Martin Pring. He's a pretty prominent author and money manager. You may have heard Martin speak or know him. Relative strength is oh, by the way, very important, I'm sorry. This is not the relative strength index. This is not RSI. It's a very confusing, unfortunate nomenclature. RSI is different. Relative strength index is different than this. This is called relative strength. It involves two symbols, two securities, two indexes, two markets. That's much different than RSI. So I want to be very careful. Relative strength is a technical concept that measures the relationship between two securities. One security is divided by another. RS can be used to better understand an intermarket relationship. It's as simple as that. There are some other ways to calculate it. I'm going to talk about this ratio method in just a moment. We'll look at a chart or two. I think we have one or two in here. But I want to get across the idea that relative strength, the relationship between two securities. Now, how is this commonly used? And here is where you should think about how you can use it if you don't now. It's often used for, let's say, two securities, just as Martin's definition says here. The classic Coke and Pepsi. Which one is leading and which one is lagging? I'll show you how we can see that at a glance. It's often used for two indexes. So, and I think that's the example I have up here, two indexes. So I can see which, presumably the indexes represent different sectors, or the indexes represent different countries or different capitalization sectors, different factors of other kinds. Sometimes it's used for a security and the index it's from, or the sector it's from. So I might look at a sector and I might see, well, there's great strength in this sector. Here are the 10 biggest components in that sector. How do they compare to the ETF or the index? And then I may be able to say, well, this one's the leader in that ETF, and this one's really lagging. So even though the ETF or the sector may be doing well, I want to find out which ones of the 10 or 12 or however many may be in there are strongest, so they're having the greatest impact on that ETF or that sector, and which ones are lagging behind. That's commonly how relative strength is used. So we do have a chart in here. By the way, these charts were made a while back. They are not current. I apologize for that, but we had to do a little quick switch when I was coming on, and I had these charts all set up from a talk a while back that Jeff helped me with. So they are older, but the concepts are applicable. So in this case, you'll see two price charts. The one on top is a conventional bar. The one on the bottom is a candlestick. That doesn't matter. The one on top is the S&P growth. The one on bottom is S&P value. So it's growth versus value. Now, when we look at the two, which one is stronger and which one is weaker? That's rhetorical at the moment, but that's what you're looking for when you look at it. Should I be leaning into growth or should I be leaning into value? That's the simple question that this is proposing. And it can be hard to tell. I don't even know. They're not scaled exactly the same. So if we were very careful in making the chart, we could scale them exactly the same, and maybe that would help. We could do some other math on it. Maybe that would help. The simplest way I alluded to before is the ratio, and that was what was in Martin Pring's definition. That's the most common way. What if I divide the price of one by the price of the other? If I do that, I can get a simple ratio. Now, the ratio itself doesn't mean anything. But the direction of the ratio, the trend of the ratio, the technical analysis we do on the ratio itself can be very useful. So here's the same chart. In this case, they're both bars, but it doesn't matter. You have growth on top and value on the bottom. And in that last pane along the bottom, you'll see the ratio line. Now we know that if that ratio line is rising, then the numerator is stronger than the denominator. And that's the way they're lined up here. And again, it's not the current market, so it doesn't really matter for anything at the moment. But we can see here that growth was certainly stronger than value throughout this whole period. Some hesitation in there, reverse some, and then again, there's a distinct trend. We can do technical analysis on the relative strength ratio line. But that is the simplest way to compare, again, two indexes, two securities, a security to its index or ETF. And we do see that these ratio lines tend to trend, and they get choppy like any other markets, but they can be technically analyzed like any market. In fact, one of the things I like to do is to put a moving average on a relative strength ratio line and smooth it out somewhat. And you can look for crossovers. Yes, you can do all that technical analysis. You can draw trend lines, but it's really an excellent way to get a view on the trend of relative strength between two markets. We're always talking about sector rotation. We're always talking about growth and value. We're always talking about big cap, small cap. Certainly those big cap, small cap has been quite a topic of discussion, and we've seen a lot of change in that more recently with the Russell. Even the composite's been holding up better, but the Russell's had its moments, and then the industrials or the S&P. Any of those simple ratio. Just a reminder, if you're going to look at these, the number in the ratio, I don't know if you see the pointer, it doesn't really matter, but in that lower pane on the right, the number of the ratio doesn't really matter. You're really looking for the trend, and you're looking for patterns, trend in the ratio. That's what's giving you a clue as to relative strength. Now let's take a look at another idea, something called breadth, and that's breadth with a D. One of the issues that we face in analyzing indices, breadth is really for stock traders, by the way. So if you are strictly a futures trader, let me rephrase that. If you are trading index futures, which are, of course, are a stock market derivative, you're going to want to, this is a value to you. If you're trading futures as in gold, copper, soybeans, and cattle, this doesn't have, it's not applicable. So the challenge here is I look at an index, I look at an S&P 500, I look at a Russell 2000, I look at the Dow, it's only 30 issues, but I look at the Dow. I see it's up or I see it's down, but what are the issues? What is it that the issues inside the index are doing? The Dow's obviously narrower. We have different weighting schemes for the indices, but I need to say, well, we have a strong index, but how many of the stocks are actually rising and how many are falling? That's the concept of breadth. Broadly, by the way, that idea is called market internals. And that's the clue that you're looking inside the market. You're looking inside the index to what is going on. What is making the index go up or down? Some people would say that the concept of breadth is telling me, well, the market may be up, but if most of the issues are down in that particular day or whatever the period is, then that's telling me that a relatively small number of issues are up a lot and are pulling the index up. But there's a lot out there that's not being followed or not being trusted or not gathering capital. Breadth measures the imbalance between advancing and declining stocks. A net increase in the index, whatever that index is, S&P or Russell, while more issues are declining should generate concern that the upwards move is poorly supported. That quote is from Perry Kaufman, but it fit in very well with the general concept of what breadth is all about. And if you are one who is trying to get a higher altitude view, sometimes money managers call it a top-down view, and I'm looking at different indexes or different countries or different factor indexes or ETFs, then I may want to look at breadth to say, well, I've got a bull market in that area, but the index, the breadth is not supporting it. So can it be trusted? There's an old stock market koan, if you will, that says, is it a stock market or a market of stocks? We get so absorbed with indexes that we forget that the index is really a calculation from the stocks. And that's really what breadth is meant to give us. Market internals are meant to give us a view on what is happening inside that index. This is an older chart as well, but it had kind of cool stuff on it. So I kept it in there, and I thank Jeff for all his help with these. So this is a Russell, it's IWM, so it's the Russell ETF. It's an old chart. Don't even try and grab anything now about what the market might be doing. Clearly go back and take a look at your own charts for the current market, and you'll take a look. So on the bottom is the advanced decline line. It's not smooth, it's not averaged, and that again is something we can do. We can do technical analysis on the advanced decline, just as we do technical analysis on a ratio line, relative strength ratio. But you can kind of get some idea of technical analysis here. So here we have a flattish, slightly rising market. I'm just going to point some things out in here. Just bear with me. And you'll see that there was something of a support level laid out here. It's not an exact point that would have nudged under it, but just get the general idea. But you certainly saw a dramatic fall in here. Well, this lines up with roughly these candles. This candle is not exactly lined up with it. So somewhere in here, yes, you certainly saw it in the price action. And remember, we trade price. We don't trade advanced declines. But once you had this break, was it going to go further? Well, look how hard you were breaking, and you broke a support area and really left the top in the advanced decline. Now let's counter that. Most of you will look at this, and right away, if you've done any technical analysis, your brain should be thinking head and shoulders. It's a lovely head and shoulders bottom in the advanced decline. Was the signal a little late? Well, the signal was over here. It's not terrible, but it's giving me confidence, perhaps, that this bottom is really going to be a V bottom, and it's really going to have follow through to that V bottom. Here you'll see we set up support lines again. It held the support lines and it took off. The head scratcher, look how flat this was with rising advanced decline line. Now, the advanced decline line still made highs, but your equity, the value of your account is not based on this, it's based on this. You also see that there are a lot of dojis or very small body candles in here. So you might be thinking, well, this is telling me we're still bullish, but I'm not getting any satisfaction here. We're looking at these in isolation. Of course, we looked at the relative strength line in isolation. We're looking at this in isolation. There's nothing else on the chart to give us rounded perspective. And as I think Jeff alluded to before, we always want to look at more than one thing at a time. But it's a cautionary point. What happened following this is different. It doesn't matter. You even had a new high here. So you might have stayed with your positions in here as long as you had a good advanced decline line. You weren't getting much satisfaction, but you weren't getting hurt. That's the concept of breadth. I encourage you to take a look at it. One of the reasons that it's hard to use on the Dow Jones Industrial Average is the fact that there are only 30 issues. So it's pretty easy for breadth to max because you could have a plus 30 or a minus 30 on any given day. A lot harder for it to max in an S&P 500 or certainly in a Russell or even in a NASDAQ 100 or the NASDAQ composite. But I encourage you to take a look at some of these if you're trying to get greater insight and perspective into what is making that particular index tick. And I said the third thing we would talk about was divergence analysis. And this kind of brings home, I think, some of the things I've spoken about already. So hopefully it kind of brings this together a little bit. Charles Dow wrote about divergence. He was very about indexes. He was not looking at indicators per se. He was looking at indexes. He was doing economic analysis. And actually, when Charles Dow was originally doing his work, he wasn't so much trying to call the market. He was trying to call the economy. And that's why he began with industrial indexes and railroads, because that's what made the economy go in the 1890s and the early 1900s. But he had a very interesting concept of divergence analysis. If it's all in gear, then new highs should be made across the board at the same time. I don't mean every stock, I don't mean every issue, every market, but there should be confirmation, there should be correlation in strong markets if the market is going to be strong. So we apply that concept of divergence analysis to indicators. Now, I mentioned earlier that the whole point of an indicator, whether we're going to talk about MACD, we're going to talk about RSI, stochastics, we can talk about moving averages, 100 other tools. The whole point is that a calculation made from price, volume, breadth, and it's supposed to help me identify important market action and separate signal from noise. That's the whole point. And again, if you're in a rut, and it happens to all of us, and you're not, if you're just not seeing it, then take a different look at the market, take a different look at a chart, construct the chart differently, take a look at a different indicator. Doesn't mean you have to give up the work that you do, but sometimes we get so involved in the noise that we forget we're trying to ignore the noise, but identify the critical signal points, the points that are actually meaningful in the market action. So that's the definition of an indicator, and divergence analysis should be this simple. And this is also a rut breaker, if you will. The technical analysis said, is this indicator doing me any good? Is this indicator telling me something about the price action? And at its core, it should confirm the price action. And if it's not, then I have to be suspect. If the indicator is any good, I have to be suspect about the price action. Because if the indicator is not confirming the price action, but the price still keeps going, then the indicator is getting distracted by noise or distracted by something that's not confirming for me. So as long as I have an indicator in which I have some confidence, is the indicator confirming the price action? That's really what the key is in divergence. Now, this was a great chart that Jeff helped me with. And it's got so much fun in it. I couldn't resist it. This is also older. It's from a while back when we did a different presentation. So don't get carried away. But the chart on the top is Bitcoin. And on the bottom is the relative strength index, is RSI. So it's not relative strength ratio. It's not two different markets. It's a relative strength index. It's Wells Wilder's RSI, relative strength index. I believe we left it at a 14-bar default. And I don't recall off the top of my head, but I'm pretty sure we just left it at 14, which was Wilder's default. Now, this is an example of divergence. This was a big bull run in Bitcoin. But notice how RSI was not making new highs when Bitcoin was making new highs. I mean, this is just a lovely example. Now, on this high, let me point out a couple of things. Put our trader hats on, that's why we're here. So now I've got this high, and it starts to back off, and I see just, a day or two later, it may not be exactly lined up, that this has peaked and turned over. And I have to start to think to myself, well, is it over? I've got a really broad divergence here. Maybe this is over. Well, again, we're not looking at any other tools on here. We're looking only at this one so I can make the academic point, but presumably I'm also looking at other tools that would help me identify the trend or the pace of the trend. Whether they're open interest tools if it was futures, or whether they're breadth tools if it's an index, or simple moving averages. But what I wanted you to notice that once this first divergence happened, yes, there were new highs. But notice how the pace slowed dramatically. The new highs were by much smaller penetrations than this other run in here. Now, this may not be a point at which you say, well, I'm out, but it may be a point at which you say, I lighten up. It might also be a point at which you say, I'm not going to add anymore. At the very least, I'm going to just sit as long as it's within my risk parameters, wherever my stops or other exit rules might be. Well, then I have another one. And then finally, I have another one. Now, at some point, if I'm looking at divergences, I've got to be thinking this trend is really running out of gas. Again, the trend may not have ended. What do my other tools say? Is it cautionary on adding or reducing the position? And that's, I think, the way that you should look at it. Once we had this final break, of course, we went into a nice bear run, but what did we get then? Now we got a bullish divergence. Now we have a low made in Bitcoin, another low made. These are dailies. So they're, call them a month or 6 weeks apart. I'm not counting the exact bars. So here's another low, but now look how much better we're doing on momentum, and look at this bullish divergence. Again, I don't necessarily jump in and buy a full position here. Maybe I begin to peck away. Maybe if I was short, maybe I'm out already because of this. But if I'm short, maybe this is the time to start to bring some back in. And probably if you look at this, you can see some others. I can see right here, we didn't mark it. Right here, there's a divergence. We made new highs, it diverged. And actually that was pretty meaningful as well. And I'm sure you can see others as you look on here. Divergence is generally going to be applied to oscillator type of tools. That's what RSI is. So you might look at for RSI, stochastics, even on breadth, on balance volume, those kinds of tools. You certainly are going to want to look for confirmation. And the opposite of confirmation is divergence. We see that the market is not, the indicator is not confirming the price action. That was the way I described it here. Does the indicator confirm the price action? That's the question to ask when these events occur like this. So we talked about three areas of technical analysis that are really foundational. They're used differently in different markets. Breadth does not apply to, for instance, agricultural markets. But you can use breadth analysis if you're trading ES futures, you certainly can be using S&P 500 breadth and doing analysis there. And you might find that insightful as the S&P moves to see how many of its components are driving that train. But in terms of the CMT program, these are integral to the program. We do a lot on this. I had quotes in here from Edwards and McGee and from Pring and from Kaufman, whose work is either in the program or referenced in the program. And I hope you will begin to look at these. And I will talk to you for a couple of minutes about the program, and I want you to consider it. Now, the CMT Association is a professional association. Anyone could theoretically take the exams, but in order to earn the CMT charter, you have to be considered a professional. You have to be working in finance, have 3 years of experience in finance. If you have a year of experience in finance, it'll take you some time to go through the exams, and you may have the 3 years by the time you finish them. If you have questions on these, you can call us or you can send us an email. The best place to email is admin@cmtassociation.org. I'll probably have that up at the end. But it's really not for the individual trader because it is considered a professional credential. It's not that we don't want you necessarily to participate in the association, and you could do that. But again, it is a professional designation in that sense. The exams are offered twice each year, June and December. We're coming up quickly on the December exams, and then it'll be next June. There are 3 exams. They must be taken in sequence. You cannot take the second until you pass the first, and the third until you pass the second. And you can only take 1 at each administration. So even if you've been doing this a long time and you think you can knock off 2 at one time, we don't allow for that. It's not possible the way the exams are administered. I went through the 3 of them, obviously like anybody else, in sequence. I had to miss one because of a family commitment. So it took me more like 2 years instead of 18 months to get through it. Figure roughly 100 hours of study for each level. A little less for level 1, especially if you have experience, maybe a little more for level 3. It is challenging. I just went through those bullet points about only 1 level per administration. And I think the last thing I would leave you with, we are very practically focused. Yes, we are asking our candidates to earn the charter. They must show a mastery of a wide set of information. There are many candidates who will come out of our program, earn the charter, and only focus in one area. I kind of make it akin to medical school. You've got to have a very broad education in medical school, and then when you come out, you specialize, and probably there are probably many things that your dermatologist may not remember about his cardiology rotation. But you have that fluency and that breadth of knowledge that employers are looking for. We also have many people like me who have been practicing technical analysis for a long time and now want to certify themselves with that credential, both as a calling card and as a rounding of the knowledge in technical analysis. So you might be interested in that, and we would welcome for you to find out more about it. If you are a CFA charter holder, I don't know if anyone out there is, but if you are a CFA charter holder, you can waive sitting for the level 1 exam. Now, being that the knowledge is sequential, you have to pretty much have the level 1 knowledge, but you don't have to sit for the exam. Part of the reason for that is that CFA has some technical analysis basics in it, and we also use the CFA's code of ethics. So we know we're dealing with a CFA charter holder in good standing, is already experienced in markets, not TA necessarily, but in markets, and is also experienced as a professional complying with the code of ethics. We can give you more information about that on our website as well. Oops. There's the email address if you want to find out more about the program. I would not encourage anyone to take any December exams. They're just a few weeks away, and even an experienced technical analyst has to go over definitions, formulas, and make sure they're up to speed and ready for exams. But you're welcome to inquire about it to that email address or that phone number, and we'll be glad to give you more information about that. The one other thing I would ask you to do is when you meet technicians, ask them if they're charter holders. I mentioned a few right away who are charter holders who are participating in MetaStock's event. I mentioned Price and Martha and Buff. I think Buff is speaking tomorrow offhand, but Buff contributed to our curriculum. He wrote some specialized chapters for us on volume. And in fact, I'm going to get in touch with Price to see if he'd like to. It's going to take about 5 years.
Tell him hi. We love him. Martha's also speaking tomorrow.
Yes, I did. I didn't know when Martha was speaking, but I did see her name go by. And I haven't seen Martha in a number of years either. I did a presentation with her out in Seattle many years ago.
Yeah, she makes. She's also.
Jeff, I know you're giving me the hook, and that's fine. We're right on time.
Oh no, you're totally fine. I wanted to share a couple thoughts with you that we have out of the chat.
Sure.
Couple comments just coming through here. Not a lot of questions. If you have questions for Stan, let us know. Neil said, "Hey Stan, long time no see." But here's what I really wanted to share with you. Bill wanted to know Stanley was one of my favorite technical analysis trainers when he was teaching trading many, many years ago. Always presents things so clearly and with a nice sense of humor. And I read that and went, ah. So I wanted to share with you.
Thank you. Who was that from?
That was from Bill Wong in YouTube.
Oh, yes, of course. Of course.
Neil H. then said, likewise. So anyway, that's all we had in terms of comments. So, but
okay. So
it was a good
question somebody asked about Ralph, and yes, Ralph is still active. Yeah. Ralph is still active. Ralph is our is certainly a mentor to all of us. One of the founders of the association, and one of the truly nice people in the world. And Ralph is still around, and I saw him just a few months ago in New York.
Cool. Very cool. All right. I'm typing the phone numbers frantically as we go. Stan, that was great. I appreciate you coming in, spending some time with us.
Of course. Thank you, Jim.
Have a great weekend, okay?
Thank you. Thank you very much. Thanks, everyone.
All right. And yeah, cmtassociation.org for that. Let me go ahead and we'll just wrap up here. And we're going to thank all of the sponsors, in fact. So let me go ahead and make me the presenter here. I'll go ahead and show my screen. Of course, CMT Association, they just talked. Great organization. Very happy that they're sponsoring the events. Also, I know I don't have the slides unhidden, but we want to thank AAII and Stocks and Commodities magazine for sponsoring the event as well. They do a really, really good job. I'm not sure if John Murphy is active or not. I haven't heard much from him recently, Ross, and unfortunately, I don't know. Of course, we're MetaStock. Oh, yeah, let's talk about tomorrow, just real quick.
Hey, Jeff, just FYI, in case you were wanting your camera to be on, it is not on.
Oh, right here. We should do that. Okay, so one more day, guys. Some more good lessons, some more great presenters. So tomorrow morning, we're going to kick off with Tushar Shandy, and he's going to talk about seizing market volatility. He always does such a good job. Then we're going to kick over to Barry Burns. After that, we're going to have Tony Hansen in here, as well as Buff Dormeyer, Rick Sadler, Norman Hallett, and then we've made room for Martha Stokes since she wasn't really able to make it earlier in the week due to, well, we blame the Comcast Corporation. So in any case, though, we will see you tomorrow. It was great. Thanks for coming. Thanks to all the presenters, the sponsors, everybody. See you in the morning, guys.
Hi, Kelly Clement here from MetaStock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.